Hey, everybody. It's good to see you. My name is Jeff Gibby. I'm going to kick us off today. I hope you're doing well. It's good to see you. Thanks for coming. We have a week full of really, really good speakers. I'll be kind of emceeing the whole thing. Happy Cinco de Mayo. Let's go ahead and get started. I want to start by reading our legal disclaimer because I have to. Today's demonstration is designed to instruct you on using MetaStock and the accompanying software plugins. It's not a recommendation to buy or sell, but rather guidelines to interpreting and using specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading. MetaStock and its employees do not have any liability for any investment decisions based on the use of the software, any trading strategies, or any information provided in connection with the company. MetaStock and its employees do not endorse purchase of a security, nor are they paid for the promotion of a security. No information contained in the presentation should be construed as investment advice or the solicitation to buy a security. So anyway, hope you got that. I do want to welcome you to the event today. These events that we do are great. I really, really enjoy them. I'm glad you came. I'm glad you're participating. If you have questions as you go and you're joining us in YouTube, make sure to type them in the YouTube chat. Otherwise, make sure to answer the question, ask the questions here in GoToWebinar. Both of them are going to be on the right-hand side of your screen. So do want to say real quick, we have a couple sponsors I want to talk about. CMT Association is a very well-respected, well-reputed organization. They've been kind of a nonprofit. They've been doing it for a long time. CMTassociation.org. They're an accreditation company and a very, very well-respected one. So also want to thank Stocks and Commodities Magazine. You can find out more about Stocks and Commodities Magazine at www.traders.com. They've sponsored all of our events. Great magazine. They've actually sponsored all of our events since we started doing them 10 or 11 years ago. You can find more about them at traders.com. I want you to invite you to join our online traders forum. You can find that at thetradersforum.com. There's free market chat. You can chat with other traders, learn about markets. It's all about technical analysis and looking at stocks and stocks that might be interesting. It doesn't cost anything. I invite you to come. www.thetradersforum.com. Last but not least, MetaStock. MetaStock's been rated the best software to help you do technical analysis and analyze, find the opportunities in the market. It's won that award for 32 years in a row. We are doing an extended trial where you can try out a month. You'll get the second and third month for free. You can find out that. And we'll be talking about MetaStock all week. metastock.com/conf-promo. So without further ado, I want to introduce our first guest today. Our first guest today is Daniel Sinnig. Daniel has been a partner of MetaStock for a number of years, a very, very talented system designer. I love kind of the auto optimization that he does in the indicators, and he does a really, really good job. So Daniel, let's go ahead and get you started. How are you doing today?
Hey guys, hey Jeffrey, it's doing great, yeah. A great, exciting week ahead of us. Now we're going to talk about this. We're going to talk about what happened last week and how this may affect this week. So exciting things are going to happen. I predict this so far, and it's going to be interesting to see where the markets will be heading. So I'm going to go ahead and share my screen. Actually going to enable my camera too, so I can give a personal hello to everyone. Hey guys, how's it going? Greeting you today is from beautiful Brazil. I came down here about a week ago to soak in some sun. We're based out of Montreal. As you can imagine, not as sunny over there, especially in the colder months. But yeah, in Brazil right now, heading to Germany next for a traders conference, and then back to our headquarters in Montreal. Okay, so I'm going to go ahead and share my screen. Let's go ahead with this. There we go. And Jeffrey, please confirm that my screen is indeed now visible to everyone.
We can see it. It looks great.
Perfect. Okay, cool. Yeah,
everything looks good. It's yours.
Perfect. Yeah. What a timely theme for this conference, huh? Thriving in uncertain markets, and exactly this is what we're experiencing right now. And I would even go so far as to say, hey, we are at a tipping point right now, at least for the major indices. We are facing a crucial area of resistance, and we're going to talk about this, and we're going to see how the markets will react to this area. Should we break it? I think then we have blue skies ahead towards all-time highs. If not, should there be a bounce, well, then we're back in the soup, as one may say, and we may see another leg further down. But before we get into all this, a couple of things to ease into this topic. So first off, I should say the title of my presentation is SuperTrend on Steroids, Auto-Optimizing Trend Trading. Okay, this may sound complicated. In fact, it's also a bit of complicated behind the scenes, but for you as a trader, as you will see, this actually is something which will make your trading life much easier. So the complicated stuff is all done by an indicator, which we have designed, which is our SuperTrend on Steroids indicator. And it will do all the heavy lifting for you. And thanks to its auto-optimization engine behind the scenes, it will give you entry signals and exit signals, which are always tuned into the current market conditions. So what this is all about, we're gonna see or discover together today. All right, now, one more thing before we get into it. This is a famous quote by Winston Churchill: never let a good crisis go to waste. Well, this applied back in the day to something else than trading. But of course, it is also applicable to the world of trading. And what does it mean? Well, with every correction, with every bear market, with uncertain times, there's always also opportunity there. And it's just a matter of where can we find these opportunities. And in fact, using tools like MetaStock and the scanner in MetaStock is one of the easiest ways and the most efficient ways to find the little gems hidden in the markets, which will be available in every crisis and every bear market. How this works, we're going to discover today in this presentation. Now, as Jeffrey mentioned, I come on to these MetaStock events quite often. And in fact, the last time I was here was only 2 weeks ago. And back then, this was for the Australian event of the MetaStock conference. And back then, I called out a trade. I called out a long trade of Arthur J. Gallagher, one of our favorite stocks to trade, ticker symbol AJG, entry around 319 with a target. Or this is reversed here, target around 375 and the stop was at 295. Now, this was the setup we saw, and I looked at the markets today, and this is where we ended up. So you can see here, prices actually jumped up nicely, exactly as predicted by our indicator, and we're in good shape towards, hopefully, our projected target of 375. So this seems to be working out great. The trade is still open, but at least we are moving in the right direction. Now, today, I'm going to do something very similar. I will call out another trade of the day. And this is this one here. This is a long trade of McDonald's Corporation, ticker symbol MCD. Of course, it's in the S&P 500 in the consumer discretionary sector. And also here, I'm calling out a long trade, going basically long at current market levels. Let me zoom in a little bit. So around 311 with a stop loss just below the swing low here at 290 and a target of 360. And there's a particular reason why I picked this trade. Let me quickly give you the cliff notes, and then we're gonna learn in this presentation how all of us can find these kind of trades using MetaStock, for example. So first off, McDonald's, you can't really see it on this little snippet, but it's a long-term uptrending stock. So it's been going up for quite a while, for multiple years. So that's factor number one. That's good because we always want to trade with the trend, not against it. Perfect. Secondly, our indicator SuperTrend, we call it SuperTrend Bullseye, gave us a long entry signal, and our statistics that come with the indicator told us, hey, historically speaking, the profit factor of the entry signals of that indicator on the daily time frame is 2.13. That's a really good profit factor, meaning the signals have been working out very nicely for the symbol for McDonald's on the daily time frame. That was factor number two. And now factor number three is our trend radar indicator. We're going to discuss all these in this presentation, shows us what we call a healthy pullback. So what does that mean? What does this mean? Well, every trend, there's no trend out there which goes up in a straight line. Trends will take a pause every once in a while. We call this pullbacks. Now, these pullbacks, these can be great opportunities to re-enter into a trend at a better price and with less risk on the table. And this is exactly the third factor which came in here, which made me pick this particular stock as my trade of the day. So long trade McDonald's Corp with these targets and stop losses. Now, what we're going to do in this presentation is that I'm going to show you how I picked this stock and why exactly I picked this stock as my trade of the day. So please stay tuned for this. And best of all, at the end of this presentation, you will see that the steps are actually quite simple, and everyone here will be able to replicate these steps as we proceed. Okay, but we have to build up to it. Now, first off, I probably should introduce myself properly. So my name is Daniel Sinnig. Thanks, Jeffrey, for giving a short introduction, but perhaps a bit more background of about who I am and where I come from. So first off, unlike most trading educators, I actually didn't start off in the world of trading. In fact, for the longest time of my professional career, I always wanted to become a professor in software engineering. So I went through all the levels. So I did my master's, my PhD, a postdoc. I started teaching at various universities in and around Montreal, but also in Germany, where I'm originally from. But you know what? During all these years, I was fascinated, or always fascinated also by the world of trading and finance and the markets. So I started trading on the side. But as you start off, you tend to make all kinds of mistakes. You overtrade, you revenge trade, you take too much risk, you trade when market conditions are not right. And also these mistakes, unfortunately, were made by me as well. And after donating quite a bit of money to the markets, I came to the hard realization, oh boy, trading is not as straightforward as I thought, and I need help. And for me, as a software engineer, needing help meant I need better tools, better indicators, which will help me make better trading decisions. So I rolled up my sleeves and I started coding. And the very first indicators which I've ever written were only meant for my own purpose. But once I realized, hey, these indicators, they actually do make a difference in my trading. They actually do help me make better trading decisions. Then we thought, hey, perhaps others can benefit from these indicators as well. So this is really where the story behind tradingindicators.com, our company, started. Now, over the years, we've been out there for over 10 years now, we have built almost 1,000 trading indicators for clients all over the world, servicing various trading platforms, of course, including MetaStock, but other ones as well, like TradingView, NinjaTrader, and so forth. All right, so this is who I am, but now let's see how I picked those trade of the day, or this trade of the day. But a quick reminder, of course, before we get started, keep in mind that trading does contain substantial risk and therefore is not suited for every investor. If you trade, make sure to only use risk capital, which is money that you actually can afford to lose. When it comes to backtest performance or hypothetical performance, or really anything based on historical data, keep in mind that this is not necessarily indicative of future performance, and any trade ideas and strategies discussed in this webinar should not be construed as trade advice. These are for educational purposes only. All right, so with this out of the way, let's get into it. And I want to start with an overview of what's going on right now in the markets, because I told you at the very beginning, we are perhaps at a tipping point, at a decision point, at a crossroads, so to say. Why is that? So let me go over or switch over to MetaStock. Just a second. If I can find it, there we go. Dragging MetaStock into my window here. And let's start with the SPY. So this here is a daily chart of the SPY symbol, basically the S&P 500 ETF. Okay, so what do we see? And I'm going to use my little annotation tool. Well, first off, of course, and we know this already. There we go. It's a little thin. I'm going to make this a bit bigger. In fact, I probably should use a horizontal line. Let me quickly take this off again just to make this a little bit clearer. There we go, this one here. Okay, so we broke resistance, and we know this already, back in March, beginning of March. Prices broke below resistance. You can see the price, this used to be support, became resistance when broken, but this is an important level in which was respected by price in the past. So this was broken. This was broken in March to the downside. You can see the prices went down, but guess what happens then? It went back up because once support, I should say support was broken, sorry. The support was broken, it broke, prices went below, and then they came up again. Why? And they came up exactly to this broken level. Why is that? Because support, once broken, changes rules. Support becomes resistance. This is why I said in the beginning. So And prices then dropped off from this resistance level all the way down here. Yeah? Then prices are recovering, but guess what? What level are they approaching now? Look at this one here, exactly the very same level, which acted as resistance previously. And I submit that, hey, should we get a bit closer to this level, we may see another bounce off this level to the downside. This is definitely in the cards. So a bounce is in the cards. However, should we break this level, then I think we do have clear skies ahead to the upside and an attempt at the all-time highs here at around 613, 615 will be in the cards. But this level is crucial, and it's going to be very exciting to see how price will react once it approaches this level. So super exciting here on the SPY. I do believe this is going to be a very important price level that we need to observe. On the QQQs, it's very similar. Also here, of course, the QQQs, they do follow to some degree. They're a bit more volatile, but they do follow to some degree the SPY throughout. Also here, let me just draw this in right here. This is also a known resistance level. You see how price broke off the support level, then it was completely broken. Support becomes resistance, and now once again, prices are approaching this resistance level, and it's the same setup. It's going to be very interesting to see how prices will react to this level. Will we see a bounce, which is definitely in the cards? If we do, it might be a substantial bounce, or if we break it, I think an attempt at the all-time highs will be in the cards. Very similar situation here on the QQQs. All right, moving on. Gold. Gold is very interesting, and here we're going to have the GLD. It's a bit hard to see, but it's the. Let me just zoom in a little. It's the gold spider ETF, and I apologize for the faded out price bars here. But what do we see here? Well, gold made an all-time high. Of course it did. It made so many all-time highs in the last couple of weeks and months. So we made an all-time high about 2 weeks ago, but then prices pulled back. And it's a bit hard to see, but prices did pull back all the way to this level. And what's interesting, I want you to keep an eye on this, is what do we see down here? So this is our trend radar indicator. I applied here to this chart. We can see that, of course, the last line here, this is our long-term trend. That's always green. Of course, gold has been going up forever. Long-term trend is green. But now we are having this little red patch in here. And we had these red patches before, here and here and here, bigger one, and here, and so forth. And every single time, at least in gold, whenever we had this red patch, it quickly reversed into an all green area again. See it here and here and here, meaning that every pullback that we had in gold was quickly bought up and reversed back into the direction of the overarching trend, which is an uptrend in this case. So I thought this was super interesting because we had this pullback, and if you're interested in getting long gold, perhaps this could be, for the first time in a while, an opportunity to go long gold, because you don't want to buy it up here when everything's overextended. So I found this very, very exciting to see this pullback in gold. Of course, today, this is the live data here. We opened, we gapped open a little bit, and maybe it's already a bit too late, but this was at least before we opened on Friday, a very interesting long opportunity in gold. Two other quick symbols, and we're going to get to our indicator. The United States Oil Fund, so oil in general, this is just the proxy for oil. It's been sideways for a long time. You can see it here. Oil has been in this long-term sideways consolidation around this level here and around this level up here. And every time, if you zoom even a bit further out, you can see it goes even a bit further down to this side. So basically, yeah, maybe around this level. And every time we approached an extreme, either the upper area, you can see how prices bounced off from this, or the lower areas in gold. Where is my scroll bar? Oh, there we go. We bounced off from it. And now, once again, oil is at this level here where it approaches once again this lower extreme. And the question now is, will we see yet another bounce in oil? Well, it's definitely in the cards. If, however, we break this level, I think then we have the abyss below, and oil could go much, much lower. It's also going to be very interesting to see how oil will react to this level. And one last symbol we have, it's BTC, the Bitcoin symbol here. So Bitcoin has had a major correction. We can see it here. Price has been all the way up to an all-time high here on 110,000. Then it corrected down all the way down to the 75,000 area. That's a huge correction. Yeah, but it bounced off nicely from this level. This was also a breakout level from here, and prices have recovered. And now we're trading back in the 90,000 area. And what was also cool to see is that this flag pattern here, this was a bull flag, was broken. This was broken to the upside. Of course, prices now retraced a little bit to the downside, but I think overall we are in decent shape in Bitcoin, perhaps to see another attempt at the all-time highs. Sorry, at 108,000 or around that area. So that was my market overview. Now, but of course, this is just a generic overview just by looking at the charts. Let's see how our indicators, or how indicators in general, could help us to find interesting opportunities, what we could trade right now, this second in the market. So for this, I'm going to quickly go back to my slides. There we go. And as a reminder, this is our mission for today. I want to show you how I picked this long trade as my trade of today, the long trade with the McDonald's stock here. So how did I pick this trade? Well, to understand this, we have to back up a little bit, and we have to talk about one of the classic indicators out there, probably one of the most well-known indicators. It's called SuperTrend. So the original SuperTrend indicator was developed by a guy called Olivier Seban. It was a French trader. He even wrote a book about this topic. And ever since, it has become one of the most influential trend trading indicators out there. It's built into most trading platforms like TradingView, MetaStock, NinjaTrader, and so forth. It's available. That's available for most platforms. And it specializes on the early detection of trend reversals. And that was quite unique back then. Yeah, most people who are trend traders, this indicator specialized on the early signs that, hey, an uptrend may come to an end, for example, and reverse to the downside. And what was also cool about this indicator is it not only told you, hey, this is a potential entry, but also show you, hey, where is your exit? By this red line here. This is a trading stop, a unique concept back in the day. Of course, nowadays that's quite common, but back in the day, this was quite revolutionary to have a trading stop like this. So this indicator has been very successful, and as I said, it's built into many trading platforms. And just in a nutshell, how does it work? Well, we always have these entry signals. You can see these green triangles here pointing up, or these short entry signals. This was a long entry signal. This is a short entry signal. And the first thing which was unique about this indicator is that these are always alternating, meaning a long entry signal will eventually be replaced by a short entry signal, which will eventually be replaced by a long entry signal, and so forth and so forth. Now the question is, when will the switch happen? Well, this is where the trading stop comes in. So we have our long entry signal here, but this green line, this is our trailing stop. And the way this thing works is whenever this trailing stop is broken, you can see it here, this bar went below this green line, it broke the trading stop. This is when we reverse. This is when we switch signal. This is when we go from a long trade, for example, to a short trade. And once we're in a short trade, of course, we once again do have our trading stop. And the trading stop is always being tightened. It's never gonna give away profits. It will lock in profits as we proceed. Now, this is the idea of this classic super trend indicator. So it's a great indicator, but there are some things out there which potentially could be improved. What do I mean by this? Well, first off, you need to understand that the trader needs to manually adjust two parameters to find the best setting for the trading stop. Because as you can imagine, finding the right distance of this trading stop is absolutely crucial. Now, you don't want to have it too wide, because then you may give away too much profits if things reverse. But you also don't want it to be too close, because you don't want to be stopped out if there's just a minor correction within an overarching long-term trend. So there's a sweet spot for this, and this sweet spot can be found by adjusting two parameters. One is called the ATR period parameter, and one is called the multiplier parameter. So the trader could play around with these two values to find the best settings for this for the trading stop. But you know what? Anything that has to do with manually adjusting things, to me at least as a trader, this sounds tedious, and most importantly, this sounds error prone. Wouldn't it be better if we had some way of telling what the best settings are for these two parameters? In other words, what is the best distance for the trailing stop. I think that would be a pretty good, a good idea. Also, wouldn't it be nice to know, instead of guessing, to see how well the signals of SuperTrend Bullseye have been performing on a particular symbol and time frame? With the original SuperTrend, this is up for guesswork. The trader would need to guess, hey, how well are these signals performing? Is it even worthwhile following the signals and so forth? Well, we believe these are two very important problems to be tackled. And this was our mission about 2 or 3 years ago when we developed our SuperTrend Bullseye indicator. Because this indicator, this is why we call it SuperTrend on steroids, has addressed these two issues. It will, first of all, automatically find the best parameters for you, so you don't have to do it. We call this auto optimization. And secondly, it will tell you directly on the price chart, or in case of MetaStock, directly in the expert commentary, how well the indicator has been performing on a particular symbol and time frame. Okay, so how does this work? Well, let's check it out on MetaStock. So I'm going to switch over once again to MetaStock. There we go. We can find it. All right. Okay, and we're going to open up one of my favorite stock. It's a monster of a stock. It's called Arthur J. Gallagher. So what do we see here? And for now, only focus on the price chart, not on this indicator down here. We're going to get to this a bit later. So let me zoom in a little bit. So I went ahead and applied our SuperTrend Bullseye indicator to this chart. You can see here, long entry signals, I always replace by short entry signals, then long again, short again, and so forth and so forth. And you can also see the trading stop line here. Okay, perfect. So we have, this is the classic approach. But you may now say, hey, Daniel, where does these two new features come in? Where are they? Are they hidden somewhere? Well, let's check it out. First off, the indicator will tell you directly in the expert commentary of MetaStock. You can see it here if it's enabled. Just drag this panel a little bit up. 1 second, there we go. Make this a little bit bigger. You can see here, it will tell you everything you need to know of how well this indicator is performing on this particular symbol. So this is Arthur J. Gallagher on the daily time frame. So we can see here, for example, that the last signal that came in, if I just move over a little bit, was a long entry signal. Just a second. I can't find my. Okay, I'm just going to drag it over a little bit like this. There we go. Jeffy, is it just me or is my screen? Oh, it's here. Got it. It's a bit hard to see on my small screen. I'm traveling. There we go. So what I wanted to say is that the last signal that came in was a long entry signal. All right. Actually, I need to click on the last bar here because the expert commentary will adjust if you select bars, historically speaking. So now the last bar is selected, and you can see, yes, the last signal that came in was a long entry signal. The entry price was at this level. The trading stop right now is at this level. And these are the settings which are currently being used for the multiplier parameter and the ATR period parameter. And best of all, these settings have been chosen automatically by the indicator itself. So you as a trader, you don't have to worry about this. You just apply the indicator to the chart, and it will determine automatically what these best settings are. So this is where the auto optimization comes in. And this is where the rubber really hits the road. The performance statistics. The indicator will tell you, historically speaking, how well have the signals been working out. And you can see here, well, for this particular symbol, Arthur J. Gallagher, on the daily time frame, our long win rate was at 92%, which is extremely high. Now our short win rate, only 14%. All right. So you can see here, it's a huge discrepancy. You can also see the total trades were 27 and profit factor 1.5. But this is a huge difference. So how would you act on this as a trader? Well, first off, I think the easy conclusion is that, well, the short trades have not been working out great with this particular symbol. Only a win rate of 14%. That's pretty bad. So what would you do as a trader? Well, I think the answer is fairly easy. You would stay away whenever a short signal comes along. You would not trade it. You would skip it. And sometimes not taking a trade is the best trade advice that you can do. So that's one conclusion. But the other conclusion is, look at this long win rate. That's spectacular, 92%, meaning 92% of our long entry signal, they have ended profitably. Now, when we got stopped out, we had a profitable trade. So this tells you, hey, when a long signal comes along, this would be a great opportunity to enter or to potentially act on this long signal. Okay, so let's move on. This is Arthur J. Gallagher, and of course, this indicator works on all asset classes, not only stocks. It works on ETFs, on futures, on currencies, on cryptos, and so forth. And it will also work on any time frame. So 5-minute, 50-minute, daily time frame, and so forth. So there's no restrictions there. It will work on all time frames. But let's move on. Let's go to IBM. And please pay attention to these two values here, multiplier of 3 and period of 40. I'm going to switch over here to IBM. And also here, SuperTrend bullseye is applied to the chart. And let's have a look at these two values, multiplier of 5 and period of 100. They're very different. And why are they different? Well, because the auto optimization engine has determined for this symbol and on this time frame, these are the optimal parameters. And imagine how much time you will save as a trader if you don't have to manually fiddle around with these settings. They are calculated automatically for you by this indicator. So to us, having an auto-optimizing indicator made all the difference in the world because it saves you so much time. Of course, you could do it manually, but it just takes too long. And as a trader, anything that's tedious is something you are unlikely to continue doing for a prolonged period of time. It's just too tedious. And as a trader, we want to spend our energy or our mental energy on what really matters, on whether we want to take a trade or perhaps stay on the sidelines. This is where we want to spend our mental energy, not necessarily at trying out different parameters or parameter combinations. Okay, so these are the parameters here for IBM. If you scroll down here, we can see that once again for IBM here, also our long signals worked out much better than our short signals. This discrepancy is not as big, and our profit factor is 1.86. All right, but the principle remains the same. The same indicator applied to IBM in this case. All right, moving on. CB, CHOP. How does it look here? All right. Okay, and these are all very bullish stocks. So here it's not very surprising that the long win rate outpaces the short one. But look at this one here. Every single trade, historically speaking, has become a winner. That's possible. If you really find a stock that's really trending strongly, this is possible to have win rates like this, profit factor of 2.47. But again, the principle remains the same. And perhaps one more. AT&T here also on the daily time frame. Once again, different parameters being used, 4.50 for the multiplier, 80 for the ATR period, 71%, long win rate, 42%, short win rate. But it doesn't have to be like this. There are symbols out there. This is just a little bit of a round trip here. There are symbols out there where perhaps the short signals work out better than the long signals. But at least now you know. At least now you can see the statistics, which can be so insightful when it comes to deciding, hey, should I act on a signal or perhaps should I stay on the sidelines? Because we are trading indicators, we are all about giving you, the trader, all the tools that you could possibly use to make an insightful trading decision. All right, so this is how the indicator works in general with the auto optimization feature and the performance statistics. But there's more to come, because this alone is not sufficient yet to find me this trade of the day. There are some other factors which play a role here. So let me quickly go back to my slide. So we've seen the auto optimization feature and we have seen the performance statistics. Two very interesting and good features, but there's more. This indicator also comes with two different reversal modes. Sounds complicated, but actually it's not. On close, which is the default mode, and on touch. Let me quickly show you what this means. So back once again to my chart here, and let me try to find a good example. Maybe this one was not the best one. Let's go to Arthur J. Gallagher for a good example. I'm trying to demo it to you what this reversal mode means. Okay, here I see a good one. Let me just make this a little bit bigger. Look very carefully at this candle here. Do you see this one here? This candle, at least the low price, goes below, clearly below the trailing stop. You can see it, the low here is lower than our trading stop here. So you may say, hey, why didn't we reverse there? Why didn't this long trade reverse here into a short trade? Well, the reason is that by default, the indicator is configured to only reverse on close, meaning the close price of this candle needs to be below this trading stop. And this case, of course, clearly the trading stop is not, the close but is not below this trading stop. Therefore, we didn't reverse for good reason, because that prices really took off from this point on, and this actually was a winning trade in the end. Okay, so oftentimes on close is the better setting, but you can play around with it by switching it over to on touch. So had I now changed the parameters to on touch, this long entry signal would reverse here into the short direction. So that's the first additional feature that comes with SuperTrend Bullseye. And the fourth one is that you can actually pick your trading style, meaning your trading direction. Because you may be a trader who only wants to go long stocks, because stocks are long biased anyways. Why go short? If that's your trading preference, you can configure the indicator to only optimize for long signals, because by default it optimizes for both directions so that they are optimal. But if you never trade short, it doesn't make sense to also optimize for short signals. You only want to optimize for long signals. So that's a setting which you can choose in the indicator as well. And we actually recorded a comprehensive bootcamp where all these different settings are explained in detail. I'm not going to go through it now. All right, so these are some additional features, but a few questions still we need to answer. First off, how can we find symbols which currently have setups? Meaning, how do we find symbols which currently have a long entry signal or perhaps a short entry signal on which we could act on? Well, this fortunately is a very easy answer when it comes to MetaStock. MetaStock perhaps has the most powerful scanner out there. It allows you to scan through thousands of symbols within minutes. And in fact, MetaStock allows you to do a generation 3 scan. So what does this mean? Well, let me walk you through real quick. Generation 1 is your plain old signal scan. You scan through a universe of symbols and you find the ones which currently have long signals or short signals. That's it. Well, you can push this further. Generation 2 is you do your scan, but you have a ranking available, which allows you to sort your results, to rank your results, because not every signal is of equal quality. So in a generation 2 scan, the scanner will tell you, hey, this signal has the better chance of succeeding over perhaps another signal. That's generation 2. And generation 3 is you will do an auto optimization on a per symbol basis while running your scan. Meaning that for IBM, you will run the optimal settings for IBM. Then for Tesla, you use optimal settings for Tesla. Then for, Microsoft, you will use optimal settings for Microsoft and so forth. This is generation 3 scanning. And this is what's possible with MetaStock. May sound complicated. Actually, it's just a couple of button clicks away. So let me go over one more time to MetaStock, and let's open up the Power Console here. There we go. Just on the other screen, just a second. There we go. Okay. Now, in the Power Console, you can click the Exploration tab here. And if you scroll down all the way to our trading indicators exploration, so just give it a second here. It's just a bit sluggish. There we go. Okay, so I'm going to scroll down to trading indicators. Okay, just a bit further. There we go. Okay, all our explorations are grouped under trading indicators, our company. And one exploration I ran a bit previously, it took like 5 minutes. I'm not going to do it right now, is this one here. SuperTrend Bullseye STB, buy and sell signals. Let's look at the report. This took about, I would say maybe 3-4 minutes to complete. So I'm going to open up the report here, and what do I see? Well, I see we have a bunch of hits. You can see them here, and all of these are long entry signals. So just you scan here. All these currently have signals. Okay, you can see this here by this buy column where there's a value other than 0. Okay, that's good. There's maybe I don't know, 60 or exactly 16 different hits here. And I could, I guess, go through all these different hits and check them out one by one. But you know what? Had my scan universe be a bit bigger, this here was a scan in the S&P 500. Maybe I scanned through all the New York Stock Exchange stocks. I would have perhaps had 150 different hits. Then it becomes very tedious to go through all of them. Shouldn't there be a way to find or rank those these signals? Well, there is. You can sort them by this column here, by the profit factor. So I'm going to click on it. I'll sort from top to down, and I can see the best one that comes up is this one here, Dexcom. All right, profit factor of 12.04. Okay, so let's open this one up and check it out. I'll click on this little button here. This should open up my chart with any luck. It's probably on the other window. Just a second. And if you have any questions, please don't be shy and ask them. So it's opening up here. All right. Let me just quickly see if there are some questions coming in. Okay, perfect. There we go. So here we have our symbol. We can see, okay, on the last candle, the last completed candle, I should say, we do have a long entry signal. Great. Then we look at our statistics. Okay. Long win rate 80%, short win rate 80%. So here the long trades and the short trades worked out equally well. And profit factor, as you can see it here, of 12.05, exactly as predicted in our scan. Perfect. The next hit. 1 second. The next hit is this one here, Equinix Inc. Profit factor of 6.5, win rate 75% to the long side and 50% to the short side. Okay, let's click on it. And once again, you will see that also this symbol has an entry signal, a long entry signal on the very last candle. You can see it here. There we go. Yeah, also right there. Yeah. And if I go down here, I can see, okay, win rate 75%, short win rate 50%, and profit factor 6.59, exactly as shown in the scan. And you can see, hopefully, how easy it is to rank and sort your scan results, allowing you to focus on the most promising signals first. And once again, and as a trader, you know, anything that can save you time and get to your best signals faster is worth its weight in gold, because, you know, if it's tedious, chances are you're going to give up on it. But this way, you can actually focus on the signals, which, historically speaking, have the best profit factor and win rates. And then you can zoom into the chart, and then you can perhaps manually take a look to see, okay, is this something I want to trade or perhaps not? All right, so this is generation 3 scanning, allowing you to find signals which currently have entry signals and showing you directly in the scan results how well these signals have been performing. All right, now, but one last topic, and then we're going to conclude everything together. Let's optimize SuperTrend Bullseye. You may say, hey, how can I optimize an optimizing indicator? Is that even possible? Well, indeed, it is possible, but you have to be clever about it. So how can we do it? For example, we could tell the indicator how exhaustive it should do its optimization or how loose it should do its optimization. So the more exhaustive you get, the longer it takes to load your chart and to do your scans. That's a sweet spot there. Typically, we just use the default settings, but that's something you can do. In our bootcamp, we explain how this works. You can also pick the trading style that you want. For example, as mentioned before, if you only want to trade long, well, you can tell the optimizer, hey, only optimize for long signals. That's another tweak that you can do. And thirdly, and that's the one we're going to do right now, you can combine SuperTrend Bullseye with our Trend Radar indicator. Okay, wow, what's this now? What is Trend Radar? Well, let me give you a quick taste. So Trend Radar is this little heat map below the price chart, and it shows you directly and at a glance what are my short-term trends doing, which are the upper rows here, my medium terms, and my long-term trends here on the lower rows. For example, here on this particular chart, we can see, okay, we are long-term bullish. The last row here is green. That means we are in an uptrend. And of course, we can see it here also on the chart. But every once in a while, we get these red patches. These are pullbacks within an uptrend. Oftentimes, great opportunities to re-enter into this long trend here at a better price. You know, prices drop down at a better price with less risk on the table because your stop loss can be closer by. And this is exactly what Trend Radar allows you to do. And there are other patterns that you can find too. It allows you to see what are the current market conditions all about right now, this second. And one way to combine Trend Radar with SuperTrend Bullseye is the following. You pick or use SuperTrend Bullseye to determine your overall trend direction, either you want to go long or short based on whatever signal SuperTrend Bullseye has given you, and then you use Trend Radar to find what we call healthy pullbacks within the trend. Now, example, let's look at gold one more time. We had gold before, but let's go back to our GLD symbol here. If I can find it, 1 second, I have so many charts open. There we go, GLD. And I'm going to apply. I'm going to apply SuperTrend Bullseye right now to this chart. So apply template. There we go. Just a little sluggish. There we go. And we're going to use our SuperTrend Bullseye template here. And normally this works really fast, but every time I share my screen, it's a bit sluggish, but it will work. So I'm going to open this one up, and you will now see, oh, no, don't want to save it. Once this loads, you will see exactly how these two indicators can play nicely together. Let's look at this last signal here. So what is gold? Gold right now is bullish. Of course it's bullish, but it's also bullish as per SuperTrend Bull. So we had this long entry signal here. Perfect. Now, would this be a good idea to enter long here? Perhaps, of course, we can see prices went up, but wouldn't it have been better if you would have entered, for example, here when prices are retracing towards this trailing stop? I would say yes. Why? Because our risk is much less, because our stop loss would be much closer away. You can potentially even use a bigger position size, and because you enter on this correction, and then you anticipate hopefully prices will go up. And this is exactly where the combination of SuperTrend Bullseye, which will give you the trend direction, long, and trend radar comes in, which will show you if the stock currently is in a pullback state. I believe this makes sense. And best of all, we're going to see this right now, you can scan for exactly these setups. That's the last thing I'm going to talk about today. So how can we scan for it? So back once again to our Power Console. I'm going to go back to our explorations here, and I'm going to pick two different scans. I'm going to pick this scan here, Trend Radar Level 3 pullback. This one, oh, sorry, this one here. Trend Radar Level 3 pullback, yeah, meaning the last three rows here should be reddish, and SuperTrend Bullseye, open trades, this one here. And now best of all, I can combine these two different explorations into one thing. MetaStock allows you to do it, which is super cool. I click start. I have my report open. 1 second. Bear with me for just 1 second. Where is the report? Well, yeah, perhaps just believe me that this is possible. I think this report is somewhere open already, but let me just quickly open up what we found. 1 second, view all reports. There we go. Okay. And what we found afterwards is basically that these were the symbols which are currently long as per SuperTrend Bullseye, and currently also in a level 3 pullback as our trend radar indicator. And if I now sort these by profit factor, guess which one comes up first? Oh, well, the first. It's this one here, McDonald's Corporation. Yeah. So we have this one here also, Newmont. I dismissed it because only very few trades were taken there. But then the second one was McDonald's Corporation, and it's exactly the one which was our trade of the day, which I found by running this scan. And it's super fast. The scan perhaps took, I don't know, maybe 1 minute, perhaps even less, to find all these interesting stocks which are currently long as per SuperTrend Bullseye and in a pullback state. And if you open up the chart, what do we see? Now, definitely McDonald's long-term uptrend. You can see it here. SuperTrend Bullseye is long. You can see this one here. And we have a pullback, a level 3 pullback as per trend radar. And this is exactly why I picked this stock as my trend of the day, because the idea is that this uptrend is going to continue after this pullback. This is just a correction. And for long trades, if you look at the statistics, our win rate is 66%, but our profit factor is a whopping 2.13, which is a very strong profit factor. And probably would also be even higher. Would also be higher if you only consider long trades. So put all this together, this is why, and this is the reason why I picked McDonald's Corporation as my trade of today, a long trade. Entry around current price levels, target at 360, which would be an all-time high, and your risk, at your stop loss just below this swing low here at around 290, giving you a reward to risk ratio of 2.3. All right, now you may ask, we're gonna come to custom symbols in just a second. You may ask, hey, is this indicator something I should consider? Well, let me explain to you why not this may be the case. First off, it doesn't really matter whether you are a day trader, a scalper, a swing trader, or perhaps a long-term investor, because this indicator will work on every single time frame and on all chart types, period. Secondly, it also doesn't matter what you trade, whether you trade stocks or FX or cryptos, no problem. This indicator will work on any asset class and on any symbol, no problem. And of course, also, if you use different trading platforms other than MetaStock, this indicator is available for MetaTrader, NinjaTrader, TradingView, Thinkorswim, and ModifWave as well. So you have flexibility there. And if you're a little bit like an engineer like me, I'm a software engineer by heart, and I believe good software tools can make my programming life easier, and good trading tools can make my trading life easier. Well, then this indicator is definitely something you may want to consider, because it will do all the heavy lifting for you. It will auto-optimize the settings for you, and it will tell you directly in the expert commentary how well the sequence have been working out, which is a great decision-making help, showing you directly there, hey, are the odds in my favor, or perhaps are the odds against me? And of course, as a trader, I would only trade if the odds are in my favor. Now, as a big thank you to joining us, and also Jeffrey for letting me kick off this awesome MetaStock week. We have put together a special offer for you, which is available at tradingindicators.com/597, because normally the indicator alone costs $797. That's for life. That's the normal price for the indicator, which of course comes with auto optimization and with the performance statistics that you've seen. But we decided, to celebrate the arrival of the indicator at MetaStock, to add a couple of bonus offers in it. And first of all, of course, you're gonna be invited to our exclusive live sessions, which take place every Tuesday. So we're not gonna let you alone with this. You will be invited to our member sessions where you can ask questions, you can exchange ideas, you will learn tips and tricks, you will find new trade ideas every single Tuesday at 12 p.m. And of course, these are all recorded. So you will be invited to these. But also, you will get a complimentary copy of our trend radar indicator, the perfect companion to SuperTrend Bullseye. Normally at $397, today you will get it completely for free. And on top of all this, we also decided to slash down the price from $797 to only $597, and this is all for life, including our member sessions, which have a yearly subscription fee, but you will be invited for life to these sessions as well. So if you want to take advantage of this offer, simply go to tradingindicators.com/597, which is the price. So tradingindicators.com/597. All right, so I talked a lot. Niklas or Jeffrey, are there any questions out there? Which we can
Yeah, Daniel. So we have one from Greg, and he said, hey, he was hoping that this webinar would teach how to configure the indicator. But I think, as you said before, there's a boot camp. There's a long one showing exactly how to do everything for the indicator as well.
Yeah, exactly, Greg. So if you already have it, send me a quick note. I'll send you the link for the boot camp. Again, we have, I believe, a dedicated boot camp for the MetaStock platform, but also some dedicated boot camps for other platforms. Send me a quick note, and we'll hook you up. Yeah. Any other questions?
Perfect. Okay. Yeah. And no other questions. We had one from Vincent. We know Vincent McCoy asking about liquidity IQ, and I'll send you a message about that, Vincent. But we have symbol requests if you have time to look at some symbols,
sure.
Daniel.
Yeah, let's do it. Yeah, perfect.
So the first one is Tesla.
Yeah, Tesla. All right. What's going on with Tesla? So let me go here to my chart, and I believe that's the daily time frame probably. So let me go to Tesla. Come on, there we go. All right. I believe it's Tesla.o. I was once told that a 4-letter stock trade on the NASDAQ, it needs to have this .o at the end. All right, so it's a bit sluggish, but that's my screen sharing. For some reason, whenever I screen share, it slows down my laptop. All right, come on. And what was the other symbol request, Nicholas? Or do we have other ones? So I can prepare them as well as we.
Yeah, we have Apple as well.
Apple, okay, cool. Excellent. Okay, so it's loading finally. There we go. Tesla. Okay, we know Tesla, I guess, had quite a bit of value loss, at least in terms of stock price. And yeah, it's not very surprising that currently SuperTrend Bullseye is in a sell trade here. in a short trade. Before this, of course, it wasn't a long trade. What a great ride this would have been. Now short, we're still short Tesla, and let me quickly see what the win rates are. Yeah, 100% across the board. So the indicator actually works, as it seems, very successfully on Tesla. We're still short. And of course, this would have been a nice trade. You probably would have locked in some profits here, or maybe even took some partial profits as we had this big move down. And now Tesla, it seems to me at least a little bit, we are a bit range bound here. If you look at this symbol, this line here and this one, it seems a bit ranging. Right now it's consolidating, but we are at the upper range here, and perhaps this could be an interesting reshorting. You may bounce off this upper resistance level here back to the downside. It's definitely in the cards. All right, so that was that. But let's look at Apple real quick. Which is Apple dot. Oops, if I can type it. Any glasses? Apple dot. Oh, there we go. No. Oh boy. So perfect. Apple.o. Let's open it up and see how Apple looks like. Also on the daily time frame here, it's loading up, and I have a template which automatically, and you will get this template too, which automatically applies trend radar and SuperTrend bullseye to the chart. All right, so Apple just reversed, or just reversed recently to the long side, currently pulling back a little bit because Apple has been struggling a bit. It didn't recover as much as the other tech stocks last week, and last week was so bullish for most tech stocks. Apple not so much, a bit, but not so much. Today we're a bit down, but nonetheless, I believe this could be an interesting long trade. Apple in general is, from an investment point of view, probably a good trade to have, a good stock to have. Profit factor 1.64, win rate for long entry signals 50%, short ones 35%. One quick note on the win rates, by the way. This is a trend following indicator, meaning that typically, as you ride trend, as the trend will progress, your winners will be bigger than your losers, meaning that even with a win rate of 50%, you can be quite profitable. You can see it here, even though those win rates are actually less than 50% across both directions. The profit factor, which is a very solid metric, is 1.64. And for the profit factor, it counts at, if it's above 1, it means you have a profitable trading system. If it's about 1.5, it's very profitable, and the higher it gets, the better and the more profitable the trading system is. All right. Any other questions, Nicholas?
We have a symbol request. We have one for Microsoft. And we had a question, are the market sessions in Discord for lifetime as a bonus? And
yes, absolutely. Yeah, you will get all these. So you'll be invited to our Discord channel, but I think more Discord channel is available to everyone, but the exclusive members only sessions, which happen every Tuesday at 12 p.m. And these are exclusive for our tight-knit community. And in there we give away tips and tricks. We look at the market and we answer lots of questions. So I think these are definitely something to consider. Yeah. All right. So Microsoft. Okay. Perhaps the last symbol for now. Microsoft.o, I believe. I hope that was the right one. It is a 4-letter symbol.
That is correct.
Yes,
it is.
That's correct. Yeah. The only exception, Jeffrey, I don't know if you noticed, is QQQ, because it's 3 letters, but you still have to use the O at the end. Did you notice that?
Yeah. It's actually the rule is if it traced on the NASDAQ, it's .o.
Oh, is that the reason? Okay.
Yeah. Most of the time, that's a 4-letter symbol. So that works on 90% of the time.
Got it. Okay, so Microsoft right now currently in a short trade, and this is not surprising as we are correcting off this all-time high here around 450. And look how beautiful, how interesting it could have been if we had entered on these corrections down towards this trading stop. This is one of the trading starts we are now preferencing, because right now when you enter here, trading stop is quite far away. There's a lot of risk on the table. So we're actually waiting oftentimes for this pullback towards this trading stop and then enter into the short trade. This first of all has much less risk and it allows us to scale up our position size because you have a very tight stop loss. If this trade works out, then you are to profit way more that way. All right, with this, I'm gonna go back one more time to my slide here. So the offer is tradingindicators.com/597 for lifetime access for SuperTrend Bullseye and our trend radar indicator of all these extra goodies that come with it. All right. With this, Jeffrey, yeah, the next member session is next Tuesday at 12 p.m. In fact, every Tuesday. And with this, yeah, guys, if I missed any questions, please reach out to us directly at tradingindicators.com. Main menu, click on contact, put your question into the contact form. It will go straight to my inbox, and I will make sure to answer every single question personally. All right.
Awesome.
With this, yeah, that's all for me. Thanks, Jeffrey.
Enjoy the rest of your time in Brazil.
Yeah.
All right. Cool.
Don't worry about that.
I wasn't too worried, but happy Cinco de Mayo. Thanks for joining us.
Bye, guys. Thank you.
All right. Very cool. Let me go ahead and do this. We're going to go ahead and just make a few changes. Okay. Go back over here. I do want to say thank you to Daniel for making that technology available for MetaStock. Such a cool product, such a great designer as well. Let me go and make me the presenter here. We'll go ahead and show my screen, and you can go ahead and get that if you want to pick that up today. MetaStock.com or tradingindicators.com/597. The other thing you can do is any of the offers that we have today, you can go to MetaStock.com/conf promo to get them. You can call us if you have questions, 800-882-3040, MetaStock.com/sales-chat. I love everything that's included with that. So normally $797, conference special $597. We could call it a Cinco de Mayo special if we want to. That includes a trend radar that's automatically included, the weekly lunch and learn sessions. The next one's tomorrow at noon. 30-day money back guarantee, which is what we offer on all of our products, as well as if you've never used MetaStock, I'll remind you, it's been rated #1 in its price category. It's been ranked #1 32 years in a row, maybe 33. I have to go check that. MetaStock.com/conf promo, 800-882-3040, or MetaStock.com/sales-chat. So with all that being said, I want to say real quick as we kind of break over to our next speaker. Before we do, I want to say thank you to CMT, the Chartered Market Technicians Association, a big sponsor of ours, a great nonprofit. If you're looking to manage money, if you work for a bank and you want more assets under management, if you want CMT at the end of your name, any of those things, if those apply to you, go to cmtassociation.org. It's a very well-respected, reputed organization, and they can help you get a CMT accreditation. And they do a great job, and we appreciate their sponsorship. So I do also want to take a moment. Linda, yes. Linda asked, are there training videos that are available to learn the program? There's a couple boot camps that are available right away that we've recorded. So as soon as you get those, plus there's a lot of training that's actually included as part of it as soon as you sign up as well. Thanks, Linda. Appreciate that question. Okay. All right. Greg, before we go on to the next speaker, it is time to give away a prize. Do you want to help me give away a prize?
Sure, I'm just, excuse me, I was mid-swallow on some juice. Got me off guard.
Well, I hope you, let me know when you're ready.
Oh, I'm ready now.
All right, we're gonna give away a book. This one right here, Steve Bigelow, High Candlestick Profit System. Steve was a big partner of MetaStock, good friend of MetaStock, super nice guy. I learned a lot from Steve, and I'm happy that we were able to kind of work with him as closely as we were. So Greg, what we're going to do is we're going to send this out to somebody that's registered for the event. So maybe we should talk about how you can register for the event if you're watching on YouTube, and so how you can qualify for prizes.
Well, it's very simple. You just need to go to MetaStock.
Oh, okay. Go ahead. I'll let you go.
Well, are you ready, Jeff?
I'm ready.
You just go to metastock.com. There's a big banner right there on the top that says Traders Conference, and if you go ahead and register for the Traders Conference, which is really just, name and email address, then you'll become eligible to receive daily prizes.
Perfect. Great job. Thank you. Thank you for doing that. What I need from you is a number between 1 and 4225.
Okay, according to the Google random number generator, that's 2394. That doesn't seem that random. That seems right down the middle, but I did use Google random number generator.
All right. This one I'm going to send it to Canada.
Mm.
Don V. with a Kojiko email address. Don V, if you're listening, you just won this book. When I send you an email next week and say, hey, you won a book, answer it. But hey, congratulations. If you're in the chat, if you're watching now, let us know. We love it when people win prizes while they're here. So otherwise, you don't have to be present to win. You just have to register to win. Greg, thank you for the assist.
You're welcome, sir.
All right. Of course, we are MetaStock. If you want to find out more about MetaStock, it's been rated #1 32 years in a row by the readers of Stocks and Commodities magazine. We're going to talk a lot about scanning and testing, and if there's a product that's going to help you do technical analysis, we want it to be MetaStock. It's a great product. There's a reason it's been rated #1 for 32 years in a row. Pricing on it starts at just $75, and you get a delayed updating streaming information. You can scan during the days, all that kind of stuff for $75. We do have a full real-time version as well. If you pay for a month, we'll give you the second and third month for free. You can do that at metastock.com/conf-promo. If you have any questions as we go today, 800-882-3040 or metastock.com/sales-chat. Thank you for being here too, by the way. All right, our next presenter is, let's go over here, Rahul Arora. Rahul has been a partner of MetaStock. He works with Trading Winds. He's been working with them for a number of years. I have had the privilege and the pleasure to work with Rahul over the years. And he didn't teach me how to enunciate properly, but I'm working on it. So Rahul has been a partner of MetaStock for a number of years, but this is the first time we're going to actually have him present. So it's the very, very first time. So give him a warm welcome. Rahul, let's go ahead and get you started.
Thank you, Jeff.
All right, I can see you. Ooh, you look.
Good morning. Good morning. I have my MetaStock orange on. I hope that tells you how grateful I am to be here today.
I don't think you've ever been this dressed up.
I usually get dressed up for the Fed meeting announcements on our market chats.
Oh, do you? Okay.
Yeah.
Cool.
I'll tell you more about that. I just wanted to tell you, first time being here, I'm so grateful. Long time listener, but first time presenter.
Yeah. It's I know you've been like a lot of help. You work with Vince very, very closely. Yeah. I'm interested to see what your style is. Other than I can obviously tell you got great style. Obviously with the MetaStock orange right there.
Of course, I had to have the MetaStock orange today. Jeff, thank you. Let me share my screen. Let me know when you can see it.
Will do.
And you should see something that says velocity coming right at you.
Okay. Oh, wow. Yeah. It's like a Star Wars.
It is like a Star Wars thing. It's yesterday was May the 4th, right?
Yeah. All right. I can see it. I can hear you. And I'm going to get out of the way. Let you go.
Okay. So Jeff, I'll go till about 10:50 or so, then hand it over to you. Does that work for you?
That's perfect. I'm the next presenter, so if you're like, if it takes a little bit longer, it does. Not a big deal.
Okay.
Take your time. Looking forward to it.
Thank you. Thank you, everyone, and welcome to our first presentation of Velocity. If you've been with MetaStock, you know that my business partner, Vince, Jeffrey, has been kind enough to design not only 1, 2, 3, 4 systems for Vince. We did the favorite trade setup, we did the winning momentum strategy, veracity, and the current system that we're using, Victory. They've all been outstanding systems. If you've used any of them, you're familiar with his work, and I've been working with him, coming up on about 10 years or so. I'll tell you more about that. As Jeffrey enunciated, my name is Rahul Arora. I'm the creator of the Velocity system. So this is something that Vince and I had been working on together, and then I kind of took the lead on it over the last 2 years or so. And we've been back testing, forward testing, using it with options, position sizing, trying to get it just right before we handed it over to Jeff and William here at MetaStock to put it into play. And they've done an outstanding job with it. I'm so happy with it. A little bit of my background. I graduated university back in 1998, and then decided that I was going to use my winning personality to become an accountant, which I did, and started at the accounting firm in '98 or so. Got my CPA, had to take 2 years off work for a life-changing illness, you know, tale as old as time. During that time that I was off, I thought, oh, maybe I can dabble in the stock market. And this is right around the time that e-trading was becoming a thing. If you remember those ads for E-Trade, Ameritrade, Daytech, all those $7 option trades, $7 trades, which in hindsight seems like a lot of money now that you can trade for free. But at the time, it was a good deal. So I put $10,000 into a brokerage account, and I managed to shrink that down to about $1,600 in a matter of about 2 months or so. And I said, I can't do this. There's got to be a better way. I was trading options, I was trading earnings, I was trading this and that. I had no business trading any of those things. I should not have been anywhere close to a trading screen because I didn't even know what I didn't even know. So I said, okay, let's study this stuff. And the internet was nascent at the time, but there was enough information on there that you could get a little bit of a background on what you needed to do. So I start studying, I get into technical analysis. The auditing background actually was very helpful in the fundamental side of things because you really get to learn what financial statements are saying. Management is wonderful at using the confines of the accounting standards to present information to investors in a way that they want. So they can make the numbers, as they say, they can make the numbers dance. So you've got to be really careful. With that, I said, and this is right around the time of Enron as well. So accounting and Sarbanes-Oxley, all of those things, if you remember, if you were trading back in those days, these were all buzzwords. So I said, I'm going to combine this with something. I'm going to combine this with technical analysis. I'm going to combine this with position sizing, risk management, and options trading to get down to a system that works for me consistently. I did that for a few years. Then I met this guy. Jeff, do you know this guy? Jeff may have stepped away. That's Vince Vora. So I met him right around 2012. And actually, I met him at a Starbucks, not that Starbucks. This photo is right outside the CBOE where he was doing a presentation. And he was kind enough to take me under his wing and said, let me teach you about technical analysis. And if you want to learn more about that stuff, he is the guy to go to. He's been trading for about 40 years now. And everything I've learned about technical analysis, I owe to him. He's been great. And around 2016 or so, we met this guy on the left. That's Jeff Gibby. He was just, if you don't know him, he was the one that introduced me. And we formed a wonderful relationship with Jeff. He's designed, as I mentioned, indicators for Vince and this indicator here for me. So we're very grateful to him and the MetaStock team. If you've been trading for any amount of time, the last 2 months, you know, this is a microcosm of what's been happening over the last 2 months. You'll get a tweet that comes out in the middle of the night or a truth social post that comes out in the middle of the night. And any position that you have will go right against you. And I found this to be a very challenging, but at the same time, not only a challenging time, but a time that is ripe with opportunities if you have the right strategy. We all know this. Trading blind, costing you money. Most traders are losing not because they're wrong or not because they're not smart. It's because they're generally late on trades. And we're going to talk about why that is and why we have that hesitation and why we're afraid to pull the trigger when we need to, why we're afraid to put on a trade even though we know it matches all our criteria, everything is right, but we're still second guessing ourselves and how to get over that. Everyone says mindset is a big part of trading. It absolutely is, but you've got to have a strategy too. Mindset will not find you a winning trade. And I've found, at least in the last 20 years or so, finding winning trades is not the hard part. It's managing winning trades. It's planning your exits. It's getting out when you need to with a profit before you give it all back. In the last 10 years, things have really changed, especially in the last 5 years since the pandemic. The markets behave differently now than they did when I started in the year 2000. From 2000 to 2010, we had the great financial crisis. From 2010 to 2020, it was generally a bull market post great financial crisis. And then we come to the pandemic, where everyone's at home and there's no gambling on sports, and people say, well, maybe I can gamble on something called stock options. And that, with gamma squeezes, volatility, that really has changed the game, at least in my view. That's really changed the game in terms of what we need to do to keep up with what's happening in the markets. We're going to talk about how to anticipate moves. Now, there's no system that's perfect. You probably know this. If you did have a system that's perfect, you wouldn't be here. There's no system that's perfect, but we can add things and we can make things better to the point that our risk is managed. You'll never suffer a big loss, and we have unlimited upside. We're going to talk about all of these things as we get into the session today. I'm not going to talk a lot with these slides. I really want to show you the system, and I'd love for you to throw out symbols if you'd like me to review them, because I really want you to see how the system works, not only on swing trading, but also on a day trading perspective. As we've already talked about this, getting ahead of the moves with predictive signals, no more guessing and hoping. Confidence, we're going to talk about trading with that as well. These are just some posts that I pulled out from Reddit. As an accountant, the one thing they teach you is how to be conservative. It's almost to the point where you're afraid of your own shadow. So I've grown up, or my trading journey has been all about risk control, risk management, how to live to trade another day. These are some of the posts that I saw on Reddit when I looked for big losses on Wall Street bets. And you can see big numbers here. Hundreds of thousands of dollars people have lost because they thought an earnings play on Reddit would be a good idea, or an earnings play on Palantir would be a good idea. They don't understand how options work. They have no business trading options without knowing the intricate movements and the details on how these options work. We don't want you to become one of these people here. What's the big problem with technical analysis? I find that it is generally the fact that most people are using lagging indicators, which are great at telling you what has happened, but not as good at telling you what is likely to happen, or what could happen, or what you should be prepared to see happen. So how do we get around that? Well, let's see what tools we can put together to give us more of a predictive sense instead of a reactive sense. We want to see these setups before they move, not setups after they move and we go back and look at it and say, oh, that was a good setup. We should have taken it. As I mentioned, this is at least 2 years in the making, and maybe a little bit longer, 20 years of experience. We've tested hundreds of tools between Vince and myself. The tools that we've used and some of the indicators that we programmed for MetaStock have been wonderful, and this is sort of the next evolution of those indicators. Risk management, as I said, I'm passionate about that topic, and we talk about that topic on a weekly basis with our group, which we meet, with whom we meet on Mondays, Wednesdays, and Fridays for an hour each time. We talk about trade ideas, we talk about trade strategies, option strategies, risk. It's really, it's a nice group, and if you get a chance to join, I'd love to see you there. As I mentioned, I don't want to talk too much about myself and too much about what the system does. I want to show you exactly what it does. So it uses a couple of things: supply and demand shifts, momentum and volatility, and of course, pattern recognition. With AI and some of these new technologies, we're getting better at pattern recognition, and we want to incorporate these things into our trading as well. Okay, let me bring up my MetaStock platform. And let me see if I can pull up the questions and comments here as well. Okay, can everyone see the MetaStock platform? All right. This is a chart of QQQ. Just put my coffee down and get a little bit more down to business here. You'll notice a couple of things here. We're using the 20-day simple moving average just as a reference point. It is to give you a general idea of where we are in the overall market. It doesn't have anything specifically to do with the indicator. As we scroll to the left, you'll see here we've got an entry. Let me zoom in for you a little bit here. And Jeff will talk more about this as well when he tells you about how to get the system here. There we go. So this entry here, this enter long on 3/15/2023. Momentum, pattern shift, and pattern recognition has guided us to this entry here. So this is where you would get in long. If I can close off this part of the screen here. There we go. So you'd be getting in right around, I gotta ask Jeff how to minimize this thing here. Okay, there we go. The entry here will be right around 305, 310 or so. Let's get the exact number here. Let's say around 300 or so. The system is also going to plot, so this is what Jeff and William are working on right now. It's also going to plot take profit level. So we're going to have at least 3, possibly more, because when you get into these kind of trades on a daily basis, these trades can last for months and years at times. The entry here, what do you do with this entry? All right, you can just buy the commons, or what we're looking at here is a couple of things. One is a deep in the money call option that is a leap, so we're minimizing our theta decay and we still have complete upside. We're basically getting the commons, but with a significant amount of risk management here on the leaps. From here, 301, 310, excuse me, 300, we're going up here. We get up to about 330 or so. We start pulling back. We come back to the 20. Vince is a big proponent of using the 20-day simple moving average on these trades. You notice we come back to the 20, we rest here or close by for a bit, and then we continue our journey further. What I would do, or what I tend to do, is when I have a 10% gain, I generally take my first level of profit. When I have a 20% gain, I'll take the next level. When I have a 30% gain, I'll take that next level and I'll leave a little bit going. So that 30% would take us to about 390 or so. And if we scroll by, you see eventually it does come back and give you an exit. But we've been out of the trade since here. We've got that small, maybe 5%, 10% left for a trade that just keeps going. We get this exit that comes here. It just happens to be around the 20. That's not always the case, but in this case, it does. So we get this exit and we get this short. Now, do you take this short? That's a good question. My suggestion would be not to take the short. What you want to do with this particular short is you want to see a break of a previous low. So I want to see a break of, where are we here? The previous low. In this case, we're going to have to go further back. So I would just avoid this trade and I would look for a new long. We get this new long on the 3rd of November. Again, to be conservative, you're going to wait for a break of the previous high. And if you don't get a break of the previous high, you ignore that trade. So here's the previous high. It's in October. Once you break that previous high right here on the 10th of November, that's when you take that trade. For stop losses, for indexes, I generally like to use 5%. For equities, I'll extend it to about 10% just because of the nature of the volatility and the beta on those trades. So this is obviously an index here. So our high or our close here, 378, 5% of that, about $19 or so. So I would put my stop loss right at about 360 or so. And we never actually get to that. We kind of have a move up. So from 378, I'm looking for 10%, which would take me to about 418 or so. Here's my first profit level. We come back down a little bit, and keep going. And we're asking Jeff and his team to use market maker pivots to suggest some of our take profit levels. And those are dynamic. They'll change. It's not always 10%, 20%. That's just a personal preference that I have. And you'll see that a lot of these, as I mentioned, a lot of these trades, you're going to be in them for months and years on the daily time frame. They'll come back to the 20, but they'll never come back down enough to hit an exit. Now, let's take a look here as we keep going. I want to show you what we've had recently with the Trump trade since January of this year. So we had the short on the 11th of March at a price of, close here is 471 on the NASDAQ. From 471, you can see that we do come back up a little bit, but we never get an exit signal on the system here. As I mentioned, it's all based on momentum. It's all based on supply and demand. So even though we get in at 471 and we hit a high here, the high here is 493. I would not have gotten out of this trade. This seems to be just about within my 5% pain threshold. And the system doesn't show an exit as well. So we do come up a little bit, and then we start making our way down again. So again, from 471, we get down to as low as just about 400. We almost touch 400. It's 402 here on the NASDAQ. So even if you had taken profits at the 10% range, at the 10% level, you never get to the 20% level. But when these things fall, and you've noticed this in your trading, likely if you've been trading for any amount of time, when we go up, topping tends to be a process, whereas bottoming can be an event. And when we look back on this chart here, let me zoom out a little bit. If you look and see how long it took us to get from here to here versus from here to here, the drops are much more quicker than the rises. Now, what the heck is happening now? We were looking for, when we were talking about this in our market chats, we were actually looking for new shorts here. So as I mentioned, Vince likes the 20-day. The victory system is based on the 20-day simple moving average. So we were actually looking for new shorts here, which never came. And then now we've got a bit of a mixed signal on that system because now we're above the 20. And this is really interesting to me here, that we've now got, by end of day, if this holds, we now actually have a new long on the Qs. Does this mean that the whole tariff issue is behind us, or price action is telling us that the tariff issue is behind us? Remains to be seen, but I do like this, and I like the fact that we've now triggered a new long just today. If I'll take a look at SPY, bring that up here. Just bear with me a moment here. So SPY, we expect it to look very similar, but SPY looks like we've got this new long that happens on the 24th of April. And the short on SPY, the previous short, actually, I just want to make sure that we're using the right expert here. Yeah, I thought that looked more like victory than. Okay, so there's the velocity there. Wait for that to populate. Let's give that a moment here. Okay, so again, here's the we had the symbol we had the short on NASDAQ right around the 11th of March, and we've got the same one here around the 11th of March. So you will get trades where you can just sit in the trade until you get an exit. That would not be the way I would play it, because when the exit does come, you may be at a level that was even higher than where you got in. So what we talk about in our training sessions is where to take profits. As I said to you, getting in is the easy part. Finding a winning trade is the easy part. It is actually cashing out and knowing which levels to take the trade off at that I find is the harder part, because you will get this, you'll be making money along the way, and then this will happen and you'll give it all back, and you're left wondering what the heck happened. Especially in this kind of market where one tweet, one message, one note, one interview from the president can really change things around. All right, let me show you another trade. Let me show you Palantir. And there's Palantir there. All right. As I mentioned, there are two versions of this system. There's the day trader. I'm going to show you all of this stuff on a 5-minute chart as well, and then I will take some symbols from you. Jeff, is there a way to just keep the one expert advisor on instead of having to change it on each chart?
Yes, sir. Go ahead and attach it, and I'll show you how real quick. It's a real simple setting.
So I'm going to detach it first, and then I'm going to go to expert advisor and attach, and
yeah.
So go down to velocity daily, attach.
Mm-hmm. And then just click on tools up in the middle, and the file menu, file edit, view, tools, right above the indicator quick list.
Yep.
Get closer. Yeah, tools options.
Mm-hmm.
And then chart options at the top there. And then use chart as template.
Use chart as template. Thank you.
Click OK.
Thank you. So Palantir, I'm assuming there isn't enough information to paint the signals. Is that right here?
It does look like there's not enough data that's loading in to kind of power the expert advisor. Now,
yeah, do I have the right symbol here, Jeff? So I use PLTR dot
.o. I think it's a PLTR.o because I look at Palantir.
Yeah, do you remember they had changed? They were on, I think, NASDAQ first, then they went over to
.o though.
.o?
Yeah. It just went over to, and it won't show up in the list because they just changed it. But if you click select instrument, it'll work. I promise.
Okay.
I looked at it earlier today.
Yeah, this was one of the. There we go. See, that's the kind of chart I want. And Jeff and William were kind enough to suggest that we paint all the bars green when we're in a long trade, just so it's visually easier to see, and paint the bars red when we're in a short trade. So I've got to go back. I mean, is this the entry here? I don't even think that's the entry. Jeffrey, how far back do we have to go here to find the entry on Palantir? There we go. May 11, 2023. So my trade on Palantir was at the $11 mark, and this is, where are we here? Right around 11.50 or so. And I gotta be honest, I was not looking at this as a swing trade. I kind of just like Palantir because everyone on Reddit told me I should like Palantir. So I bought some shares, and with really not really high hopes for it. And we kind of, we do well. We get up to about 20 or so, and we get up to 40 or so. So it was right around this point here in our market chat that I said to everyone, I'm getting a little leery about how quickly this has gone up, especially at this point here. So I bought a $40 put option for January of 2027 just to cover myself, and it would have been a good trade even with that, because my cost base on the trade was 11. I bought the $40 put option, which brought my cost base up to 18, and I was happy with a guaranteed $22 profit. But then we got this earnings report and just pouring gasoline on the fire here. So we get to this point at about 125 or so, and then we get this really ugly bar. You can't see it here, it's not colored red, but this drop here was significant. And I remember looking at this in overnight trading, and I'm grateful that they have overnight trading, because the next day I think it opened or got down to as close as 95. I was able to get out at 106 or so. And now we've got this nice, what looks to be a nice little cup and handle happening with a gap here. So we'll see what happens with Palantir. Some other names, let me bring up my list. Jeff, are there any requests for symbols?
Yes, there are. We've got Chris who's asking to look at LZMH as SOFI, SOFI.
Okay, SOFI. Let's look at SOFI first. All right, so SOFI, this one here. So SOFI, and I'm glad, who was it that brought this up?
It was, this is Greg. It was Chris. Oh, sorry, Jeff. I thought maybe you'd left.
You're fine. I can't find my mute button sometimes.
That's okay. Who was it that brought this one up, Jeff?
Chris Wallace.
Chris, I'm glad you brought this one up, and I'll tell you why. Because I want to show you this specific area here. I want to zoom in on it if I can. The way we've designed this, and as I said, we're using I'm using personally a 10% stop loss. And the reason I'm doing that is because most of the time it will be in excess of what you'll see as the exit here. So the way we're looking at this and we're focusing on this area here is we want to look at trades where if they don't work, we're out for a small loss. If they don't work, we're out for a small loss. In fact, when they don't work, you can actually be out just at break even or maybe even a profit sometimes, depending on how long you're in the trade. But when it does work and you get in at this price here, where's the long here? There. And the price here being about 775 or so. When it does work, you're getting up to 16, you're getting up to 18, and you're taking plenty of profits along the way. And even if you had done nothing except just wait for the exit signal, From 770, you'd be out at a close of 1118. It's about a 60% profit just by sitting there, not doing anything, just waiting for the signal, the exit signal to pop up. Here, again, on the 11th. So the 11th of March seems to be an important date because we've looked at SPY, we've looked at the Qs, we're now looking at SoFi. We do get this move up from the 11th. So yes, there is a bit of pain here. You never get the exit. If you can sustain or tolerate this much pain, you'd still be in the trade, and then you go from a close of 1126 down to as low as 980, excuse me, as low as 860 or so. And now it looks like we're getting yet another long signal here. So I'm going to be watching this one a little bit more carefully. Jeff, what was the other one?
Let me find it again real quick. It was LZMH. L Larry, Z Zebra, M microphone, H hotel.
Okay. Jeff, I suspect there isn't enough information on here. This looks like a new issue.
It does to me as well. Yeah.
Yeah. So there likely isn't enough info on here for us to make a decision with this. But why don't we look at this on a 5-minute chart and see what we find here? Now, we have a separate standalone system for the day traders, and Jeff will talk to you about that. So this is on a 5-minute chart, and our long here comes right around 925 or so, and we take off, get to about 1050, come back down. With a 5-minute chart, you're going to get a lot of ins and outs. If you're going to trade an intraday chart, my suggestion would be to look at something that's 15 minutes or so. With a 5-minute, and I'm going to show you, let me show you 5 minutes on the indices. And then we'll look at 15 minutes as well. So this is the 5-minute on the Qs. So we get our long signal. Let's talk about the short signal first and the exit that we had. So as I mentioned, 5% for indices, 10% for individual names on a daily chart. Certainly make the adjustments that you need to on a 5-minute chart. So here your entry comes around 464.96, call it 465, and you're out at 469 or so. So it's a $4 loss. And then when you get in here at a close of 470, 486, you probably hit 490 or so, and then you're still in this trade right now. If you hadn't taken profits along the way, you'd still be in this trade. If we take a look and go further back, you'll see the stretches that we have of greens versus the chop are very, very significant. So more stretches of green where we get in here at 440. If you had done nothing except just sit in that trade until the exit comes, you're in from 440 to about 465 or so. And all you're doing is just following the signals. You're not doing any profit taking along the way. You're not overthinking things. Is it the ideal way to trade? No, I would actually take profits along the way and then let the last bit of the trade run until you do get the exit. If we look at a 15-minute, or let's look at a 30-minute. Again, you see all of this green getting in here, 460, you're still in that trade at 486. This entry here On the 16th of April, around 450 or so, you hit a low of 430. So on these intraday charts, you can probably play this with zero DTE options, or I would do it with zero DTE option spreads, just because the theta decay is so significant that sometimes the trade doesn't work right away. But if we look at this one here from 486, we get a couple of nice gaps down, and we get down to, does that seem right? From 486 down to 410 over the course of 2 days. I guess we did have some of those days early on in April when the tariff talk was a thing. Here's another stretch where we look at this short from 530 on a 30-minute chart on the 21st of Feb, from 530. Again, if you do nothing and just wait for the exit signal to pop up, you're out at about 486 or so. So we get in on the 21st of Feb and you're out on the 24th of March. You're in the trade for a month, just waiting for the exit signal to pop up. If you took profits along the way, you'd be here, possibly here, again here, and then letting the last of the trade run, and you'd be out right around 486 or so. If we look at it on an hourly, again, you see the same kind of patterns. You see these long stretches where, in this case here, you're in at 460 on the 23rd of April. Why that's happening, we don't know, nor do we care. If you're watching the news, and the news is going to find things to talk about. If you're trying to overthink and you think you know more than institutions do on what's happening with tariffs and who's going to get the benefit of what, you're likely not going to be as fast as the institutions are. So what we're doing is we're following price action. We're seeing what's happening, and we're trying to predict what is going to happen next using this system here. Again, going back a little bit, we caught that move in March, at the end of March, from 486 down to about 400. We caught an earlier move from about 530 down to, again, if you had done nothing, the exit here at 486, going back even further. And I'm glad this area has come up, because we're focusing on this area because we want to make our ins and outs as infrequent as possible. But when we do get the in and out, that it's a small loss, because it will be more than made up, especially if you're doing this with options, with limited risk or with defined risk. We know that we are going to get these kind of trades that will make our month, make our year, especially in a significant bull market or in a significant bear market. You don't need many of these trades to make a lot of money. And that's what we're looking for. We don't have to have a high winning percentage. We just have to have a winning percentage where we make more on the trades that go our way and lose less on the trades that don't go our way. Jeff, symbols?
Found it. I found my mute button. Stephen wants to know, does your program work in multiple market? Like, can you use it with currencies, for example?
You absolutely can. For currencies, let's look at, Jeff, for USD CAD, it would be CAD equals?
Yes.
Thank you. So I've got it back on the daily time frame. Maybe we can go down to a shorter time frame. Jeffrey, did I do something wrong here?
Yeah, I think just type CAD equals, not you don't have to do the USD.
Okay.
So just type in CAD equals.
Mm-hmm.
And hit it. No. Take out the USD.
Oh, take out the USD.
Yeah, that's not
Okay.
required.
Thank you. So let's look at this on a longer time frame first, and then we'll look at it on a shorter time frame as well. So on a longer time frame, I prefer, because I just find it too stressful to be watching the markets in half-hour segments or on 15-minute segments or, my God, 5-minute segments. I don't know how you all, how day traders do it, but to make $1 on a $20 stock in 5 minutes, it's great. It's just not for me. I would much rather take this trade where I'm in at 136 approximately, or 135 and change, ride this all the way up to 144, and then ride it down from here, from 139.53 down to about 138 or so. And if we go back, you can see we've got these significant areas of green. And again, yes, you are going to have these. And this is where the risk management and position sizing really, really comes into play. Because if you can control this area here, you can throw a dart and make money in this area here. And this is what we talk about during our regular updates or regular market chat sessions with our group on Mondays, Wednesdays, and Fridays. How to position size, how to control risk, and how to take advantage of these big trades here. Let me show you MicroStrategy, or I guess MicroStrategy is a proxy for Bitcoin, so let me show you that. So here's MSTR, and you can see the long here comes on MSTR back in September of last year. This is pre-election. So again, we don't know why this is happening. We just know that prices showing us, or prices indicating that this is likely to go higher. Of course, we get the election results that come out, and anything related to the crypto starts taking off. But we were in this trade about a month and a half before all of that started to happen. So our entry here comes right around 150 or so, and we hit a high of about 550 or so from September to November, so in about 2 months. And we come right back down. Again, if you had done nothing except just stay in the trade until you got the exit, from 150, your exit comes around, let's call it 240 or so. Where are we here? Just about, let's call it 250 just to make things easy. So from September to Feb, you've gone from 150 to about 250, just sitting in the trade and not doing anything. If we go back a little further, you can see our previous entry on MSTR. We've got to go back a few years, and we're here in October of 2023, price there 45, and we hit a high of almost 200. We get out at about 135 or so. So again, if you had done nothing except just sit in the trade, drink a beer, do whatever you want, watch the hockey game, and wait for the exit, log on, call it a day. And that's what we're looking for. We're looking to minimize these areas here, or to minimize the damage during these areas here, and let you enjoy the ride up on these areas here. Jeff, next. Jeff, do you want to take over now? It's about 55 minutes past.
Yeah, I can definitely do that, Rahul. Let's see. We did have, actually, I'm going to show one of the symbols Daryl was asking for. I've got it ready to go as car. But I just wanted to talk a little bit about what this is and kind of how to get it. Rahul, thank you for coming. Welcome. I hope you enjoyed your first presentation with us.
I really did. Thank you so much, Jeff. This is like the first pancake. You know, it's never perfect, but the next ones will be better.
You did great.
Thank you.
All right.
I appreciate it.
Let me go ahead and take this real quick, and then I will show this car chart. Rahul, thanks again for being here.
My pleasure.
Let's see. I'll do this. move this over here. And the reason I pulled this up, Daryl, is just because it was one of the ones you're looking for. Let me move my picture of me over out of the way and just kind of talk a little bit about what this is. To be clear, we're not quite ready to release this as a product yet. So some of the look and feel might change between now and release. We're very, very close. We're hoping to get it ready for today, but we don't release software until it's ready. So right now, what we're going to kind of do is talk a little bit about what it is, what it looks for, that kind of stuff. Here's an example of car. This is a fairly long-term system. As long as the stock's moving in the direction that you want, it's going to stay in there. The recommendations that we have is once you get a signal, it's going to give you the first, the second target, and the third target. But this is something that once you get through those 3 target levels, you can hold on to for basically as long as you want to. So right here, everything you can see is annotated on the screen. You've got a buy signal. This just came up with a buy signal. And if I hover over it, it's going to show it on April 25th, so just a little bit ago. You can see up until that time we were short, had a nice long-running short there. So it works on a lot of different time frames. This right now is a daily one. There is an intraday that Rahul was showing you that you can apply to intraday as well. What I want to show you real quick is how to scan. I've already run the exploration, but one of the things I think MetaStock does far better than anything else or any other platform is it has the ability to run an exploration. I'm going to go ahead and I'm going to open up what we call our power console right here, and I've got it already set to scanning. We call it explorations in MetaStock, but you can scan it right here. And what I can do is I can scan anything, any of the following things for the velocity setup. I can look for buy signals. I can look for short signals. I can look for intraday buy signals and intraday short signals. And what I did is I just ran the buy signals. So right here, I've got a buy signal. I've got the list of, I basically scout the Dow Industrials, the NASDAQ 100, the S&P 500, and a few other things. And it only took me a minute or so to scan. To save that minute, I'm just going to show you the report real quick. So what I'm going to come in here is that I'm going to go in, I'm going to open up that report, and out of the stocks that you can see right here, it rejected about 481 of them. We had about 37 that came back as results, and I'll have the ability to just focus on stocks that have an opportunity. So when I'm trading, I just want to have a list of the stocks that have an opportunity. So right here, you can see if it's a long signal. You can see what the different targets are, and you can see what the close price is. And there's 2 versions of, there's a strong buy, and then there's another just buy. Okay. If I wanted to see just the stronger buys, what I can do is I can sort based on the stronger, the long plus column right here. And you can see right here we have a group of them. Let's go ahead and just open up American Express. I'm gonna go ahead and do that. And we can kind of take a look at it real quick. So I'm gonna go ahead and click into it. Let me just open it up. I thought I opened it, but let's just open it up real quick. Here's American Express. Came up with a buy signal when we ran the exploration today. I'm gonna go ahead and I do have the expert advisor. Here you can see the strong buy signal with the long plus issuing right there on the chart. I can go in here, and this might also change a little bit, but I can open up what we call our expert advisor commentary. I'm going to go ahead and do that. The look and feel of this, again, we're almost done with development, but we're not quite there yet. So the look and feel may change a little bit, but right here, you can see right here, we triggered into that long position. Right now, it's telling us that there's a long entry signal that's available, giving us some advice in terms of where our initial stop losses should be right here, what type of options we could look at if we're looking to do options, and then our initial profit targets, that first, second, and third one. So spelling everything out that you need to take the trade, the information you need to know. If you're interested in options, what you could be doing to kind of leverage those options or play with those options, all that stuff is kind of spoon-fed to you. So it's looking really, really cool. Just a little bit of finish work and some testing, make sure everything operates the way that we want, and we'll have it available for you. So as part of the velocity system, let me go ahead and go over here real quick. Part of the velocity system, it is going to include the intraday system, the one that you can apply to intradays. It's going to include the long system. It's going to include those floor explorations that I showed you, the long and the short, the intraday long, the intraday short. All of those are going to be available as part of it. Here's a picture of the box and kind of what it's going to look like. One of the things that we're also going to throw in, and I just love this because you can get it, you get a lot of help with it, that kind of stuff. As part of the Velocity system, we're going to throw in the Trading Wins membership, the Trading Wins membership. With that, you get daily trading ideas, live weekly training sessions, on-demand technical analysis training videos, and option trade ideas. And these are great. They come out a couple times a week. You kind of get to see kind of some ideas of some stocks that you might be interested in. The service, if you go up to tradingwins.com and you sign up for that, it's going to be like $97 per month. It's going to be included with this package is at $11.97. Okay, so coming back to this page, the retail cost on this is normally $9.97. That Trading membership would be $11.64. So the total value with that would be $3,161. We're not taking orders for it yet. We're taking pre-orders for it, which means if you want to go ahead and get your order in, we will charge you when it's available and when you can actually download it. I anticipate that might be sometime this week or next week. We should have it available by then. So we're going to give you a pre-order price if you want to try it out. It's $9.97. We're going to give you a money-back guarantee, so you get 30 days to evaluate it and make sure it's something that you like, that's going to be helpful for you, that's going to work for your trades. And to do that, since it's not something that we're actually charging for now, you want to do a pre-order. To do a pre-order, give us a call, 800-882-3040. Go to MetaStock.com/sales chat to kind of get your order pre-ordered there as well. So as we get it available, again, we're not going to charge until it's available. We'll give you a money back guarantee on that. If you don't use MetaStock, if you haven't used MetaStock before, I'm going to talk a lot about MetaStock coming right up in my session, but I want to reiterate, it's been the highest rated software program in its price category for 32 years in a row. We'll give you a free trial to that. So that means if you want to try out this thing, this Velocity system, you're going to get a money back guarantee on it. You're going to get the training, all of the stuff that you need to get started. If it's not helpful for you, there's no risk, except for a little bit of time. 800-882-3040 or metastock.com/sales chat. Rahul, thanks for joining us today. I know there were some symbols that we didn't look at just due to time. If you'd like to look at those, or if you have more questions, give us a call. We can send you charts and that kind of stuff. Actually, we might, send us the symbols. Get in touch with us. We'll help you get charts for anything you want to see this on. So thank you for that. Okay, cool. All right. I want to say a few things. I want to say thank you to Stocks and Commodities Magazine for being a sponsor for us. They've been a sponsor of the MetaStock Trader Summit for, gosh, I think it's 14 or 15 years ago. We've been doing these online events for a while. Stocks and Commodities Magazine is a great magazine. It's got 17,000 articles. They've got 1.3 million subscribers. They've been actively creating their magazine since 1982. As part of your subscription, you get access to all of those articles. It's a great resource. You can search them, you can find exactly what you're looking for. And you can do that. If you'd like, you can go to www.traders.com. A big thank you for the premier magazine for technical analysis out there, Stocks and Commodities Magazine. So I also want to talk a little bit right now, just because I can, about the new community that we're building. So we've been doing the online traders forum for I think a year or so now, maybe a couple years. Launched it last year. You can it's a live community. You can go in there, you can talk about trading ideas, you can learn about technical analysis. There's a lot of people in there right now talking about the trades they're interested in. And again, it's designed to be a community of traders helping traders. Tons of really, really good stuff up there. I'd like to invite you to join us for free at www.thetradersforum.com. So, and then of course we're MetaStock. And this side, Greg, means it's time to give away a prize. Are you ready?
I'm ready for that. I have to mention,
go ahead.
You and Rahul both have nerves of steel, because as I was watching his laptop battery clicked down during his entire presentation. I started, little beads of sweat started to form on my head. And I should also mention that may have contributed to some of the performance issues he was having, because obviously when your many laptops are set up to slight performance for battery power, so that might have contributed to that. That's the only reason I mention it.
Yeah, I didn't notice any real performance issues, but
it seemed like it was loading a little slow, but that could just be me.
Yeah. Also, like the performance, like when you're sharing a screen, it takes longer too, right?
Yeah, there's that too. Yeah, people should recognize that. Yeah.
We got.
Why am I here again? Was it to criticize you?
Prizes.
Oh, okay. Well, I also want to mention about the forum. I have to mention to people, you put so much time and love into that forum. They have got to go check that out. It is an amazing free resource for people to go to and just hang out in the community and learn about trading. And you really need to do that. There, I said my piece.
There you go. Go on.
Well, I am the marketing guy.
No, we have like lots of fun up there too. Like, so there's tons of like, actually the forum is Steve Bigelow actually had a chat room in a forum. We love his methods and wanted to keep his work alive, and that's really kind of where the forum started. But we do have all kinds of really cool events. So we had John and Jack Kosar in there for Ticker Talk last week. We do all of our conferences in there. We had Larry McMillan, Jake Bernstein. We had so many good guest speakers that just come in, and we'll chat about the markets and what we think is going on, what we expect, and kind of what we're looking for. It's a lot of fun. TheTradersForum.com. What were we talking about, Greg?
I think we wanted to give some stuff. I mean, not that giving the forum away is not already enough, but I think he wanted to give away some fabulous prizes.
We're going to give away this one. We're going to give away Steve's book, Candle Profits, Eliminating Emotions. I've read most of this book. I'm still working on it, but it's a great book in terms of helping understand what candlesticks are and how you can use them in your trading. And so what I would like you to do, Greg, is give me a number. Let's talk about a number. That number, I'm coming over to my spreadsheet. It can be anywhere between 1 and 4,225.
Okay, according to the Google random number generator, that's 3,598. 3598. And while you're looking that up, I'd like to point out also that the candlesticks book that you just pointed, I should say candlesticks generally are discussed in some great detail by on recorded learning in the forum, which that is not really part of the forum, but it is part of the forum. You can subscribe to a monthly, what is it, $47, Jeff?
Correct. Yeah, it's $47 a month, and it includes, I think, 33 hours of Steve's training.
And very extensive libraries of Steve Bigelow's, and it's great explanations of what no one explained candlesticks better than Steve Bigelow.
Yeah. And it's great. I'm still kind of going through all the training, but it's awesome. Like, I consider Steve to be one of my biggest gurus. I certainly learned a lot. Certainly he's fun to learn, listen to. And yeah, 33 hours of training for like $47 a month. And we keep adding to the library. I just sent you another list of videos to get ready to put up there. So there you go. All right, the winner was, I forgot what we were doing.
Squirrel.
The winner was Stephen Z in the USA. Congratulations, Steve. If you're in,
congratulations, Steve.
If you're listening on GoToWebinar or YouTube, let us know. And because we love it when somebody that's here wins a prize. So congratulations for that. Greg, do you want to introduce me? Look at this.
Sure. I was just about to get off, get out of your way, but yeah, Jeff Gibby has worked for this company for about 47 years, which is incredible because he's only about 42 years old. So I don't know how that math works, but honestly, he's been, how long, 27 years?
I think so, yeah.
Yeah, 27 years. He's been here longer than me, and I've been here for 20 years. So for most of that time, all of that time he's been in sales. Most of that time he's been the director of our sales division, and he also does a lot of the development work with partners like Vince Four and those kind of folks. He's a super swell guy. He's also pretty much the poster child of MetaStock live events. If you ever see a live event, it's usually hosted by our very own Jeff Gibby. And today, Mr. Gibby is going to talk about MetaStock, and I can't think of many people that know more about MetaStock than Mr. Jeff Gibby. And look, there's his high school photo. No, that's actually a recent one.
Yeah, actually, we just updated this one, but that's a different story for a different time, I think.
All right. Well, break a leg, Jeff. Carry on.
Thank you, Greg. Appreciate the introduction. So I'm going to read this again just because the lawyers make me. Today's demonstration is designed to instruct you on using MetaStock and the accompanying software plugins. It's not a recommendation to buy or sell, but rather guidelines to interpreting and using specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading. MetaStock shall have no liability for any investment decisions based on the use of the software, any trading strategies, or any information provided in connection with the company. MetaStock does not endorse the purchase of any security, nor is it paid for the promotion of a security. No information contained in the presentation should be construed as investment advice or the solicitation to buy a security. So there you go. Hope you enjoyed that. As Greg said, I'm Jeff Gibby. Actually just clicked off of the YouTube, but let me open that up again so I can see the questions. If you guys have questions, make sure to type them in here. I do want to spend just a second talking a little bit about MetaStock. As Greg said, I started here 27 years ago, and I started in inside sales. And there's a lot of you that are in the audience that talk to me a little bit about maybe like stuff you were having with your trading, maybe difficulties you were having with your trading, and that might have been like finding the right stock, using the right methodology, all that kind of stuff. And over the years, so I started in inside sales. I did that for about a decade. It was a lot of fun. I talked to a lot of traders over that time period. For the last 17 years, I've done kind of a lot of different things, but I've always been charged for partner programs and these events. So these events are a lot of fun for me to run. We bring in a lot of people that know a lot about the market. I have had the pleasure of working with a lot of people that really know a lot about the market and know what they're doing. So if you have questions as we go, type them. Every time I look in this direction, I'm looking for questions. And if every time I look in this direction, I'm kind of trying to remind myself where I'm at. Anyway, but if you have questions, I'll do my best to answer them, all that kind of stuff. So the one thing I would say about MetaStock, there's been a whole bunch of things in terms of the stuff that's available. When I started at MetaStock, we were wholly owned by Reuters. Reuters became Thomson Reuters. That part of the business they sold to Blackstone. Blackstone sold that to the London Stock Exchange Group. And somewhere in the middle of that, we actually purchased ourselves back from Reuters. So we still have a really good relationship with those guys in the institutional space. We still get all of our data, all of our news, all of our information directly from one of the biggest providers on the planet. So they offer everything I'm going to show you. You can use in just about any market on Earth. We offer one of the best. They spent $1 billion designing it, one of the best news and information systems. It's used by a lot of hedge funds and banks and that kind of stuff. So that's how I'm going to talk a little bit about that. The one thing that I do like to talk about, and there's a couple, and I've mentioned it already, but there's a couple things I really want to talk about before I want to get in my class. One thing that we're super proud of is for 32 years in a row, MetaStock has been rated the best software in its price category. And we're going to talk a little bit about like how to use it to do scanning. I'm going to talk about some of the systems that are involved in MetaStock, some of the ways that you can use it. We're going to talk a lot about how, you can also use it to forecast, test ideas, see what works. And we're going to be talking a lot about that over the course of the next week. Okay, today I'm going to talk about some of what I call the hidden gems in MetaStock, some of the systems I really, really like in there. But I want to kind of stress, this isn't a software that came out a year ago or 2 years ago or anything like that. It's a software that's been in active development for decades. And when I show you kind of some of the methods that are built in there, I want to stress the point that I'm only showing you a couple of the methods of hundreds of methods that are in there. So we're going to go ahead and get started. We're really proud of that award, and I like to talk a lot about it. So the other thing I like to talk about is our support. It isn't uncommon for our support. We keep more people on our support desk than we keep at sales and marketing put together. It isn't uncommon for them to receive 100% satisfaction rating in their support surveys every week. They do a really, really good job. And I think one of our really advantages is our people and the helpfulness that they show. And I think if you've ever talked to sales or support, probably went away with a really, really good impression. It's been a great company for me to work with. It's been a great company for me to work as a part of, and just the ability to demonstrate and to kind of represent and to show world-class software that year after year after year is rated #1 is awesome. So I have a question here on the screen that you probably may not have read, but I want you to answer. What do you think is the best previous profession for trading? Okay, is it a psychologist, an engineer? Is it a teacher? Is it a pilot? Or is it an artist? So A, psychologist, B, engineer, C, teacher, D, pilot, E, artist. I want you to guess. There's been some study. This is a study paper that's a little bit, I think we've been talking about it for a number of years now, but I want you to guess, okay? What do you think it is? Scott Boy in YouTube says he thinks it's a pilot, okay? And I think there's some legitimate answers to all of this. Answers a little bit later in the week, we're going to have, in terms of psychologists, Jake Bernstein's going to come in. He's going to talk a little bit about his JBXC method and how that works and all that kind of stuff. He started as a psychiatrist, not a psychologist, but as a psychiatrist, and is a really, really good market expert, has written a prolific amount of books on it. So that could be a good answer. Another good psychologist that comes to mind is Dr. Alexander Elder, somebody I have a lot of respect for in the market. So I think I have some answers to that. Daryl says he thinks it's a pilot as well. So we've got 2 answers of pilot. Chuck Hughes, actually we're going to have Blane Markham kind of come in and talk about Chuck Hughes' method a little bit later today. He was an airline pilot. Another friend of mine, Greg, oh my God, Greg Morris, took me a minute. Greg Morris was actually a Top Gun. He developed a couple of methodologies over the years. He wrote a book on candlestick analysis and did a whole bunch of statistics on them. He was a Top Gun. He ended up, before he retired, he's been retired, he comes into the office every year. We love it when he does. But he ended up managing something like $19 billion over the course of the years. So the actual answer that we're looking for is, and Kelly said, pilot, okay? And the reason for that is, I think, discipline. With a pilot, what you have is you have the ability, you have a very good disciplined approach. When you take off, you have a checklist. When you land, you have a checklist. I think that's why it's a pilot. Okay. One of the things I think using technical analysis helps with is that discipline. If you know who this is, his name is Richard Dennis. He was one of the original turtle traders, which is something we won't get into a lot of details in it, but him and his buddy Bill Eckhart formed a group of the turtles. They did a turtle trading experiment where they gave them all capital. They went on to help them test and trade their methodologies with a group of traders that were just off the street. One of the most successful trading enterprises, experiments, whatever you might have in history, the original turtle traders. And what he would always say is, I always say you could publish rules in a newspaper and nobody would follow them. The key to trading is discipline and consistency. So there you go. There you go. All right, very cool. All right. As I said before, what I'm actually going to do is I'm going to go in and I'm going to talk a little bit about, MetaStock's a huge product. What I want to do is I want to go in and talk about some of the methodologies that over the last 27 years I've really, really liked. Okay, some of the things with MetaStock, once you get a product that's been developed for several decades, there's a lot of things in there that might kind of lose focus or lose attention. One of the things that I learned, Rahul just spoke. His business partner, I think is a fair way to call it, his friend Vince Vora. One of the things that he'll come in and talk tomorrow, but one of the things that he likes to find stocks that have been into breaking out of support and resistance. A lot of people want to find stocks that have broken through resistance or up, down, below support, to find stocks that are good opportunities. The way Vince kind of always talks about it, and he's also like Steve Bigelow, somebody that I've learned a lot from, is once you find a stock that's breaking out of resistance, if it's hitting like a new all-time high or something along those lines, it doesn't have a lot of resistance in front of it. It's a lot easier for it to move between level to level and level. Okay. What I want to do first is I'm going to show a methodology in MetaStock that shows how easy it is to find stocks that are breaking out through these support or resistance levels. So let's go ahead and kind of start with that. If we have time, I'm going to talk about one of my favorite methodologies in MetaStock, the RMO trading methodology. And then if we have more time, there's a really cool method called the Haguro method that I probably actually won't have time to talk about, but it's okay. We'll just talk about the first two of them for now. If we have some more time, we can talk a little bit about Haguro method as well. So first of all, what I want to do is, and actually we talked a little bit about turtle traders. They like to find stocks that are breaking out into all-time highs. They use Keltner channels, I believe, but let's kind of talk a little bit about support and resistance, identifying it. One of the things that you might find is a problem for you is identifying levels of support and resistance on a chart. What I want to do is show you a tool set in MetaStock that's called the dynamic trading tools. It'll allow you to kind of show long-term support, resistance, short-term support, resistance, and it'll even look for ascending and descending triangles as well. So let me go ahead and kind of do that. I'm going to go ahead and what I'm going to do is I'm going to go ahead and right click on the chart here. I'm going to go to apply template and I'm going to go to DT right here, dynamic trading tools. Okay. Let me go ahead and apply this to the chart. We're looking at AXP. I'm going to go ahead and apply this and just kind of show you exactly what this is doing. Okay. Okay, and I want to make it one of the things that is pretty easy to do with MetaStock is if I want to make lines a little bit bigger, because right now what we're doing, I'm kind of broadcasting this on the chart on the screen, and even to me, these lines are a little bit small for me to be able to see. So if I am having a hard time to seeing them, I'm sure you're having a hard time seeing it as well. So if I want to change anything on the chart, I can double click on it. I want to make these a little bit bigger so you can see exactly where they're at. And I think now it's going to be a little bit more visible for you for that one. There's one right here that I want to change as well. I'm going to go ahead and make that a little bit fatter. I'm going to go ahead and click on OK. And we'll go ahead and kind of blow this out here a little bit. And I just want to kind of talk a little bit about the lines that are forming. So I'm going to go ahead and kind of make this a little bit thicker too. Go ahead and click OK. And this one. Okay. Okay, so you should be able to see that. Greg, your mic's on.
Oh, well, that's a good thing I wasn't saying anything bad about you.
Yeah, I could hear some breathing or something.
You're doing great. I was just cutting in to tell you how good you're doing and give you a chance to get it out of your bottle. Keep it up.
Cool. All right, I want to walk through the lines and exactly kind of what we're looking at. This is an automatically created support and resistance levels based on kind of the algorithm they've put in, and this has been included with MetaStock for a number of years now. I believe, well, quite a number of years. I don't even remember exactly the last version. Right here, we've got lines of different thickness. Right here, you've got a shorter term. If I hover over it, it's going to tell you it's a shorter term resistance level. You've got one right here. You've got one right here. And every time a new level is formed, it's going to kind of update that line. Okay. We also have right here a longer term resistance level. Okay, it broke through that level. If I want to kind of see where that started forming at, you know, Z actually kind of had that started forming right here back in July of 2023. Finally broke up above it in around December of 2023. Look at how well this kind of behaved as a support level too. Kind of came up, came back and tested it. It held, and kind of from there it really went up from 180 to almost 320 at the peak here. Okay. What I want to kind of be able to look at is for stocks that are breaking through that support level. okay, or these longer term support levels, okay. These shorter term levels, here we had a level, here we had a level. These are all going to, again, update. And if we set a new shorter term resistance level, it'll automatically play that. So you can see where it was here. Once we kind of set a new one, it kind of moved up here. These are just all automatic. Automatic means they're objective. And that's always a good thing. Also means since they're objective and automatic and we can kind of have a program we can scan for them. Right here, you can kind of see where we kind of had this longer term trend line down, okay? That's this red line that's kind of pointing down here. And a little bit of a formation here where we had an uptrend short. And we've just maybe a few days broken out of that channel, out of that wedge, okay? You also have on the support side, you have shorter term support. And down here, we're going to have that longer term support. So these are automatically drawn for you. On American Express, they've behaved pretty well. Once we kind of break through that longer term resistance, it held for quite some time and kind of continued to go up. Okay, and as we kind of moved up, we had more support and resistance. If I, as a trader, want to be able to find stocks that are breaking through any of these levels, whether it's the trend lines or the support or the resistance areas, it's very, very easy to do. I'm going to show you how to do it. We're going to use our scanning tool to do it. So I'm going to come in here to the Power Console here. I just showed you how we can do the velocity scan with the Rahul stuff. I'm going to go ahead and uncheck that because that's not the scan that I want to run. But I want to kind of show you how to run the dynamic trading tools, the dynamic trend line tools. So right here, we've got the different scans that are available. We have longer support and resistance. I'm going to go ahead and check that. We could run shorter term. That would be the short term resistance and support levels. I'm not going to check that for now. We could also find trend line breakouts. If we want to find trend line breakouts, like when it broke up here, we could run that scans either for the longer term or shorter term as well. Okay. What I want to do is just for the purpose of showing you this, I also want to show you my favorite trading methodology. Well, one of my favorite trading methodologies in MetaStock, the first one I started trading with. But to kind of keep this to kind of a reasonable level, I'm just going to run this scan, okay? I'm going to show you how to read it. So I'm going to go ahead and start this as an exploration real quick. We're going to go ahead and run through it. And it's going to give me, it's going to go through all these stocks. You can see I'm going through about 500 stocks right now. It's going pretty quickly. It's calculating those long-term support and resistance levels and how long ago they broke through support or resistance, okay? And we'll go ahead and let it run and let it complete. Okay. There we are. We're done. We went through 518 securities right here. Now I kind of want to, this exploration report is a little bit different than some of the ones that you're going to see in MetaStock, just because what you're going to have is you're going to have a breakup number and a breakdown number. Okay. That number is how many bars ago it broke out. So if we're looking at 3M right here, a number of them means 1 bar ago it broke up. Okay, through support. Okay, if it says 70, that means 70 bars ago it broke up through support. Okay, if there's a number of 6, that means Abbey Corporation just broke up 6 days ago. And this is kind of how you kind of read it. So if I want to find stocks that have broken through that support level just within the last several days, all I have to do is sort it based on this breakup or breakdown column. Okay, and obviously Fair Isaac broke through major resistance, broke up through major resistance 562 days ago. It's kind of a long time ago. I want to actually just go down here and find stocks that have broken up a little bit more recently, like JP Morgan Chase or PayPal or Regions Financial or the Travelers Group or Trimble. So you can kind of see all of these are kind of showing, JP Morgan Chase is showing a breakup as of the current bar. Okay, that means right now, today. Because one of the things that we just added is it doesn't matter what version of MetaStock you have. If you have DC, it's going to scan today. If you have RT, it's going to scan today. So no matter what kind of, as long as I've got it set for the current day, it's going to be looking for the opportunities that exist today. Okay, I'm going to go ahead and open up JP Morgan Chase. We'll go ahead and open up the chart just to kind of show you, kind of take a look at what's happened since then. And here we go. We've got the chart of JP Morgan Chase. What I'm going to do is I'm going to actually go ahead and apply that template. Okay, and it's called Dynamic Trading Tools. Okay, that'll put all those lines on the chart for me. And again, here you can see just 1 bar ago, it broke up through that level. Okay. That's how that works. Okay, it's easy. All right, let's talk a little bit about something else. All right. Neil asked me to describe the algo idea behind support and resistance areas. I cannot. Thank you for the question, Neil. This was developed by somebody a lot smarter than me, one of our programmers, and it was developed quite a long time ago. So in all fairness, if you want to contact us, Neil, reach out to our sales team and we'll see if we can kind of dig up and get you some more information about the algorithm behind the support and resistance. I really can't do that, but we can kind of show you where they're at. So right here, you've got the, and I'll be completely frank, I do a lot of coding in MetaStock. It's not a hard program to use, but unless I've actually been actively involved in that coding, I wouldn't be able to explain the math behind it on the fly like that. But we'd be happy to kind of look for, if you want to reach out to us at sales@metastock.com or at our sales chat, which Greg is going to put in the chat box because I'm going to ask him nicely. If you want to reach out to us, we'll pull some information. We can look at charts. We're always happy to send you some charts. I just can't answer that question really well. Okay. All right. But thank you for it. All right. Let's kind of go ahead. And I just wanted to talk a little bit about that. Finding breakout stocks, I think, is something that's important. It's something that the turtle traders were looking to do. It's pretty easy to do in MetaStock. I personally, one of the lessons, like I said, that I learned from Vince Vora was to look for stocks that are breaking through support and resistance. He actually liked to look for stocks that were breaking through all-time highs. And the reason that he wanted to look for stocks that were breaking through all-time highs is once you kind of get up into that area, it doesn't mean it's not going to stop. But what happens when you enter an area of congestion is you get a lot of noise. You get a lot of people that are buying that might be underwater, that want to kind of just break even, or people that have kind of sold at that level and are looking to get back in. It creates a lot of friction. And once you kind of get into the point where nobody's bought before, there's not that friction. It generally has. It's the idea behind price and volume. You generally have a much better ability to continue the trend that you're already in. So there you go. All right. The next one I want to talk about is, and we're going to have Rahul come in and talk. Again, I've been so lucky to work with so many different really good traders over the years. I'm going to spend a couple minutes. If you have a symbol, type it in real quickly, because I'm going to spend a couple minutes talking about the Rahul Mohinder oscillator method. I want to tell you who Rahul Mohinder is. Rahul Mohinder is a good friend of mine. He's one of our dealers. He has several offices in India, and he's been very, very successful. He does a lot of interviews with CNBC India and CNN India. They talk a little bit about markets, but his main business is teaching people in India how to trade. And he's been very, very successful at it. There was many years where his business would just double year after year after year after year. And I remember we had him in our office not too long ago, and he wanted to kind of, we were asking him, what are you doing? What are you teaching people that's making me this successful in the market? And what he ended up showing us was a methodology I've probably since then done hundreds of demos on. But it's a methodology that is designed to help you look at support, or not support and resistance, the trend of a stock, and determine how am I going to trade in conjunction with the trend. So we actually bought the rights to the RMO oscillator. It's exclusive to MetaStock. We bought it back in the days of MetaStock 10. So it's been in MetaStock for a number of years. I don't even say it's a hidden gem because I do talk about it a lot, but it's a great methodology. There's some reasons that I like it. In general, it's a trend following methodology. I'm sure you've heard like the trend is your friend, or befriend the trend, or a rising tide lifts all boats. Those are all things that have come out and they're cliches in the market. I need to get to my coffee. This is a trend following system. Okay, it's designed to look for a trend. It's designed to tell you what the trend is doing, and it's designed to help you trade in conjunction with the trend. There are many reasons I like to show it to you. They're on the screen here. Okay, I'm going to talk to you a little bit about how you can get a trial of MetaStock. MetaStock has been the highest rated software in its price category for 31 years in a row. the reason I like to show you RMO is very simple. You know, there's a lot of stuff in MetaStock. There's a turtle trading system. There's hundreds of methodologies. There's ways to go in and evaluate those methodologies. MetaStock in a nutshell is a huge toolbox. What I want to show you is how to use one of those tools that I think is going to help you be profitable right out the gate. Something that's easy, something that's objective, so not subjective, right? Something that uses solid money management, works on time frames that you can use on a lot of different instruments that's going to work. That's why I want to show it to you. So, and then let's go ahead and look at it. Scotty Boy wants to look at MSFT. We'll start there. Okay. Since it's a trailing or since it's a trend following methodology, what we want to be able to do is we want to identify the primary prevailing trend. In order for us to trade with the trend, in order for us to make it our friend, we want to understand what that trend looks like. We want to understand what it does. And to do that, well, we want a good, simple, objective way to look at the trend. So let's talk a little bit about how we identify the trend. Let me go ahead and open up Microsoft, see what other kind of charts that we have out here. MSFT. Okay, I'm going to go over to our charting tab right here and type in MSFT.O. And let's see, do we have any other symbols? Let's look at gold. Gold's been very popular right now lately. Let's take a look at gold. Let's see, we'll look at the spider. We'll look at the Qs. And I think that'll be good. Okay, we'll go ahead and go with that. Okay, NVIDIA. NVIDIA hasn't been as in favor lately, but it certainly has a time where it was. So let's kind of look at that. What I'm going to do right here, I've got the apply. I've just got the type, the symbols that I want to open up right here in the thing. I've separated it by a space. Very easy to do that. What I want to do is I want to apply what we call the RMO trade model, all of the indicators and that kind of stuff. With the newest version of MetaStock, which is MetaStock 19, we actually kind of made a new, prettier version of this trade model. So I'm going to come down here and I'm going to go the shaded model. That's my favorite way to look at it when I'm teaching it. So I'm going to go ahead and open up these charts, and we'll start with Microsoft. Okay, we're going to do three things here. We're going to identify. I hit open, right? Okay. We're going to press the right buttons. Okay, and then we're going to do three things. We're going to look to identify the trend. Okay, when we start to look at trend, we're going to look at long-term and short-term and intermediate trend. Okay, the first thing that we want to look at is the long-term trend. Okay, so I'm going to come back over here to Microsoft since Scott Boyd wanted me to look at Microsoft, and we'll just kind of look at what the trend is for Microsoft. Okay, the first thing that we're going to look at is what Rahul calls the primary or the prevailing trend. This is this oscillator up here. It's called the RMO oscillator. Okay, the way that we read the RMO oscillator is it's either bullish or bearish. The way we determine if it's bullish or bearish is we say, is it above zero or is it below zero? If it's above zero, we're going to say that it's bullish. If it's below zero, we're going to say that it's bearish. Okay, and I'm just trying to mess with the zoom a little bit in such a way that we can kind of just play with this a little bit. Okay, so very simply, this green bar, if it's above zero, then we're going to say the long-term trend is bullish. Okay, we could also look down here because it's also indicated the RMO is bullish, the RMO is bearish, the RMO is bullish, the RMO is bearish. Okay, right now, if we're looking at Microsoft, we just went from bullish to bearish just a day or two ago. I'm going to kind of draw that on the chart really quickly just so we can kind of keep track of where that happened. Okay, right here, that's when we went from down below zero to above zero. So we just had a momentum, or we had a trend shift from being bearish here to being bullish here. Okay, step one, what is the long-term trend doing? There's three steps. Step one, what is the long-term trend? If it's bullish, we're allowed to buy. If it's bearish, we're allowed to short. We don't trade against the trend because it's our friend. All right. If we're down below zero, like we are here in this period, and have been for a little bit of time in Microsoft, let's go ahead and kind of just grab the right toolbox here. Okay. If it's down below zero, we're going to go ahead and we're not going to take long trades. We're only going to take short trades, or we're going to wait until it gets bullish long term. Okay. So step one, are we bullish or bearish? easy, right? Well, right now, as of today, we're bullish. We'd be looking to identify long-term trades. Okay, back here, where Microsoft was up at, where are we here? About 412, sunk down to about 360. During this downward move that we've had in Microsoft, we were bearish long-term, so we'd only be looking to get short-term, or go short. Or if we don't take short positions, we'd be looking for it to get positive. Okay, very, very simple. Okay, that's the first thing that we want to do. Okay, we can look at some examples. Let's look at gold for a second. Okay, gold's been very, very bullish for a number of years, for a while here. You can see we went bullish on gold at about February-ish. The price was about 187. Now it's in the 300s. I'd make a little bit of an argument that if we're only looking to trade the stock long while it's going up, it's going to help put the odds in our favor. And I think that's what technical analysis does in a nutshell. Looking at the spider right now, we've been bearish here through all the kind of chaos. Looks like we're just maybe starting to turn the corner to go bullish now, long term. Okay, so step number one, we want to identify what that long-term trend is. We're going to trade in the direction of that trend. There's two more steps though, and we want to kind of follow the rules. So once we've identified, if we're looking at Microsoft today, we're bullish, we could look to go long. Okay. Notice I didn't say we should go long just because it goes from bullish to bearish or from bearish to bullish. It's just an indication we can start to go long. Okay. The second thing we want to look for is the short-term trend. Okay. The short-term trend is this pink line right here. You can kind of see it. It's a lot more erratic. It moves a lot closer with price action because it's looking at a shorter time frame, and that's why it's called the short-term trend. We read it the same way. So if we're looking right here, I want you to ignore the blue line for now. We'll come back to the blue line. But right here, you can see that the swing trade number 2 came down below 0. Prices went red. It just indicates that short-term, we're bearish. Okay. When it goes up above 0, you can see where it goes up above 0 here, the prices start to paint blue, and that means short-term, we're bullish. Okay. We want to trade these when they match. So if we're looking to go long right now on Microsoft, we have a bullish indication because we just went at that long-term trend. We have a bullish indication short-term because since right about here, we went up above 0. So if we're bullish long-term, if we're bullish short-term, we're allowed to take a long position. Okay. We're not allowed to go short. If they don't match, we're not allowed to go short. Back here, where we were bullish short-term and bullish long-term, this whole area here, we would be allowed to take a short position. Okay, it's that simple. We're just looking at the rules, and the rules are very, very straightforward. Checking the time. Okay, I need to go a little bit quicker, but you get the idea. Okay, if they don't match, if you have long-term bullish and short-term you're bearish, they don't match, you can wait, or you can use the scanner. We just showed you how to use the scanner to identify a long-term or a position or an entry right now. Okay. Step 3, what we want to do is we want to be able to identify the trigger. What's going to get us in the stock? So right now, we don't exactly have a trigger right here actually, technically we do, but I'll get into that in a second. But what I want to do is I want to come back here and kind of talk a little bit about where the entries happened. To kind of refresh your memory, this was the long-term trend, the RMO. The pink indicator was the short-term trend. It's faster moving, it's more erratic. It's the swing trade number 3. It measures the short-term trend. Okay. The other indicator we're going to use, and you might have guessed what it actually does, is called swing trade number 3. It's this blue indicator right here. And you'll notice it's somewhere between responsiveness of the longer term indicator and the shorter term indicator. It's because it's the medium term indicator. Okay. And with this one, it's a little bit different because we're not looking at the medium term trend to determine if we should go long or short. We've already done that with the long-term trend. We've done it with the short-term trend. What we're looking for is we're looking at the medium-term trend to find what Rahul calls a change of force or a change of momentum. Okay, so if I'm looking and we look at the relationship between the short-term trend, the pink line, and the blue line to identify that. Okay, so if I'm looking at here, right here, you can see where the short-term trend came down and crossed down below the medium-term trend. It happened right here on this bar, okay? And as soon as that happened, as soon as that crossed down below the medium-term trend, what you get is a sell arrow on the chart, okay? When it crosses up above, you see it kind of crosses up above here, you get another signal. And then when it came back down, you get a short signal, okay? When it crosses up above, you get a long signal. When it crosses down below, you get a short signal, okay? Or an arrow, call it an arrow on the chart, okay? What this is indicating is a change of momentum or a change of force on the chart, okay? We don't trade that by itself. In other words, we want to take the other two rules in effect. So let's say that we're looking at this one right here, okay? If we're looking at this one right here, we have a little bit of a shift of momentum to the downside. Are we going to go short? No, because we're bullish long-term, okay? We are bearish short-term, but we're still bullish short-term. Until all of those match up, until we're bearish short-term and bearish long-term, and we get the signal. We want all three of those things to happen, and then we'll get a signal. So right here, if we wait another day, instead of being bullish, we go into a bearish phase, okay? So right here, we have that change of momentum to the downside, okay? We're also short, or we're also bearish short-term right here, and we're down below zero, and we're now bearish long-term. Everything kind of matches up. That's exactly when we want to go ahead and kind of structure a trade. We're not going to trade yet. We want to structure a trade. Okay. There's two things that we want to do. I'm going to kind of zero in on this area a little bit right now. I'll go in here. And what I want to do, what Rahul teaches to do, and I recommend if you've been using MetaStock for a while, go look at his videos because he goes into a lot of detail on this. But what I want to do, okay, this is the day that we're going long. I'm going to kind of get this out of the way so we can kind of see it. This day right here. Okay, this is where we're going to go ahead and kind of structure a short position. Okay, what I'm going to do to kind of identify where I want to trade this, I'm going to look at the low value. I'm going to look at the previous low. Okay, I'm going to say, okay, this low value is lower than this low value. Okay, so if we go down below this value just a little bit, that's where I'm going to go short. Okay, right there. Okay, so in other words, if this doesn't kind of go back, continue to confirm, if it doesn't continue to go down, we're not going to take this trade, okay? Rahul wants that additional confirmation. He wants that additional rule in place so that if we just kind of bounce around, it'll help us eliminate some of the whipsaw that you're going to get when stocks go sideways, okay? The other thing that Rahul is really, really specific about is his stops, okay? If I buy this, I want to be able to get out because I'm going to be wrong sometimes, okay? Not every trade is going to work. I want to be able to manage my risk, okay? And to do that, there's a couple of different ways you can do it. You could look at the high here and the high here. You could look at the two highs, and you could put your support, you could put your stop right above here, okay, using the two previous highs. I like to give it a little bit more room personally, and so I'll look for another resistance. I'll look for a recent resistance area, okay? And for me, the way that I do that is I'm going to look for what's called a pivot high, okay? If you're not familiar with a pivot high, it's a pretty simple concept. What I'm looking for is a high surrounded by two lower highs, okay? So right here, this high is higher than this high, but it's definitely lower than this high. This high right here, let's kind of zoom out a little bit. Oops, let's not get too click happy. I don't want to lose where I'm at. We're right here, okay, right? This is the area that we were looking at, okay? So if I'm looking for a recent pivot high, kind of zoom back in here, and this is the day that we're looking at, this would be my level, okay? Oh, no, we're over here. So up here would be my level, okay? Sorry, I got a little distracted. Not a little distracted, I just got a little confused. I accidentally scrolled out more than I expected to be, okay? So here's where we're gonna go long if we penetrate this area. If I'm wrong, what I'm going to do is I'm going to go ahead and exit here. This is the lower of those, or my preferred stop, my preferred initial stop, okay? The other one is we could have it a lot tighter if we looked at the two recent highs. So play with it, see what you like. One of the things I really like about this, okay, so I know that if we go long, or if we go short, I'm going to go short at as close to 407.74 as I can, okay? That's the price at which I'm going to go short. If I'm wrong, I'm going to cover that position at 450, okay? That's a pretty big, that's that gives me the ability to understand what my risk is. Okay, so if I can go, okay, I'm getting in around 4.7, I'm going to go short. If I'm not going to cover to 450, that gives me X, $43 on a $400 stock. I'm going to say, just for quick, easy math, that's about 10%. I'm going to have a 10% risk on this trade if I'm wrong. Okay, I'm deciding that now before I get into the trade, and I'm going to respect my stop. Okay, I love this because it gives me an idea of what my risk will look like. Okay, now obviously with stocks gap from time to time, right? News happens, things like that happen, and so from a perspective of that, we might not have an exact idea of what our loss is, but we have a pretty good idea under normal circumstances when we're going to get out. We're not going to just go short on Microsoft and hold on until we're right or wrong, right? Okay, so in the case of Microsoft, I'm just going to kind of zoom in just a little bit more again. This time I'm not going to lose track of where I'm at. We don't actually, you kind of see it hangs out in this area. We don't buy until right here. Okay, here is where it finally kind of goes down below that level on this bar here. I'm just going to circle it right here. That's the first time we actually went down below that level. That's where we would go short. We'd put our stop loss up here. Okay, and then of course, as soon as we go short, it's going to kind of pull back a little bit. The market doesn't go straight down. It's going to come back. We get a buy signal, but we're still bearish long term. We're still bearish short term. We're not going to actually get out of the trade unless we go bullish or get in long term and short term. We still expect it to go out. The market's going to give a little, and then it's take a little bit back. It generally moves up and down in a stair-step manner. Okay, so here we get that shift of momentum, that change of direction, that change of force to the long side. It's fairly short-lived. The bears take charge. They continue to push it down a little bit lower. When this happens, when you have that change of direction, as soon as you get that sell signal again, there's a couple things you can do. One you should do, and the second is optional. Rahul always said, hey, you could buy more, or in this case, you could go more short. You could buy more short shares. Not sure that's the right way to say that. It's all right. The thing that you should do all the time is move your stop. And it makes sense because we've kind of had a little bit of a pullback. We've set a new area where it's kind of resisted, when it makes sense for us to move our stops with the stairs as we go down. Okay, and I'll just use the same way. If I'm looking to kind of move my stop here, this high is higher than these two highs, and I'm going to kind of go in, and I'm still going to take a loss if I get out of this trade now, but it's going to be a lot smaller, and I'm not basing it based on how much I'm going to lose. I'm going to base it where support and resistance is, because here's a secret. The market doesn't care how much money you can afford to lose. Okay, here we get a long signal. Okay, but again, we're bearish long term, we're bearish short term. We will go ahead, we'll pay attention to this, because if we go bullish long term and bullish short term, we want to start to reverse and go long on Microsoft, but it doesn't happen. We have a little bit of a bounce, it pulls back, and we have that shift of momentum and that shift of force. Okay, and at that point, I'm going to move down my stop loss, and I'm going to use it as a profit protection stop. Okay, comes down a little bit more. Here we have another test. It bounces up. We don't stop out. Here we get another one. We'd probably move down our stop a little bit more. Okay, and we'd end up stopping up well before it gaps up. Right now, what we'd be looking at is to structure a long trade. Is it going to break up? Okay, now none of this was sexy. This wasn't even that great of a trade. Okay, but the consistency is really what we want to look for. We want to look to get into a trade while it's trending in the direction. We want to go in the direction of the trend. We want to make sure that we're kind of moving our stops along with that trend. And what we don't want is it's not ever going to be that sexy, right? It's not going to be that exciting. It shouldn't be. This is our money, this is our livelihood, all that kind of stuff, okay? Looking at the time, I'm going to kind of wrap up, but that's kind of in a nutshell the Rahul Mohinder oscillator system. We want to trade in the direction of the trend. One of the people that I respect a lot, Robert Deal. I think I need to drink some more coffee. These names usually come easier. Robert Deal, I remember back, the late Robert Deal. We would travel. We would spend a lot of time traveling, doing in-person events back then. But one of the things that he would always say is, bulls make money, bears make money, fixed, but get soldered. One of the things I would encourage you to do is find a very mechanical system, use stop losses, make it as mechanical as possible, and use discipline. As we talked about in the front, you want to be disciplined about the trades that you're doing. If you want to use this, it's a great methodology to kind of help you do all those things. And that's why I like to show it. It's easy, it's objective, it can kind of help you stay in the right direction of the trend. And as I said at the start of it, it's just a really small part of MetaStock. One of the things I love about MetaStock is how well it's been received over the years, how many traders that I've seen that have kind of used it to kind of help improve what they're doing, scan through and find opportunities in the market, all that kind of stuff. And I think those are the reasons it's been rated #1 in its price category 32 years in a row. 32 years in a row. So we're going to talk a lot more about MetaStock. There's a lot more we can cover. That's one system of about 300. Okay. If you get started with MetaStock, there's quite a few things that we're going to do for you. But I want you to remember, you're going to get that software that's been rated #1 in its price category of 32 years in a row. We've got 2 versions of MetaStock. We have what we call our MetaStock Real-Time. It's full real-time. There's some exchanges that you might have to pay to get some of the real-time exchanges, but it's $265 a month. It includes MetaStock. It also includes that news package that I alluded to a little bit earlier, that they spent $1 billion on it. Some of the best news, the news that a lot of hedge funds and mutual funds and market professionals rely on, a literal competitor to Bloomberg. So with MetaStock and that data and all that news and all that fundamentals, some of the best on the planet, $265 a month is what that would cost. If you just want to use MetaStock, we have our MetaStock. It's a delayed, it's a 15-minute delay. So you can run scans during the day. You can look at the markets during the day. You can run your scans. You can see what everything's going. And it's only $75. It's $75. It's going to get you MetaStock. It's going to get you all these methodologies. This toolkit that's been rated #1 32 years in a row. Okay, what we're going to do for you is we'll do a bunch of stuff. We'll give you I want you to try it. For about $25 a month, you can try it, because I'm going to say if you buy a month, we'll give you the 2nd and 3rd month for free. Okay, we're also going to sit down with you. We're going to do what we call a one-on-one installation appointment. They'll show you how to scan. They'll show you how to do system tests. They'll walk you through the software, whatever you want to see in the software. They're going to kind of help you with it, because we don't want you just to be a subscriber for a month and to kind of give up and stop. This is something that's helpful for you. There's a reason so many of our customers have been with us for decades. There's a reason it's been rated #1 for 32 years in a row. We want you to be one of those customers that just love MetaStock, that tell us how you love it and how much you use it for decades. So many people fall into that category. And a lot of them I helped get started with the software, and I just love that it's so helpful. Okay. So with that, if you buy a month, we'll give you the 2nd and 3rd month for free. You can do that with the $75 version. You can do that with the full real-time version and all the news. It's going to include data for the region of your choice. It's going to include that white glove installation where they sit down with you, they do training, they help you learn everything. It's going to also include a training disc, because it is a toolbox. MetaStock is something, again, it's not like a software that we created and just threw together and gives you green and red lights. It's been something that's been a work of love for 30 years, where we keep adding stuff to it. So we're going to give you some training. We want to help get you started. Again, we just don't want you to subscribe and be done with it. We want it to be a tool that helps you day in and day out with those trades. So if you have questions, if you want to get set up, if you want to kind of take advantage of this, give us a call, 800-882-3040, metastock.com/saleschat, metastock.com/conf-promo. So there you go. Jack says, is there a recommendation for choosing options to substitute for expensive stocks? Jack, that's a really good question. And certainly you can do that. I think it kind of like MetaStock's a big, huge toolbox. I'm going to go ahead. I'm going to send that to the chat. I really appreciate that question. I know certainly a lot of people will, instead of taking a trade where they're buying an expensive stock, they might buy an option on it. They might be looking at the moneyness of the stock and that kind of stuff. That's certainly up to personal preference. It's also up to debate. kind of when I say, if you're, I know, Jack, you've been using MetaStock for a while, or at least you've been to a lot of webinars, your name's very, very familiar. But if you're starting to get in your direction of trading, there's a few things. I think MetaStock can be really, really helpful in kind of that journey. It can help you understand exactly. There's tons of methodologies, hundreds of methodologies that you can test and that kind of stuff. The biggest thing I'd say is so many people will jump into the market and they'll look to kind of start fast. They'll get, okay, well, I have all this money. I'm going to invest it all. Let's go. And really, I would recommend that you don't do that. You know, if you were going to start a business, you'd start with a business plan. You'd say, here's my product. This is what I'm going to sell. Here's kind of like my overhead. Here's what my risk looks like. Here's where I need to make money. Here's what it looks like. And MetaStock can help you test those types of ideas. I'd recommend, we'll talk about system testing tomorrow in great detail. I believe it's tomorrow that Kelly speaks. He's going to talk a little bit about how to evaluate different methodologies. But what I'd also encourage you to do is kind of do a lot of understand your methodology, understand what your risk and reward looks like, and then, even then, trade it on paper for a while, and then start small with it. A lot of people like to jump in. The market, you don't have to ever place a trade, right? Nobody's forcing you to ever place a trade. Take it small. Start with a couple shares, see how it goes. If you like it, you can always ramp up, okay? So there you go. Kind of went on a nutshell there. Give us a call, 800-882-3040, metastock.com/sales-chat or metastock.com/conf-promo. So there you go. I do want to, we've talked about stocks and commodities. I'll talk about them again. Let's go. I want to say thanks to Stocks and Commodities Magazine for sponsoring the event today. They've been great partners of ours ever since we started doing these events. We've been doing them for a decade now. They've supported us every step of the way. www.traders.com, great magazine as well. I should actually add that. I get it every day. I've gotten it for 27 years now. Great magazine. I really appreciate their support as well. So there we go. Our next presenter, Steve Primo. Steve Primo has been another person that's been new with MetaStock for a number of years. Great partner, great speaker, very, very educated. I'm going to talk about his strategy number 4. Steve, how you doing?
Hi, Jeff. Doing great. Doing great. Thank you.
Cool. Good to see you. Let me go ahead and we'll kind of make you the presenter right now. Yes. You start, Steve, just to kind of give you some background while we're getting his computer working, started trading on the Pacific Trading Exchange. I believe we looked it up one time, Stephen. They turned that into a gym.
Well, it may be now. I know that when I left, they turned it into a nightclub. So I don't know if it's a gym now.
Oh, maybe. Everything seems to turn into a gym, right? Later on. It might be a nightclub. I know that one of them, like I think the San Francisco one, was a restaurant. I've eaten there.
Yeah. Oh, maybe that one. Yeah, I was in the Los Angeles one. Hey, you know, I just want to make sure that are you able to see my screen clearly? Because I hit the button. I'm not sure if it came on all right.
I can see you. I can hear you. I can see your screen. I can't see you, but I can see your screen.
Great. Perfect. Okay, good. I did it right then. Thank you.
I'll get out of your way. It's your turn.
Okay. Thanks, Jeff. Thanks, everyone, MetaStock, and thanks to all of you attending today. I want to talk to you about my 50-year trading strategy. This is not a strategy that you're going to have to learn and adjust to, and it'll take you 50 years. No, this is basically something I've been trading for nearly 5 decades, and what I feel has sustained me now for that amount of time. It's extremely, extremely simple. And here's the good news. I'm actually going to give you the first 2 rules of this particular strategy. So you can actually apply these 2 rules. They're easily transferable onto any method, any strategy, any system. You can apply them. And I really feel they'll increase your odds for consistency. You can develop a method based off of them. Or at the end, I'm going to share with you a really great discount and a great promotion so that you can actually learn all of the complete rules to this 50-year trading strategy. But I'd like to first start out by sharing with you a chart here. This is a chart in GILD. This, in my opinion, is why most traders fail, because they're not applying these first 2 simple rules, which once again, I'm going to share with you. Most traders looking at this chart would say, well, Steve, we're in a clear-cut uptrend, right? We're going higher. So this is a good, strong stock. You should be long, right? But then this ultimately happens, and this is where traders change their mind, or maybe that guy on TV says it's now in a downtrend. So now you're confused. You're either saying, well, I'm going to sell my stock, or maybe I'm not going to buy it after all, or maybe if you're a more aggressive trader, you'll actually want to short this, thinking that it's topped out. Well, here's what you're going to learn today. The first rule I'll be sharing with you actually tells you that the overall trend is up. So you're not actually in a downtrend at all, or some type of a sideways market. And then the second rule I'll teach you will tell you that the short-term trend was also up. Now, these make up the first two rules of this strategy. Now, when the remaining requirements were met, you would have seen that a buy signal was actually generated right here, where you earlier thought you were in a downtrend, and you ultimately could have potentially captured 25 points in the following days. Now, the good news is this strategy, if the requirements are met, will produce more than one setup at a time. So if you happen to miss that signal, well, guess what? It generated another one here, so you could have caught the last portion of that move to the upside. So this is what I'm going to be talking about today. The subject of our educational presentation is my 50-year trading strategy. And as I said earlier, you will learn the first two rules to this strategy, usually reserved for the members who have purchased this, but we're going to give them to you today. So welcome once again. My name is Stephen Primo. As Jeff said, I've been trading for nearly 5 decades now. I started my career on the floor of the Pacific Stock Exchange. I was on the floor for a total of 16 years, and 9 of those years I was a specialist. That's where we get the name Specialist Trading. That's the name of my company. I'm the president and founder of Specialist Trading. A specialist doesn't mean you're any more special than anyone else, but in the old days before electronic trading, if you wanted to buy or sell a particular equity, you had to call your stockbroker over the phone. As a matter of fact, he would put you on hold, take your order. Let's say you wanted to buy 100 shares of IBM. He in turn would call the floor broker for that firm. The floor broker would write down buy 100 shares of IBM at the market, and then he would walk over to the market maker who specialized in making a market in IBM. And that's what I did. I made markets in roughly about 60 stocks. IBM was one of them, Waste Management, US Air was another one. Excuse me. I made markets during the crash of 1987 and the bull market that followed. I left the trading floor in the mid-90s to manage money and also to pursue teaching as well. And about 15 years ago, I teamed up with Pro Trader Strategies, my sister site, and we created Specialist Trading, where we only have one goal in mind, and this is simply to educate traders. We are first and foremost an educational company. See, it's not in our interest to tell you what we think the market's going to do or to forecast or predict. We don't really believe in that. A good educator doesn't do that. A good educator simply teaches you how to trade so that you can ultimately make your own trading decisions. If there's one thing I've learned in my nearly 5 decades of trading, the only traders that are still around, the only ones that are still trading are the ones that make their own trading decisions. Sure, they have a great method, maybe a great indicator or a great system, but they make their decision on how they're going to trade it. They don't rely on someone on TV or in a chat room telling them what to buy or sell. They make their decision. That's what will make you, in our opinion, a consistent longevity trader. And that's what our goal is, to not just to give you a couple of good months or maybe a couple of good years of trading, but a couple of good decades so that you'll be trading for the remainder of your trading career. And that's our goal at Specialist Trading. You'll see that today, and we're our education to detail and trying to really teach you how to trade. Now, before we begin, we're required to share this with you, so please take a moment to view our disclaimer. I'm going to show you a lot of performance results by applying these 2 rules that I'm going to be teaching you, as well as strategy number 4. But please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. And since we are first and foremost an educational company, all examples are strictly for educational purposes only. Now, if you'd like to get some more education on a daily basis, please feel free to follow us on X. There's our handle right there, abbreviation for Specialist Trading. You may want to copy that down. Every day I post anywhere from 5 to 7 different snapshots of signals that our methods have generated in all markets and all time frames. And as well, we give you a little bit of financial wisdom along the way. So there's lots of great free education on a daily basis. Please feel free to follow us on X. Okay, with that stated, let's begin today's educational presentation. And what we're going to be talking about is the strategy, as I said, that I've been trading for nearly 5 decades, and that's strategy number 4. So let me share with you some of the highlights of this particular method. Firstly, It's a pattern recognition strategy. So what does this mean? Well, it doesn't mean that it's very highly sophisticated where we're looking at some indicator or some system that you've never heard of or don't know what it's based off of. This is based off a pattern that repeats itself over and over and over again in virtually any market and in any time frame. So you'll be able to recognize it and see it as it appears over and over. We teach you what that pattern is in the course. Now, this method is designed for traders looking to catch momentum. When I was first using this on the floor of the stock exchange, I was in and out of trades in a matter of minutes because we were looking to catch quick momentums, get out and start the next trade. But we've developed ways in which to trade it, and you can hold on to it for days, weeks, even months if you'd like. Now, it only uses one indicator, and I'm going to share with you what that indicator is in just a few minutes. Now, the advantages to trading strategy 4, firstly, it's extremely consistent. Now, I know a lot of you may think that consistency means that, well, it has a lot of winners, right? That's really good. Most of the trades are winners. Well, that's not really what consistency means. That's not the true definition. A consistent method is one that is aware it will have losses from time to time, okay? But a consistent method is one that's able to recoup those losses, often on the very next setup. So therefore, a consistent method has a 2 steps forward, 1 step back approach. So you'll see that, and I'll show you some examples of this in the coming slides. Now, also the advantage of trading strategy 4 is that it makes you a part of the process. This is not a system, a black box system where everyone has to trade the exact same way, enter at the same place, exit at the same place, place your stop at the same place. Remember, once again, we are an educational mentoring company, and as a mentor, we don't believe in that philosophy. Everyone should trade according to their own means. And the reason is because everyone has different parameters for trading. Everyone has different risk parameters. Everyone has a different account size. Someone with a $500,000 account is going to trade differently than someone with a $5,000 account. You're going to be using different stop placements, different exits, different entry placements. The good news is we provide you with all these different variables so that you can be a part of the process. Remember, as I stated earlier, in order to be a consistent trader with longevity, you have to make your own decisions, and we provide you with all the different variables and work with you so that you can become a part of the process. And lastly, strategy 4 is designed to be as simple as possible. All right, I'm going to give you the first 2 rules, and you'll see how simple they are. In fact, you probably won't even believe it. You say, how can something like this work with the simplicity involved? Well, it's been my experience that it's the simple things that actually work. The more complicated things actually don't work in trading because they're just too convoluted. There's too many requirements that need to be met. But when you keep it simple, you really are on that pathway to consistency. And you'll see how simple strategy number 4 is. All right, so let's go first of all and talk about strategy 4 rules 1 and 2. Starting with strategy rule number 1, buy and sell signals can only be entered. If it's a buy signal, it must be entered above the 50-period moving average. And if it's a sell signal, it can only be entered below the 50-period moving average. And someone would say, well, why is this? Sometimes some of the best bottoms are made below the 50, or if I want to go short or have a nice put trade, some of those best sell signals are above the 50. Well, yes, but what we have found over time, just like the slot machines, there's no consistency in them. In other words, sure, every once in a while you will get an amazing buy signal below the 50-period moving average. And it may go up and you say, gosh, this system or this strategy picked the bottom. But like the slot machines, they're designed to give you a winner every once in a while. Because if you stay there long enough and continue to go over and use the same methodology, you'll give it all back. And that's what they want. It's no different when you are buying out of sync with this rule, when you're buying below the 50 and selling above the 50. What we want to do is be in sync with the overall trend. And this is the simplest, most powerful way I know of being synced with the overall trend. And on top of that, it's the cheapest. There's nothing you have to purchase. Everyone has access to a 50-period moving average, regardless of what software or platform you're using. And I guarantee if you just plot a 50-period moving average right now, go back and look at your last 10 or 20 trades. I can almost guarantee that the reason why you had losses was because of that simple rule. You were buying below the 50-period moving average and you were selling above the 50. Now, when I say sell, I don't mean you're exiting a profitable trade. No, what we mean is going short or buying puts or doing whatever you want, where you're betting for the market to go down. Now, if we take a look at this generic chart here, we see that the price bars are above the 50-period moving average. So what is the market telling you? Not me, not some guy on TV or some guy in a trading room. What is the market telling you? It's telling you the overall trend is up. And remember, we will never be out of sync with the overall trend. It's the simplest and most powerful way I know of finding the overall trend. And as I said earlier, it's the cheapest. There's nothing you have to purchase. It's right there on any platform. Now, the same thing works to the downside. All right. Price bars are below the 50-period moving average. So what is the market? Not me. What is the market telling you? It's telling you the overall trend is down. Therefore, we will only have a seller's bias. All right, so that's rule number one. Go back and back test it yourself. Go back and look at your last 10 or 20 trades. You'll see how powerful this is. Now, let's go to rule number two. Buy and sell signals must close in the top 25% of their range if it's a buy signal, or the bottom 25% of their range if it's a sell signal. So what does this mean? All right, let's say you get a buy signal. That's where all the requirements are met. You get a little green arrow underneath the bar. Well, that bar must close in the top 25% of its range. Now let's look at this generic chart if you're still having trouble understanding. Let's say this is the bar that it closes on, okay? What you want to do is divide this by 4 separate but equal parts. And you must close in that top quarter, that top 25%. When the market does this, any bar, it could be a 5-minute bar, a monthly bar, it could be a bar of crypto, it could be a 5-minute bar of MetaStock, it doesn't matter. All you have to do is know that the market wants to go higher on the short term. That's all. So now you have the overall trend and the short-term trend. There's nothing you have to purchase. There's nothing you have to, discern and figure out with a calculator. It's right there for you. When a bar or multiple bars are closing in the top 25% of their range and you are above the 50-period moving average, you have the overall and the short-term trend in sync. It's that simple. So we go back and look at this generic chart here. Here's a bar that closed in the top 25%. We don't know whether these are 5-minute bars or monthly bars, but look what happened after that. You had a nice little bounce. Now, I know a lot of people would say, yeah, but Steve, look at it, fell out of bed there. We could have made really quick money selling short. Well, sure, but you would have had to be very quick and get out, because what do we have here? We have another bar closing in the top 25%, and then look what happened. So what most likely what happens to traders is they stay in too long and they give it all back, because now we're making new highs. You'll have a higher level of trade consistency if you trade in sync with the overall trend and the short-term trend combined, and it doesn't get any simpler than that. Now, conversely, let's say price is below the 50-period moving average, so the overall trend is down, and you have a bar closing down like this. What you want to do is divide it by 4 separate but equal parts, and if you close in that bottom quarter, that bottom 25%, what is the market telling you? Once again, we take all of our signals from the market, not from some guy in a chat room or some guy in a blog or some guy on TV. We take our signals from the market. After all, that's the very thing we're trading, right? Shouldn't we be listening to that other than an outside source? So if we close in the bottom 25%, the market is saying it wants to go lower on the short term. So once again, when that is in sync with the overall trend, as we are here, we're below the 50, the overall trend is down, and we close in the bottom 25%, you will have a higher level of trade consistency. You see how simple this is and how powerful it is at the same time. Remember, trading doesn't have to be complicated. It doesn't have to have a lot of bells and whistles and weird signals. It's very simple. It's the trader himself that makes it more complicated than it has to be. Once you simplify trading, you'll see you'll get a lot closer to being consistent than overcomplicating your trading. Okay, those are the very first 2 rules of strategy number 4. Now, I'm sorry, I cannot divulge the remaining 2 because that wouldn't be fair to our thousands of students that have purchased our method around the world. But I'm going to share with you some recent strategy 4 examples, and you can see these 2 rules in action, okay? All right, let's start off with ADBV. Once again, someone looking at this would say, well, there's not enough information, Steve. I'm only looking at 6, 7 bars here. I really don't have any idea what this wants to do. Well, this is the way most traders trade. And they'll say, I'll listen to that guy on TV. Maybe he'll have an idea of what he thinks, or maybe I'll go to that chat room. You don't have to, once you have the education, you don't have to search for answers outside of your trading room. You can find it yourself. First thing is the overall trend. Apply the 50-period moving average, and where is price? Price is above the 50-period moving average. So where is the overall trend? The overall trend is up. That's it. That's all you have to do. That's the first rule. Now we want to look for bars that close in the top 25%. Now we have a number here. We have one here. We have another one here, I believe. And then we have one here, okay? But we also have two more remaining rules that need to be met in order for a strategy 4 signal to qualify. And as I said, can't divulge those rules, but it generated a buy signal right here. All right, so even though maybe before you understood this process, you were saying to yourself, there wasn't enough information for me to figure out what this wants to do. Now that you know these simple rules, yes, there is a lot of information that the market is giving you. We're always trained that we have to get our information from someone or something else. But now that you learn these things, you have to decide for yourself. And look what happened. The stock rose in the following days, 25 points, all based off of market behavior. None of strategy 4 is based off fundamental news. It's not based on convoluted indicators. Remember, it's based on a pattern that repeats itself over and over again, and we'll share with you this pattern in the course. Here's an example in APD. Looks like a sideways market, right? Absolutely doing nothing, just kind of going sideways for the last month. But is it really in a sideways market? Because if we apply the 50-period moving average, well, it may be a short-term sideways market, but the overall trend is still down. This means that even though it appears to be going sideways, our bias should be that of a seller, not a buyer. In no way should we be considering buying this. And someone could say, but yeah, Steve, I went to that chat room and that guy said if we break out above here, we're going to go straight up. I don't care what anyone says. You will have a higher level of consistency if you follow the first rule with asking yourself, where is price in relation to the 50-period moving average? So price is below. This means we'll only have a seller's bias. Now we're looking for bars that close in the bottom 25% to meet rule number 2. And it looks like we only have one right here, okay? Let's see if the remaining rules were met for a strategy 4 signal. And once we clear off that sideways, we see that, yes, this is an actual strategy number 4 sell signal. So if you were waiting for this to break out to the upside, if you were trying to pick a bottom, you would have most likely lost money, because look what happened in the following week. The stock fell 50 points. So what happened to that sideways market? What happened to that support or that guy in a chat room saying you have to buy this? Remember, follow these 2 simple rules and you'll add and increase your odds for consistency. Here's that chart we started off the presentation with in GILD. Remember, it looked like it was going up, then going down. This is where traders get confused. They say, well, gosh, I don't know what this thing wants to do. But first thing we do is apply the 50, and it says, well, this little short-term downtrend is not really a downtrend. It's a buying opportunity. And if we apply strategy 4, we look for a bar in the top 25%, and the remaining rules have to be met. And we have a buy signal right here at the very low of that little downward move. And there was your 25 points in the following days that you could have taken advantage of. And once again, if you missed that, strategy 4 generated another signal for you to get back in as well. Let's look at the British pound, because we can apply strategy 4 to all markets and all time frames. This is a 4-hour chart of the British pound. There's absolutely no reason to change the rules. I know a lot of systems and strategies will change with the market and with different time frames. We feel if something is good enough, it should stay the exact same regardless of what market and regardless of what time frame. So here we're trading a 4-hour chart of the British pound. We're in a short-term downtrend. This is where most people would say, well, you know, we've got to sell the British pound. But once again, we apply the 50-period moving average, and it's way down here. So we are well above the 50, and we have a bar closing in the top 25%, another buy signal. And in the following days, probably just about a little over a week, you could have potentially captured close to 180, I should say, pips, close to $1,800, okay? And if you missed that first buy signal, here was another one right here. Now, in our course, we give you upwards of 6 or 7 different ways to exit, 6 or 7 different ways to enter, and even 6 or 7 different ways to place your stop. Remember, Our philosophy is you are in charge of your trading, not us. Our job as a mentor is to teach you these high probability entry points. Your job is to decide how you want to enter, how you want to exit, how you want to place your stop. We provide you with all that as a mentor. Remember, you have to become a part of the process. At Specialist Trading and Pro Trader Strategies, we don't believe in systematic, blindly taking signals when they're spit out. We want you to be a part of the process. Okay, here's an example in Apple, okay? This was just about a month ago. Someone would say, well, Steve, we're in an uptrend here. I'm long, and look at, we're making higher highs, higher lows. So, why not be long during an uptrend? Okay, well, what's your plan then? Well, my plan is if we break this, then I'm going to exit, and I'll take my profit, or maybe I'll have a small loss. Well, look what happened the very next day. Some news came out or something happened where it gapped down. And this is what happened with most traders. They have the best plans until it actually happens. It's like what Mike Tyson said, everyone has a plan until they get punched in the face, right? Well, this is a proverbial punch in the face here because the stock gapped down. It's at this point that most plans go out the window and the traders say, well, you know what? That guy on TV said that it's just a short-term sell-off. It's going to bounce back. The market is stable. So he said you should buy some more. This is a buying opportunity. Okay, so let's say you stay long and let's say you even buy some more. Well, how'd that work out in the following days, okay? How could the first two rules, which we just shared with you, have helped it? Well, you would have known based off the 50-period moving average that there was absolutely no reason in the world that you should have been long this stock. Because remember, if price is below the 50, you will have a seller's bias. You won't be in any way considering going long. So therefore, this little nice bounce or short-term uptrend that you thought you saw was a selling opportunity. It was not a buying opportunity. Then you look for the remaining rules of strategy 4, a bar closing in the bottom 25%, and the remaining rules. And guess what? Right near or towards the high of that little bounce, strategy 4 gave you a sell signal. So where most traders, this is why most traders fail. It's been estimated upwards of 80 to 90% of all traders fail. It's because you're out of sync. You're not doing what the market wants to do. When the market wants to go lower, you're buying. When the market wants to go higher, you're selling. If you simply know how to want what the market wants, you'll become that much more consistent. So right here with the tools we teach you, you would have known that the market wanted to go lower, and you could have potentially captured 50 points, or if you don't like to go short, you could have at least saved yourself a loss of 50 points. How about AMT? A lot of traders say, well, Steve, this is a perfect example. I mean, it looks, sure, it's been going higher, but how would I have been able to know that? It's easy to see in hindsight, but how would I have known before it even happened? Well, apply these rules, and you would have seen here that you have 1, 2, 3, 4, 5, 6. That's more than enough to tell you right here back in January that the overall trend was up. Even though it wasn't going up, all these closes were telling you, they weren't telling you, they were screaming, I want to go higher. Remember, we only listened to the market, and the market was screaming, I want to go higher. Once you add some structure to that in the form of strategy 4, well, you had 1, 2, 3 chances to purchase where you potentially could have captured upwards of 40 points. So most traders like to play the victim game, like, gosh, how come I couldn't catch NVIDIA? How come I couldn't catch all these stocks? Well, because you're relying on someone or something to tell you how to trade. Once you've learned how to trade on your own, that's when you become a consistent trader. Here's an example in AON. Okay, we had 1 bar above the 50, but look what happened after that. 1, 2, 3, 4, 5, 6, 7, 8 consecutive closes below. Even though we have been bouncing, a sell signal was generated towards the top of that bounce. This was just last month, and 55 points to the downside that you could have either sidestepped by avoiding buying this, or gone short, or maybe purchased some option strategy with a downward bias. Here's an example in Costco, okay? Now this is a little bit more of an aggressive trade because if you're noticing me here, the majority of all the bars are closing below. So for all intents and purposes, the overall trend is down, but we have 1 bar closing above. As I said, this is a little bit more aggressive, especially when you're starting out. You'd like to look for 3 to 5 closes either above or below to tell you the overall trend. But our aggressive traders, the ones that have a larger count size, some of our hedge fund students, or even someone that's been trading long enough with experience would have been able to take this more aggressive trade here, a buy signal, and 110 points in just about 2 or 3 weeks. Let's look at NXPI. All right, once again, the average trader would say, well, this is just a whipsaw market, Steve. Whipsaw markets are the ones you want to stay away from, because every time you buy, they go lower, and then you sell, and then they go back up. So you buy again, and they go back down. So you want to stay away from whipsaw markets, right? Well, the question is this really a whipsaw market? What's the first rule? Apply the 50-period moving average and ask yourself, where is price in relation to that? Once we apply it, we see that every close is below the 50. So even though this may appear to be a whipsaw market, you should be having a seller's bias. Rule number 2 states that we look for bars that close in the bottom 25% of the range. Now, there are a number here that are closing in the bottom 25, telling you that the short-term trend is in sync with the overall downward trend. But we want the 2 remaining rules of strategy 4 to be met, and guess what? They were right here. You had 2 chances to go short NXPI before it dropped 60 points coming into last month. You know, a lot of traders were really disillusioned. I heard a lot of prospective students who hadn't joined up with our courses yet saying, gosh, I've lost so much money in this last market. Once I teach them the simple rules, they would say, gosh, this is so simple. I would have saved so much money knowing this. Remember, this is totally free. You can start using this today. In fact, go back and plot the S&P 500 with the 50-period moving average, okay? And you would have known to have been out of the market months ago, and you would have bypassed or could have taken advantage of the strong downward move we had. Here's an example now in another currency pair, the Swiss franc. And once again, traders looking at this would say, gosh, I'm losing a lot of money. That guy in that trading room told me to buy the Swiss franc. It keeps going lower and I'm getting killed here. Well, this is why we don't tell you to listen to anyone else. You should listen to the only thing that matters, and that is the chart in front of you. If you apply the 50-period moving average, you would have known well in advance price was below. And then once you applied some structure in the form of strategy 4, you could have taken advantage of 920 pips to the downside, or at least you could have saved yourself that loss. Let's look at Tesla. Now, this is a weekly chart of Tesla, and we all know that Tesla has really been going down lately, but what about before it started going down? What about last year, going back to September of 2024? Well, these are all weekly bars, okay? And where are they in relation to the 50-period moving average? Well, they're all above and they're all closing above. So the overall trend is up, and we had a strategy 4 buy signal in October. Had you taken advantage of that, well, you could have potentially captured 165 points in just 2 months before it started going lower. Now that's a weekly time frame. Let's look at a daily chart of Lulu, okay? This was just a couple of months ago. We are below the 50-period moving average. A sell signal was generated, and the stock fell 55 points. Now, I wanted to share with you this chart because I want to talk about consistency. Remember, we said that strategy 4 and all of our methods of specialist trading are extremely consistent. Remember, consistency means an awareness of losses. You will have losses from time to time. I mean, I remember Jeff saying in his presentation that that's totally normal. There's nothing wrong with losing. That's like saying a baseball player never strikes out. Even the best home run hitters strike out. Even the best basketball players don't make every basket. So even some of the best traders don't have a winning trade every time. That's okay. It's all about managing these losses, and it's all about having a consistent trading method. Remember, consistency is a method that's able to recoup those losses, often on the very next setup. So the first setup here in Lulu was 55 points to the downside. Let's say you were buying some puts or shorting the stock. You would have done very nicely, right? But then look what happened. It bounced up here, and another sell signal was generated. Now, let's say you had taken a small profit here, and you say, wow, I'm going to get back in this and take another profit. Well, look what happened. Went down for 1 day, but then it went back up. Now, using one of our generic stop levels, most likely you would have lost somewhere around 10 points, okay? So that's a losing trade. But then look what happened. Another signal was generated at the very high of that little bounce. So most traders, what they do is they play the victim game. They feel sorry for themselves. They say, oh, this stuff doesn't work. How come I always lose? You have to be back in the game. You have to get back on your horse, because if you had missed taking that final sell signal, you would have missed a 95-point potential gain. So here we have potential of making 55 points, a fixed loss of roughly about 10 points, and then the potential of making 95 points. This is a textbook example of what we mean by consistency in trading. Now let's look at Meta, okay? Once again, this is why most traders fail. Someone just looking at this right offhand would say, Steve, we're in an uptrend. Look at, here's a higher high. Here's a lower high. We're doing really well. That guy on TV says you got to buy this. You know, the earnings are coming out. It's great. The company is going in the right direction. The market's strong. I'm really excited about this. Okay. To see how all my justification for being long was based on someone or something else. What is the market telling me? At specialist trading, we don't listen to any of those things. We only listen to one thing: the market, the chart in front of us. So what is the market telling us? It's telling us it's below the 50-period moving average. And what is that saying? The overall trend is down. So I don't care what anyone or any system is saying. I am going to be having a seller's bias. Now, this, just because we're below the 50 doesn't mean that I just sell at the market. That's not what that means. That's just a guideline. That's just telling you what the overall trend is. We have to apply some structure, and that's in the form of strategy number 4. And there was a sell signal. All the rules were met. So rather than giving in and following the herd like everyone else saying you should buy, that is a sell signal, and it fell 120 points in the following days, not months, but just days. Now, look what happened after that. Let's say you say, wow, okay, Steve, but you know, that fell far too fast and far too low. It's got to bounce now. And that guy on TV is saying that it bottomed out and it's time to get back in at these lower prices. This is a buying opportunity. Okay, well, where is price in relation to the 50-period moving average? We're still below. So the overall trend is still down, and you should still have a seller's bias. And look what happened right here. Another sell signal was generated. Had you gone long, you could have missed a potential gain of another 65 points. Do you see how you put the odds in your favor when you apply these simple rules? Remember, they're extremely simple, but as I said earlier, it's the simple things that work. How about a 5-minute chart of IBM? Now, I took this slide just about an hour before I started speaking today. This was from Friday going into today, all right? 5-minute time frame, because I know not everyone trades daily bars or even weekly bars. Let's say you're an intraday trader, all right? Nothing changes. There's absolutely no reason to change the rules because we go down to a 5 or even a 1-minute time frame. Now, the majority of the bars closed above. We have one closing below, but this is a little bit more advanced. Once again, we closed right back above, excuse me, and it is a strategy for buy signal. Now, coming into the end of Friday, you would have had a nice profit. Had you held on coming into today, well, nearly 5 points, 4.5 points in just a couple of days. That's just a 5-minute trade, okay? Excuse me. These are based on the same rules that you would apply to any market. Even if you were looking at a monthly bar time frame of TTWO. Here's a monthly time frame. All these bars are all months. Once again, someone looking at this would say, well, gosh, Steve, nothing's happening. We're just going sideways. But when you apply the 50-period moving average, you see the majority of the bars are closing above. We have 2 buy signals right here. This was back in 2024 on a monthly time frame. And you could have potentially captured 75 points just using the simple strategy 4, not looking at anything fundamental, anything economically, not listening to anyone in TV or on, in a chat room. And you could have potentially captured 75 points. This is how you become a consistent trader, and this is what we teach all of our students around the world. Okay, so let's recap what we shared with you today. Strategy number 4 is a pattern recognition strategy based on a pattern that repeats itself over and over again in virtually any market and in virtually any time frame. It's designed for traders looking to catch that quick momentum move. And oftentimes it will generate these signals, as you just saw, before any momentum was even in the chart. How many times did you see buy and sell signals that I just shared with you that were in a sideways chart before it took off? That's the beauty of strategy number 4. And lastly, you can apply it to all markets in all time frames. As you just saw, the advantages of trading strategy 4 is extremely consistent. Remember, consistency means an awareness that you will have losses, but a consistent method has a 2-step forward, 1-step back approach where you're able to recoup those losses. It also makes you a part of the process. We share with you these high probability zones for entry, but then we work with you on exactly where to enter, exactly where to exit, and exactly where to place your stop, each for different parameters, different ways of trading that will make you feel comfortable. I don't care if you back test some system and it goes back 20 years that has phenomenal results, that it's 99% win rate, has tremendously low losses. If you don't feel comfortable with it, you will not make money. I can guarantee you that. Why? Because maybe in order to make 99% winners, you have to trade 100 times a day. Most traders, myself included, wouldn't feel comfortable doing that. But as long as you follow that, you'll have wins 99% of the time. Or perhaps the system says it's consistent 99% of the time, but you only trade once a year. Well, most traders wouldn't wait for one trade a year and say, okay, 364 more days to go. So you have to be a part of the process. You have to feel comfortable trading, and we provide you with all the variables so that you will feel comfortable. And lastly, it's designed to be as simple as possible. I don't think you'll find simpler rules than you will at strategy number 4. I just shared with you the first 2 rules, how to find the overall and the short-term trend in a matter of seconds. And the best thing is it doesn't cost you anything. You have the capability to go find those right now on your own. So ask yourself, before you ask me questions, before we give you a really great promotional offer, do you think strategy 4 can help your trading for the remainder of 2025? I mean, think of it. The first third of the year is already over. I'm sure most of you are not seeing the type of results you promised yourself in January, right? Most traders do that. They make a wish list of where they want to be by the end of the year. They want to have that extra income so that they can go on that dream vacation, maybe in addition to their house. Maybe they want to buy that toy, that car or something. And by this time, most of those dreams and hopes and wishes are far, far from being realized, right? That's okay. That's very common. Once again, it's been estimated that 80 to 90% of all traders fail. But I truly think strategy 4 can help your trading for the remainder of 2025. And because of that, we have a great attendee discount for all of you watching today. We're going to offer you our strategy number 4, our momentum pullback trading. Okay, this is our most consistent method. We have a number of methods at specialist trading and pro trader strategies, but strategy 4 is our most consistent. And once again, it's my 50-year trading method. I've been trading this for nearly 5 decades. I continue to trade it on a daily basis. You'll get instant course access, detailed instruction. Remember, once again, you'll get all of the entries, all of the exits, and all the stop placements right there for you. Automatic buy and sell arrows, the complete course rules on PDF. And as we said earlier, you can apply to any market and any time frame. And lastly, you'll get educational correspondence. It's the next best thing to having me sit right there alongside of you, because we realize we have students all over the world. I can't take a flight and be with everyone and all in Europe and in the United States and just everywhere in Australia. So the next best thing is each and every one of my students gets my private email address. And this only goes to me. It doesn't go to an intern or to an assistant. I'm the only one that will see your emails. You can share your results with me. You can ask me any questions. It doesn't matter if you've been trading 30 years or 30 minutes. I will work and walk through the process with each and every one of you, okay? So you'll get educational correspondence with me as long as you'd like. Now, regular price for strategy 4 is close to $600. It's $599. Here's what we're going to do. We're going to discount that $100. We're going to take off $100 off of that price. You're going to save $100, and our special discount price is only $499. Think of it. Nearly 5 decades of things I've accumulated in trading with for only $499. It'll be yours, and you'll be up and running as soon as today, I believe. But remember, this is for a limited time only. So take advantage of this great offer. Once again, I'll be there with you every step of the way. This is a great method I continue to use on a daily basis. And the main thing, since we are first and foremost an educational company, we want you to take charge of your trading for the very first time. We're not here to just generate buy and sell signals and spit them out for you on a nightly basis. We truly don't believe that. In fact, we truly believe that that's what causes most students to fail, because you're taking yourself out of the game. Our whole goal, our credo, our philosophy is to make you a part of the process. So take charge of your trading for the first time. I'll be there with you every step of the way. Here's how to take advantage of this great discount. Contact MetaStock. You see the link right there that will take you to the info page. I believe Jeff is going to post that up there, but probably more important than that is the phone number. just give them a call. They have trading consultants manning the phones and would be happy to take your order or to answer any question you have concerning Strategy 4. 1-800-882-3040. They'd be happy to work with you. They're very flexible and they'd be happy to give you more information, okay? I believe we still have some more time for questions. So if anyone has any questions, I'd be happy to answer them. Jeff, do you want me just to read them off the question and answer portion, or?
Yeah, that would be fine, unless you want me to help you with it.
No, I'll just read them here. Let's see. Someone's asking, does your program, I don't know if this was the last, this was for your presentation, Jeff, or for mine, but it's saying, does your presentation work on multiple markets? Yes, it does. It works for everything, any market, any time frame. Let's see, buying is the easy part. What about the sell signals? Well, when you're talking about exit signals, I assume that's what you mean by exit signals. Yes, we provide all of that in the course. I just can't give you that information. It wouldn't be fair. We have literally thousands of students around the world who have purchased this method. And if I gave away everything, it would be like going into a restaurant and I gave you a free appetizer and you say, can I have the whole meal for free? You know, I can't give away. It wouldn't be fair to the people in the restaurant that have paid for the full meal. So it's the same process with this. I hope you understand, but that is all included in the course. So there's nothing to worry about in terms of exiting. And we have multiple exit strategies. We know that some traders, some students like to get in and out very quickly. They don't want to be staying a long time in a trade. They want to be in and out quickly. They like to move on to the next one. They don't want to tie their money up. So we have exit plans for that. We have other traders that like to track the trade. They like the market to take them out. So we have ways to do that. We also have fixed exits at a higher level that will get you the most bang for your buck. So remember, we are offering all of this, different variables, as a mentor, and it's up to you to decide which one you want to execute, because that's how you become a consistent trader, in our opinion. That's how you will become consistent, by making your own trading decisions. So I think that's it. I'm looking to see if there's any more questions. I think that's it. I must have answered everyone's question in the presentation, or I guess you know, everyone is checking out that 50-period moving average line right now, seeing if it really works. But
questions we get a lot, if you don't mind, we get a lot of questions on how this works on international markets. Do you have any experience with that?
I personally don't trade a lot of international markets, but we have students that use Strategy 4, and they said it works fine. Because remember, Strategy 4 has nothing to do with what's going on internationally, the economy in another country or a part of the world, or the way they trade. It is looking for a pattern that's based on market behavior, and market behavior happens over and over again. You know, strategy number 4 does not know whether it's looking at an international market or whether it's looking at the E-mini futures. It has no idea. It's just searching for this pattern. And this pattern is based off of market behavior, which is really human behavior represented on the chart. So therefore, human behavior doesn't change regardless of what, you know, nation you're trading, or what you know, currency or whatever you're doing. It's just, you know, markets may change, but humans stay the same.
What about assets, like for example, like ETF or currencies, future markets, that kind of stuff?
Makes absolutely no difference. We have ETF traders that choose this. We have crypto traders applying strategy number 4, and it makes no difference what time frame as well. The same answer applies. It's a pattern that repeats itself over and over and over again. That's the beauty of strategy 4. It's so flexible and so transferable onto any market, any time frame.
Do you have a preferred time frame personally, Steve?
Well, I do. I really don't like to talk about it that much, because once again, we feel that that's a crutch, because then people go, oh, well, if Steve's been trading this for 50 years, that means that I should trade the same thing. And remember, our whole philosophy is no, you have to find out for yourself. I personally will tell you, I like to trade it intraday because that's my background. I was trading on the floor. So when I first started using this, I was in and out in five minutes at a time. So I've transferred that over onto my personal trading. That's my background for quick intraday trading. And because of my schedule of teaching and doing webinars like this and mentoring and having my own private webinars, I don't have a lot of time to be looking. So when I have a free moment, I will intraday trade. That's what keeps me going. But we always tell our students, listen, the best market and the best time frame is the one that makes you feel the most comfortable. Because I literally have students that will tell me, gosh, Steve, I love strategy 4. It works the best on weekly bars. And then I'll get another email from another student that says, gosh, I can't find a better time frame than a 15-minute time frame of the British pound. It works amazing. And so it's not that they're both wrong or both right. It's just what makes you feel the most comfortable and what fits your trading persona.
Right on. That's the end of the questions.
Yeah, that's it. I think I either scared everyone away or else I answered every question during the presentation.
Yeah. No, I'd love to talk about how to get this though. It's been really popular.
Great. Yeah, I like I said, I use it on a daily basis.
Cool. All right, can go ahead and take this over, and we'll just talk a little bit about what's included. Steve, thank you very much for being here.
Thank you, Jeff, and thanks for everyone attending. I hope you have a great day, great trading day as well.
All right. Cool. All right. So as you can see, yeah, of course, it's going to have a lot of things that you're used to in MetaStock. You have the exploration, the expert advisor comes with a layout to help you get everything set up. And one of the things I particularly like, again, Steve comes with so much experience, 12 training videos. So here they are. You get the strategy number 4, the rules, the buy, sell line. We had a question on exits, exit and entry techniques, position sizing, stop placement, extending your gains. Just 12 really, really thorough videos. Because again, it's a toolbox. The better you understand how to use that tool, and these are all included as part of that. It's going to help you understand how to use that tool and kind of get it implemented into the market. So normal price for this is $5.99. It's $4.99 here as part of the conference. We are going to include all of that training. We're going to include the MetaStock trial. So if you've never tried MetaStock, MetaStock's had been the highest rated software in its price category. It's been there for 32 years in a row now. We're going to give you a 30-day money-back guarantee. We're going to have somebody call you. They'll help you get everything set up. They'll help you. They'll do a one-on-one walkthrough if you're a brand new customer to MetaStock. We're going to give you unlimited support. Again, we want this to be something that's helpful for you. So if it's helpful for you, great. You can keep it. If it doesn't help for you, if it doesn't help you find those better trades, you have a 30-day money-back guarantee on it. So you can give us a call, 800-882-3040. metastock.com/specialisttradinga or metastock.com/saleschat. So there you go. All right. Want to talk a little bit about the Traders Forum. The Traders Forum, we've been talking a little bit about it right now. You can go up there, you can chat with other market traders, tons of technical analysis videos. It's designed to be a community of traders helping traders, tons of free information about how different markets and PDFs about different candlestick patterns. All of that is for free. And I'd invite you to come join us at www.thetradersforum.com. It's been a lot of fun. We've been kind of working on this as a community project for about a year. We're almost up to our 1,000 members, which I think will be a big milestone for us. Thetradersforum.com. Come on. We'd love to see you there. Greg, I want you to give you a second to kind of get ready. We're going to do a prize drawing. Let me go ahead and kind of do this. We'll just make a little bit of a change here. Greg, how you doing?
Hey, I'm doing good. How are you doing?
I'm doing great. Let's see. Let me get the list of prizes real quick.
All right.
Okay. For this one, Silas Peters. He hasn't talked yet, but we're going to give away his price action weekly playbook. Let me just the dollar value on that is $9.97, and you basically get Silas Peters' weekly price action pivot alerts. You'll get his top trade of the week. It'll help you avoid hours of research in the market. A daily market analysis video report, expert analysis, all that kind of stuff is going to be your prize. Now, what I need from you, Greg, is I need a number. The number can be anywhere between 1 and, let me go ahead and get rid of this reminder so I can see the number, 1 and 44.29.
Okay. Say that again, 1 and 42.25? Yeah.
44.29.
Okay. All right. According to Google random number generator, that is 272.
Ooh, I went low. That's Elizabeth B in the USA with a Gmail account. So Elizabeth,
Congratulations.
if you're
Congratulations, Elizabeth.
if your last name starts with a B, you have a Gmail account and you're in the USA, you probably just won. If you're watching live, you don't have to be present to win. You only have to do one thing to win. What do they have to do to win?
Oh,
Greg?
that's easy. Well, they have to really want it.
Yeah, they have to get lucky.
Also, they have to be really lucky. Well, the odds are, 1 in 4,429, but we're doing this several times every day this entire week. And the way to be eligible to win is just go to metastock.com, click on the banner at the top of the page, and register there. If you're watching this on GoToWebinar, you don't need to do that, but if you're watching this on YouTube, that is required.
Okay, we'll do this. Just making a note of what the prize is. If I forget to do this, I had to go look at the YouTube video and find it, and I don't want to do that. So,
well, and while you're doing that, I can tell people that we would sure appreciate it if you would like and subscribe if you're watching this on YouTube right now, and just ring that bell. It helps us a lot. I think we're up to about 78,000 subscribers right now, and we appreciate that.
yeah.
Is that all good, Jeff?
That's it. And thank you for the assist.
Right.
I'm going to talk a little bit just to kind of, we have a few minutes. So I want to say thank you for all of the presenters, all the speakers, the sponsors, everybody that's kind of been part of this. Again, one of the things I would say, I've been here for 27 years. This stock's great. It's been rated #1 in its price category for 32 years in a row. We have you scan the markets, test trading ideas. We've got a forecaster. All these are tools that we're going to talk about over the course of the week. Tomorrow, Kelly's going to come in and he's going to talk a lot about the system tester and how to test trading ideas, and has one of the best testers available in the market. But all of this, we just did a major upgrade to our MetaStock DC platform where you can get streaming delayed data in our DC product. Before it was just yesterday. Now it streams all day long. You can scan the markets. All of that starts at about $75 a month for the DC version. We have a real-time version that starts at about $210 a month. You can get either one of those. If you buy a month, we'll give you the second and the third month for free. So it's like $25 a month. You can use it for 3 months if it's helpful for you. We're also, just to remind you, we're going to sit you down with one of our support reps. They're going to walk you through the software. They're going to show you how to use it, how to do whatever you want to do in the software. We're going to give you unlimited access to our support team. A tool is only as good as it is as you can use it. And so we want to make sure it's useful. We've had so many customers that have just been using MetaStock for decades, have been helping us win the award by voting for us year after year. Give it a go. And if you don't like it, you're going to be out $75. If you do like it, and that's for 3 months of access. If you do like it, you're going to be able to use it month after month after month and help you identify and find those good trades. I wouldn't be able to trade without it. I think it's going to be something that's very helpful for you. So you can get any of the offers that we're talking about today at metastock.com/conf-promo. You can call us. We can help you get it set up. You can set up that white glove service appointment, 800-882-3040. Now you can also go to metastock.com/salespchat. So big thanks to MetaStock and all the MetaStock. It's where I've been employed for years and years and years, and such a great software, such a great help to me and the trades that I do. I really enjoy representing the company. So metastock.com/conf-promo, 800-882-3040, or metastock.com/salespchat. I want to welcome our next speaker, Blane Markham. He's here for the very, very first time. He's going to talk about a method that's brand new to MetaStock called Copilot, and it's cool. You're really, really going to enjoy this. I'm very interested to see. I'm always interested when we have a speaker in here for the first time. Blane and I have been talking a lot recently. He does a really, really good job, and I think he's going to kick it out of the park. So let's go ahead and kind of give him a warm welcome. Blane, how you doing today?
Hey, Jeff, how's it going? I'm doing well. I was getting my mic and camera set up here. Can you hear me okay?
I can hear you. You sound great. Yeah, and I can see you.
Fantastic. Yeah, I'm super excited to be here today. I just want to thank you personally for inviting me to come on and present today. Like I said, I just super excited to be here, and really looking forward to the presentation. I hope the folks will enjoy it. Let me go ahead and get my screen share taken over here. Let's see.
There you go.
All right, and you can see my presentation here.
Yeah, I can see that in the non-expanded view, but as soon as you go to full screen, I'm sure we'll be able to see it full screen.
Perfect. Yep. Awesome. But yeah, no, super excited to be here. Sorry, just getting some things oriented on my page here real quick.
No worries.
Perfect. Yep. But yeah, it's been a wild time in the markets lately. This past month we just closed out on in April. I can't think of a month in recent history where there's been more noise across the markets. Just more things going on, just noise in general, just choppy, crazy trading action. But with all that said, the S&P was just up 9 days in a row. But again, with all that said, that's why I'm here today. What I'm going to talk about is a method and a trading tool you can have in your own personal trading tool bag to help block out all that noise and just focus on the market technicals and do some technical analysis just to assess where things are. So, Jeff, if things are all good, I probably can go ahead and get started here.
It's all you.
Awesome, perfect. Well, I'll go ahead and take over. Well, folks, Jeff just gave me a great introduction, so thanks for that. But my name is Blane Markham, a member of the Hughes Optioneering team here. This is Chuck Hughes's optioneering team, and I'm one of the top strategists here on our team. And today what we're going to be talking about is actually one of our favorite tools that we've developed here in-house on our team. It's called Copilot. It's one of our favorite technical analysis tools that we use to analyze the markets and find different trading setups out there. And so hopefully it's going to offer you just a better flight path forward to offer you some smarter trading and methodical trading in your own personal trading. So with that, let me go ahead and get this presentation going. So again, if you just hopped in the room, my name is Blane Markham, and I am just fired up to be here speaking at your conference today. So again, thank you so much, Jeff, for having me. And here's just a quick roadmap of just where I'm going with today's presentation. So, I want to first start off with today's presentation, just doing just a basic overview of just, kind of explaining some of the basics of just what technical analysis is and why in the world do we use it? Why is this useful? Because I'm not sure what the experience level is of everybody out in the audience. I'm sure there's some expert traders that are, highly experienced, maybe even more, very well more experienced than I am personally. I'm sure there's probably a ton of you out there. But there are also maybe some folks watching at home today that maybe have never traded an option or have maybe never really dived into stock charts. And, just so it doesn't sound like I'm speaking a totally different language for them, just want to cover some of those basics up front. Now, after that, I want to go ahead and start hopping in to Chuck and our team's Copilot indicator, just give an overview of exactly what this is, and then kind of move on into understanding the buy signals that it identifies, and then also the profit targets and stop losses that it points out for you. After that, I'm going to go ahead and hop into the role of two additional parts of the Copilot tool. It's going to be two of the lower indicators, lower studies, and why they help in signal strength confirmation for those buy signals. And then after that, I'm going to go into an in-depth analysis of the price action on the buy signal day. So when a buy signal is generated, what actually it's looking for, and go piece by piece and break that down for you. After that, I'm going to go ahead and talk about how Copilot is actually able to enhance the trade profitability using those sub indicators. So this is the probability of the trade's profit probability. So after that, I'm just going to take just a quick look at just another portion of our Copilot tool. So not only is this just an indicator, it also has a scanner aspect to it as well. So this is, of course, available through the MetaStock software platform. You have that through the explorations, but I just want to just briefly touch on that and kind of explain how that works and how we like to use it. After that, I'm going to walk through a few recent examples of some successful Copilot trades. So some signals out there that our indicator identified and have done pretty darn well. So we'll get to those. I think you'll be excited to check those out, and then figure we could wrap things up with any time we have left over. Just a short Q&A if anybody has any questions for me or about the Copilot indicator itself. So as I said, we're going to be starting off today's presentation just with just a very basic level of just what in the world is technical analysis, if you've never heard of that term before. So basically all it is, it's a methodology for analyzing various kinds of securities using historical and statistical data, namely things like stock price and stock volume, amongst a handful of others. Now, generally you're going to see this expressed in a form of typically like a chart or a graph, so think a stock chart. And we're doing this to easily help identify existing price trends in that underlying stock, index, equity, whatever you're looking at. Now, in technical analysis, generally speaking, there's two major disciplines of technical analysis. So the first is going to be the trend following discipline. So that's going to be using statistical data to form trend lines to help determine a security's current trend and likely future movements. Now, the second discipline is going to be pattern identification, and they are looking to identify patterns which historically precede preferred price movement. Now, this probably poses a question, especially for any beginners out there. Of those two, well, which one should I be using? Which one's the best? Now, personally, I think both forms of technical analysis are equally valid approaches and each have their own merits, certainly. But myself and our team, we specialize in the trend following and statistical analysis discipline. So we like to follow trends. Now, next, I want to touch on something that is truly key to this discussion, and it is why do we take a technical analysis-based approach to markets? Well, we do it because there's several benefits of following a technical-based analysis approach. As I mentioned when I first hopped on, man, we just went through a just wild roller coaster ride of a time in April's trading. We had the S&P 500 peak to trough sell off more than 15%, and then by the end of the month, completely recoup all those gains and just round trip those entire losses. So there was just so much noise across the markets over the past month. But with all that, if you're just trading off of sentiment and your feelings and what you're seeing on consuming through different financial media, whether it's CNBC or wherever you consume things from, when you get in those really hyper volatile times of all that noise, it can be really hard to block that out and try to avoid making emotional trading decisions. But that's the reason we like to focus on a technical based approach to following trading the markets, because it's rooted in statistical analysis and just simply analyzing existing stock data that's out there. And by doing that, we can identify trends using our analysis of this existing data. And by doing that, we can create a rules-based technical trading methodology and approach to markets. Now, by creating and following a rules-based technical trading system, it's so helpful because it helps to solve one of the most common issues that investors face. And it helps you to avoid making those emotional trading decisions I was just talking about. And that, whether that be panic selling near the bottom when things just seem like they could not get worse, you're panic selling near the bottom, or on the inverse of that, going all in near a market top. Using a rules-based technical system, this can help you to avoid these common investing blunders. Now, again, here are just some benefits of using a rules-based technical system approach. As we mentioned, it provides you very specific rules and guidelines about which actions you should take when following the system. It helps to eliminate those emotional decision making times, where you could, make a emotional trading decision that could really hinder you over the long term. And they also provide clear and concise entry and exit signals for your trading. Now, regardless of your own personal trading experience, it really is just this simple. Whether stocks are selling off, market volatility is spiking through the roof, and that noise out there across the market could just not be louder. Or even if the stocks across the market are printing new days high after high, no matter the case, if you stick to the system's time-tested rules, this will serve as a guide through these uncertain times in the markets. Now, this is going to help to allow you to block out all that noise I've been talking about and make measured, methodical trading decisions regardless of what the current market conditions are. Now, I want to go ahead and share with you one of my personal and our team's absolute favorite technical analysis systems that we've ever created here in-house. And we call it Copilot. That's the name of what we've developed here with this tool. Now, Chuck's Copilot indicator, it's similar if you're familiar with Chuck's other work over the years in his different systems. It's similar to Chuck's power trend system, but it's not exactly the same. There's some nuance there. There's some differences to it. Now, just basic overview, in order for a stock to be on a buy signal, that stock or whatever you're looking at must be trading above the 200-day simple moving average, as well as trading above its 35-day exponential moving average. Now, additionally, it factors in the Keltner channels as well into the system, and it finds stocks that have pulled back below their upper Keltner channel and are currently trading above the middle Keltner channel to help confirm the resumption of that bull run on the day of the buy entry signal. So you can see right here, here's a snapshot of our Copilot indicator. So this is what it looks like. This is taken from the MetaStock charting software here. So a great program that MetaStock has built together, and you can see Copilot is now integrated into that. So you can actually access this in MetaStock. So this is what it looks like here, folks. And so you can see the top chart here, which is boxed in this bright green box. This is the main Copilot indicator. So this is just looking at a daily stock price here, and you can see a green up arrow and some profit targets and stop losses printed in the main top indicator there. And so, as I mentioned just a second ago, the Copilot buy signals, they're going to be indicated on this top chart here by a green up arrow. So you can see just below the daily candle when the buy signal is generated, there's a green up arrow right here. So when the system, it's running in the background, checking out all the different stocks out there. Once it finds one that meets the system's criteria, it's going to print that green up arrow on the chart there on the day of the buy signal. Now, on the day of a buy signal, you're also going to have this, it's doing this all automatically for you in the background. It's going to print 2 profit targets and a stop loss that are going to be automatically generated and printed on that chart for you. So you're going to see those listed right above. Just to show you, you can see those 2 lines of green dots here and the line of red dots there. The green dots are the profit targets, the red dot is the stop loss. And then these profit targets and stop losses, they're going to remain on the chart for the duration of that trading signal until either, the stock trades up through those profit targets or if it falls down to the stop loss. So again, you can see this would be the first profit target here, would be the first line of green dots, and then the second line of green dots is going to be the second profit target line. And then now down here we have just one stop loss line as well. And just to give you just a brief idea of just how these are calculated, they are personalized to each and every stock or equity, whatever you're looking at, could be crypto, whatever it is, they're calculated using a derivative of each stock or equity's ATR. So that's how these are generated. So they actually are personalized price targets. So they're not just set using some arbitrary metric, they're personalized to each individual stock. Now, moving on to talk about some of the lower studies here. So our testing over the past, once we were initially developing this and testing it, it revealed that the closer the high, or excuse me, the closer that the close and the high are in the day of the buy, the more likely that a trade will end up becoming profitable. So our Copilot buying pressure, this is our first lower study. So the Copilot buying pressure lower indicator finds the distance between the high and the close for stock on that buy signal day. And the closer that the high and the close are, well, it's going to translate to the taller that bar in that chart is, and therefore stronger that the buy signal is. So you can see here, here's another snapshot of that same buy signal for CME group here. So you can see in the middle study right here. So this graph here, this is our first lower study. This is our buying pressure study. And we use this as a secondary strength confirmation indicator to help find, once we get all of our buy signals, this is how we kind of sort through them. So this is how we're confirming the strength of those buys. So we use this to help identify the strongest buy signal on any given day when we have some. So you can see it's a bar chart, and it's showing you the individual buying pressure on each and every single trading day. So how you kind of decipher this? It's actually color coded to make it a little bit easier for you to use. So it's just as simple as this: the brightest green bars, they're not only going to be the tallest, but they're also color coded. So you can see on these tallest green bar days, they're actually going to be a brighter green, which that's going to be our ideal or optimal. That's our absolute preferred buying pressure scenario. So you can see on the day that we had our green bar here, had a pretty tall bar. It was almost all the way up to the top where it was a bright green, but it was actually our second tier here, which was like a darker green. So this is still really good. This is strong. We would definitely still consider that, but you can see we had a nice dark green buying pressure bar there on the buy day. Now for the orange, you can see that here it's a little bit shorter. That's considered a moderate buying pressure. We would still consider those buy signals. We wouldn't just throw those out automatically, but we may have some other better opportunities on any given day. So the orange is going to be moderate. That's more or less just okay buying pressure. And then when we have a red bar here, you can see these are the shortest ones represented here. Those are going to show up as red, color coded, and that means there's really poor buying pressure at that point in time. It's really not a signal that we would probably consider on that day. Now, on any given day, the Copilot system, it could, if you run the scan, there could be 5, 10, or even more Copilot buy signals that get pulled up. So that's where these secondary lower studies really come in, to be a huge help, is because, you could be scanning, say you're scanning the S&P 500 like we like to do. You could come back, you're scanning 500 stocks, you could come back with a number of buy signals, and you get this, you just get this giant pool of buy signals. You're like, well, what do I do with this? How do I start parsing through this to find which one is the best one? Well, that's where these come in. This is why we built these lower studies in here, is to help you identify, of however many buy signals you get, whatever index or group of stocks you're scanning, it's going to help you identify which one is the strongest. So the buying pressure lower study can help you pick the strongest buy signal on any given day. Now the stock, again, with the highest buying pressure value, this has the closest distance between the close and the highs of the stock. With that highest buying pressure value is going to be one of the strongest buy signals. Now, as you saw probably in the chart there over the Copilot indicator, there's actually a second lower study as well. And again, our testing when we were first initially developing this showed that a shorter term MACD trading above a longer term MACD is also a bullish sign and is more likely to result in a profitable trade as well. So we've built in a second lower study as well to enhance this even more. So the Copilot trend lower study, what this does is it plots a shorter term and a longer term MACD. And if you're looking at it, if the shorter term MACD is trading above the longer term MACD, then this confirms the strength of that buy signal. So again, you can see the very lower study right there. You can see again, it's boxed in the bright green box right here. This is another, excuse me, this again serves as another secondary trend strength confirmation indicator that we like to use alongside the buying pressure confirmation indicator. So you can see highlighted here, we're pointing out that the line that is noted by it's filled in with a black line, thick black line. So even though we have both the shorter term M and a longer term MACD lines being plotted on that lower study, we have the shorter term highlighted because it just makes it a little bit easier to see. You can see that one's outlined in black right there, so you can clearly see where the short term MACD is running on that lower study. Now, the longer term MACD is also down there, but it's the one that is not highlighted and outlined. So you can see that clearly. So this one with the black line, that's indicating where our short-term MACD is running. And then the one that is not outlined, that is our longer-term MACD. Now, on the day of a Copilot buy signal, what we want to see is we want to see that shorter-term MACD trading above the longer-term MACD to help confirm the strength of the buy signal. Now, to actually add to that, we actually like to see in the perfect scenario, we would actually see both of them trading above the zero line as well, which is this line right here. It's the line where, as it oscillates back and forth, it's turning green and red. Just to add to this, if we see the MACDs both above the zero line, then that's even better. It's not a requirement, but that's an even better scenario is if we have both of them trading above that zero line and that short term is above the long term as well. So now that we've kind of gone over an overview of the Copilot indicator and just a brief overview of how it works, what it's looking for, how it's trying to identify these different signals out there across the markets. Next, I want to go ahead and hop into a recent buy signal example that Copilot identified for a really strong buy. So it's actually going to be the chart we've been looking at here in our example. It's actually for CME Group. The ticker is CME. Probably very familiar with this if you track markets a lot. But you can see right here, back on April 11th, you see the Copilot system actually identified a pretty decent looking buy for CME. So you can see right here, we have a green up arrow that Copilot identified for the stock. So you have our up arrow right there. You see the profit targets and stop loss. And just diving a little bit further into that buy signal, you can see that, as I mentioned earlier, some of the just basic criteria that this thing is looking for in the background. Remember, the stock has to be trading above its 200-day simple moving average. So you can see this line right here, it's kind of a darker blue, kind of grayish. This line right here, this is our 200-day simple moving average. So you can see where the candle is for that day. Clearly, CME stock was trading above that 200-day simple moving average. So that box is checked off right off the bat. And then next, remember, we're also looking at the 35-day exponential moving average. So you can see that is represented by our darker blue EMA line right here. And again, you can see that candle, it's kind of right at it. It's just a touch above that 35-day EMA, but nonetheless, it is trading above it. So both of those EMA and SMA boxes were checked off right there. So the two trend, long-term and short-term trend indicators were checked off right off the bat. And then right here, we also have included on the chart our Keltner channel band. So you see this black line here, this is our upper Keltner channel band. This black line here is our lower band, and then we have a dotted blue line here in the middle. Now, you can see here is the candle again where the buy day generated. So you can see that we are trading below our upper Keltner channel, so signaling the stock is not currently overbought or overstretched, extended in the short term. but it's also begun its, it's resumed its previous bull trend. As you can see, the top wick of that candle, was trading above the middle Keltner channel for a good part of that day there. So you can see that it is actually above the middle Keltner channel as well. Now, as we mentioned, once we identify that we have a buy signal, all those criteria for just the basic underlying criteria for the buy signal are met, then we want to go ahead and consult our lower studies to help figure out if this is a really strong buy signal and kind of, figure out where it sorts out in the mix of the rest of them. So you can see we had fairly actually moderate buying pressure right here. So it was actually pretty close to going above this next threshold line right here to be, in the darker green, so a good buying pressure. But again, even if we have a yellow bar, we are still going to consider that one because, as long as the buying pressure bar is not red, then these are going to be signals that we will consider. Just, the taller that bar, the better. So, we had, fairly decent buying pressure on this day with a taller yellow bar. Not perfect, but still strong enough. So again, we would still consider this buy signal here. And then looking at our second lower study here, so our other trend confirmation indicator on the bottom, looking at the MACDs, we can see clearly that our shorter term MACD is indeed trading above the longer term MACD, which you can see that the MACD that's outlined with the black line here is above the one that is not outlined. So again, that's how you can tell right there. So both of our lower studies there are confirming that, we have strong enough buying pressure to consider the buy, and then we also have confirmation from our MACD indicator on the bottom saying that yes, this is a strong buy. It's in the middle of a breakout right now. And just to see how this trade ended up performing, remember, this was generated on April 11th. So, this was just to put context around when this buy signal was generated. April 7th was the day that we hit the recent low in the markets, when the S&P traded all the way down to 4850. Stocks were really getting washed out. I mean, sentiment couldn't be much worse. I mean, it just, the conditions in the market were very, very fraught. I mean, people thought the sky was falling, things were not great. But I mean, just a few simple days later, you see a buy signal was generated right here for CME. You can see that green arrow right there. In that moment right then and there, there probably were not too many people that were thinking, oh man, I better be looking for some great, long opportunities in the market with some options plays. But hey, look what the Copilot indicator did. It blocked out all of that noise back there in early April and generated this buy signal. You can see it was just scanning the conditions. It found a really solid looking opportunity out there across the market. And look how it played out. You can see just a few weeks later, this is about 10, 11 trading days or so later, on April 29th, the stock blew through both of the profit targets. So you can see it traded up briefly, stayed just kind of consolidated for about a week or so, and then it resumed the bull trend yet again, breaking through. It first hit the first profit target right here on this day. You can see it hit the first line, and then on that following day right there, it actually traded and broke through the secondary profit target. So that buy signal worked out quite well right there. Now, up next, I'm gonna go ahead and just cover just what it's like, using our Copilot buy signal scanner in the MetaStock platform, and just kind of, when our team is looking to use it, just kind of our methodology of how we like to use the scanner. So when we're using the Copilot scanner, in general, not all the time, but in general, we like to most often, excuse me, sorry. We most often like to scan the S&P 500 stocks. We like to, generally limit it to the S&P 500 index. And, one reason for this is, there can certainly be exceptions to this, but the reason why we often like to do this is because S&P 500 stocks are, generally speaking, going to have the most liquid options out there available. And that's how we like to trade these Copilot buy signals, is we like to find different option setups based on the best Copilot buy signal that we find. So, we're usually going to limit our scans to the S&P 500 stocks. You can scan all different indexes, different pockets of the market, sectors, whatever you want to do, but that's just generally how our team likes to do it. We like to limit it to those S&P 500 optionable stocks. And, when you're scanning an index that has 500 stocks in it, on any given day, pending market conditions and how stocks are performing, it could return several or even many buy signals on any given day. So that's why those additional trend confirmation indicators that are built into Copilot that I've just went through with you, that's why those are so important, is to help you parse through all those buy signals and determine which ones are the best ones. So this right here, this is just a snapshot of just the exploration right here within the MetaStock platform of, this is, excuse me, exactly what you'll see right here. So I'm gonna take a quick sip of water. Sorry, my allergies are bothering me here, folks. Sorry about that. But again, so you can see right here, here's the exploration snapshot. So when you go ahead into MetaStock and run that exploration for Copilot, again, right here, I've scanned the S&P 500. I ran this scan actually this past Friday after the close. So you can see there were actually just 3 stocks that were meeting our Copilot buy criteria as of the close on Friday. Remember, on Friday, that was culminating a run where the S&P 500 was up 9 consecutive days in a row. It was a stretch in a series of performance that the index had not seen in more than 20 years. So largely, a lot of stocks across the index were, fairly overbought at that point. So that's why there weren't more stocks being scanned at that point. Typically you'll have more buy signals than just 3 on a given day, but on Friday, things were pretty overextended after the 9-day run that stocks had been on. So that's why you only had these 3 pop up right here. You can see PODD, you had Roper, ROP, and then of course PGR also there as well. So those were the 3 buy signals that it found. And so now that you have your buy signal showing up there, how do you start to parse through? How do you sort these to find which ones are the best looking indicators? And that is where those secondary trend confirmation indicators come into play. Now, the nice thing is that in the scanner, in the exploration scanner, we actually have one of them built into the scanner aspect as well, and that's going to be the buying pressure filter. So you can see that it's actually boxed in green right here. So you can see this column right here. So when you run your scan, this is going to pop up. You're going to see the buying pressure filter built right into that scanner. So this is going to help you just right from the bat. Once you have that scanner, you don't have to go through each and every stock chart, just looking to see what the buying pressure is at. It's going to tell you right here. So now that you have this, you can actually go ahead and just sort this column, just click pressure and just sort it, in a descending order. So you have the stocks with the highest buying pressure showing up at the top and going down to the lowest, and just start at that stock that has the highest buying pressure, and just go through and see which ones have the, which buy signals have double trend confirmation from the lower studies, which ones have the strongest confirmation, things like that. So looking at these 3, since we just had 3 buy signals on Friday, we can clearly see that the buying pressure for PGR is the highest. You can see it's coming in at 0.87, where the other 2 are at 0.53 and 0.50. So just to give you an idea of the scale on this, it runs on a scale. The highest that the buying pressure could be 1.00, so just 1 runs all the way down to 0. So if you see it coming in, the closer that buying pressure value comes into 1, that is indicating here in the scanner that is, the stronger the buying pressure, the closer it is to 1. So you can see pretty significant buying pressure for Progressive right here coming in at 0.87. So with that, that would have been the strongest buy signal from this past Friday. So, we go ahead and pull that up in our MetaStock charting software right here. And here you go. So you can see here is the buy signal that printed on Friday. So you can see clearly May 2nd. So there was Friday. Here's our green up arrow for the brand new buy signal that was generated on Friday. And you can see here are our 2 profit targets automatically printed on the screen, and our stop loss right there. And sorry, excuse me, let me go back to that. So here's our buying pressure lower study. So you can see right here, this is a tall, very bright green bar. So that is signaling, that is very strong buying pressure for that PGR buy signal as of Friday. And then in our final lower study down here, the trend lower study, again, you can see that both of our MACDs are above the 0 line. So as I was saying earlier, that's preferred, not required, but preferred. But we do see that our shorter term MACD is just by a touch, just barely, but it's trading above our longer term MACD. So we have double trend confirmation down here on the bottom from both of our lower studies as well. So that paired with the buy signal for that day, that is a very strong looking buy setup for PGR. So with that, the next question after you see that, this question arises: how would we look to go ahead and trade these Copilot signals? Now that we've identified which stock is the best, what do we do with it? So Copilot, just by its nature, it's designed specifically to target bullish setups out across the market. And this could be as simple as just looking to purchase the stock shares. However, our team, what we prefer to do with these, our preferred trading method for these signals is by utilizing call options on these stocks with the buy signal. So we first like to identify which is the top stock amongst all the Copilot buys on any given day, and then look to select a call option to purchase for that stock to benefit from that stock's trend should it continue. Now, just a few call option selection criteria here for just how we would look to go about selecting the actual call option strike we would look to trade. So after we identify the Copilot buy signal, we would often we're just going to be considering option expirations that are somewhere in the neighborhood of about 1 month out from present. So these could be weekly option expirations, or they could be monthly option expirations. But it's going to be weekly or monthly options, roughly about 1 month out. And they're always going to be in the money call options. We're not looking to trade out of the money or at the money call options. That's not really what we like to do. That's certainly that is available to you if that's your preferred method of trading options, but that's not really what our team likes to do with this. We like to stick to those in the money call options only. But generally, with following these Copilot signals, we generally stick only slightly in the money. So we're not going crazy deep in the money, going 20, 25, 30% in the money, buying some, really, really expensive option. That's not what we're looking to do. We're just sticking in the money options, but just slightly in the money. And this, of course, is going to be pending contract availability. Every stock out there, the options that are offered on them, they can vary. Some, have, fairly limited strikes that are offered. Other stocks have strikes that are, they're offering options with strikes at every dollar along the way. So, of course, it's going to pin contract availability. And then also, we're often looking to purchase multiple contracts of that strike that we end up settling on as well. So going back to the PGR signal from this past Friday, we identified that was a very strong signal for PGR. So this would have been the ideal call option for Friday's buy signal. So we probably would have landed on the PGR May 30th. So, these options as of Friday would have been, just about a month out. So that's right on par with the time frame we're looking at. So we've gone with the PGR May 30th, 2025, and likely settled somewhere around the 275 strike call. And at the close on Friday, that option was trading at 13.7 points per contract. I haven't seen where it was trading at today, but I did see earlier that PGR was actually up a little bit today. So that's probably actually increased a little bit. So that trade, had we have taken that trade on Friday, probably be performing fairly well right now. So now I've gone ahead and walked you through how the Copilot system works, what all is entailed in it, and how our team likes to use it. I want to go ahead and show you some recent successful trades that Copilot has identified, some of the recent signals from this tool of ours, and show you how well they've worked out. So here's the first one I want to touch on right here. So this is on this was the buy signal for Kroger. So back on March 26th, so this was a little over a month ago, back on March 26th, Copilot detected a very strong buy signal for Kroger. Ticker is KR. You're probably all pretty familiar with Kroger. Might do your grocery shopping there. Who knows? But again, you can see here's our green up arrow right here. Here's our profit targets and stop loss printed on the upper chart there. You can see we had a very tall buying pressure bar right here, bright green bar. So that's great buying pressure for Kroger on this buy signal day. And again, you can see while not above the zero line, we still do have our shorter term MACD trading above our longer term MACD. So we do have double trend confirmation down below. This is a very strong buy signal that was generated back on March 26th. Now, back on March 26th, we probably would have looked at this specific call option right here. This is looking, just about a month out, not quite, but it was close enough. It's in that neighborhood. We would have looked at the KR April 17th, 2025, 63 strike call. And back on that date, that option was actually trading at 2.3 points per contract. Now, just a simple few days later, remember this buy signal was generated on the 26th. You can see that on the chart right here. Just a few trading days later, just 4 trading days on April 1st, Copilot actually issued the exit signal for this trade. So you can see actually on March 31st, we hit the first profit target, but on the following day on April 1st, we actually hit our second and final profit target after that buy signal. Now, had you placed that trade just a simple 4 trading days prior, that trade would have actually been up 82.6% again in just 4 trading days time. So fantastic result right there. So you can see this is actually what that call volume or call value, excuse me, would have been on April 1st. So remember, on the buy signal day, that 63 strike call was trading at 2.3 points. But fast forward to the day that the exit signal was generated, it was actually had increased to 4.2 points. So that would have been $190 profit on that contract, which translates to an 82.6% return. Now, here's one more. This one was actually generated on April 9th. Again, you can see here's our green up arrow right here. So this signal was generated for Encompass Health Corp, ticker is EHC. And again, this was a very strong buy signal that Copilot identified. And again, we'd just like to put context around this, folks. The whole theme of this presentation, and I mentioned it right from the get-go, was being able to use technical analysis even in those really difficult times in the market when just saying things seemingly could not get any worse. Sentiment is totally poor. It's really washed out. Seems like the sky is falling in the market. And that's exactly what was really happening on April 9th. I mean, remember, just 2 days prior to that, that's when the S&P 500 hit that trough bottom that we experienced recently. It had fallen all the way down to 48.50 roughly. So we were still having some just insanely volatile trading sessions here on April 9th. I mean, if you go back and look at an S&P 500 chart, you'll see exactly what I'm talking about. But despite all that, this Copilot system, this is a technical analysis based system, so it blocks out all of that noise. It doesn't care about all that. It blocks it all out for you, and it's just going to go out there and seek out the best looking opportunities in the market. You can see it did exactly that right here. So on April 9th, Copilot identified this very strong buy signal for EHC. So again, you can see here is our green up arrow. Here's our two profit target dots, and here's our stop loss dots. So those were all generated right there. And then consulting our two lower studies down here, see if we have confirmation of the buy. We do have very strong buying pressure. Again, really tall, bright green bar right there for EHC. So we love to see that. That's great. And then we also get confirmation again from our Copilot trend lower study, as we can also see that the shorter term MACD is trading above our longer term MACD. There's not a huge gap there, but nonetheless, that shorter term is trading above the longer term. So that's what we're looking for. That's what we like to see. So again, a very strong buy signal generated back on April 9th in the middle of all that market chaos that was going on. Now, at that time, we would have likely looked to trade this specific call option right here. So this would have been, just a touch over a month out. This is again pending the available option expiration strikes here. So I believe EHC only had monthly expiration, so we would have had to go with the May 16th, 2025, and we would have probably landed on the 100 strike call. And back on April 9th, that call option was trading at 5.7 points per contract. Now, fast forward just about 2 weeks later on April 25th, the Copilot system actually issued the exit signal for the EHC buy. So again, you can see right here, the reason the dots don't go all the way across is because we had a second buy signal initiate, and that one, while its stop was just a little bit higher, it actually triggered the stop. But if you look at this one right here, that stop loss level is just a touch below that one. So that actually keeps going across for this buy signal. So you can see the stock didn't drop down to this stop loss level. So the buy signal was actually still active. So that would have been still going across. And you can see on this day right here, when EHC gapped up, it jumped above both of our profit targets right here. So on April 25th, that's when EHC had that big gap up. This buy signal ended up working out great, and it issued the exit signal for that. Now, again, had you placed that trade we just discussed just a second ago, just a simple couple weeks prior, that trade would have gained and been up 159.7%. Again, in just a little over 2 weeks time. So this is what that call value was on April 25th. So you can see again, the EHC May 16th, 2025 100 strike call. It had increased all the way up to 14.8 points per contract. Remember, at the near the close at the day of the entry signal was only trading at 5.7 points. So that would have been a $910 profit per contract, which equates to that 159.7% return, which you can see shown there. Now, as powerful as some of those results that I shared with you right there from Copilot are, I believe what I'm going to be sharing next with you is going to be even more compelling. So I hope you really enjoy this. So we're going to go ahead and touch on a couple, this is kind of how we're going to wrap things up. This is towards the end of my presentation. I want to touch on a few high accuracy Copilot buy signals just from this past year, just to truly show you just how well this Copilot tool can perform, and also, it has a fairly high frequency of buy signals as well. So let's go ahead and hop in. So the first one, we're going to touch on Kroger again. So again, you all are probably pretty well familiar with Kroger. Might have done some grocery shopping there recently. I know I have as well. So the ticker is KR. And so this is looking at the past year worth of trading for Kroger stock. Now, looking a little further into this chart, you can see a lot of green up arrows if you look close. So you can see one here, there's one here, there's a bunch through here, all these different green up arrows. So over just the past year of trading for KR, Copilot has actually identified 23 individual unique buy signals just for KR, just over the past year. Now, of those 23 buy signals, that's just for one stock out of the S&P 500, that's a lot of different buy signals. So plenty of opportunities to hop in on a trade here for KR. But of those 23 total buy signals that were generated for KR over the past year, get this, 22 of them ended up resulting in a winning trading opportunity had somebody been following along with those buy signals for Kroger. So that translates to an incredible 95.6% hit rate on Kroger stock using the Copilot indicator over this past year. Now, the next one, I have a couple more for you. The next one is going to be McKesson Corp, ticker is MCK. Let's go ahead and hop into this one because this one is really impressive as well. So again, this is looking at the past year's worth of trading activity for MCK stock. And you can see not quite 23 buy signals, but still there were 14 buy signals over the past year. You can see all the different green up arrows. You can see a little pocket of them here. There was one here, a handful of green arrows along the way here. But again, 14 individual unique buy signals just for MCK stock over the past trading year. And of those 14 total buy signals that were generated by the Copilot system over the past year, all 14 of those MCK buy signals resulted in a winning trading opportunity for anybody that's been following along. So that's a perfect 100% hit rate on MCK. Now, again, I have just one final stock before we go ahead and wrap things up, and I figure we can wrap it up with a Q&A session. But let's hop into this one final stock here. So up next is going to be WR Berkeley Corp. Ticker is WRB. So this, big insurance broker, commercial lines insurance writer. Now, this is again looking at the past year's worth of trading for WRB. And there were actually 18 buy signals for WRB over the past year. The stocks performed very well, and so it gave you 18 different unique opportunities to hop in on this stock that's had a very nice bullish run over the past year. Now, looking a little further, of those 18 total buy signals over the past year for WRB, guess what? All 18 of those WRB buy signals ended up resulting in a winning trade opportunity as well. So as you can see, it's giving you a nice number of opportunities to participate throughout the year, and that was just 3 S&P 500 stocks. That was, that's not including all the remaining of the 497 that we didn't look at. So, there are tons of different opportunities to participate throughout a year's time. You've seen some very strong examples right here, and just see how well some of these buy signals truly end up working out. So, that's another perfect 100% hit rate right there for WRB using the Copilot system over the past year. So folks, I hope you all truly enjoyed today's presentation, and I hope you maybe learned something new about technical analysis maybe today. I hope I was able to introduce you to something new. And additionally, I think you all probably can now see why myself and my team, why we totally love this Copilot trading system that we've developed. And I hope to see you all maybe deploy it in the future yourself as well. So hope you enjoyed today's presentation. And Jeff, if we could go ahead and open things up to questions, this would probably be a great time for that.
Sure. Yeah, absolutely. If you have questions, make sure to ask them in the chat. One of the questions we have out of the YouTube chat is, do you have any idea of the Copilot indicator performance? So how well does this kind of in general work?
Sorry, you said the Copilot indicator performance?
Correct.
Yeah, absolutely. So it's done very, very well. So when we were initially first testing this, we of course did historical back testing first, then we started actually implementing the trading ourselves. And during our historical back testing, I believe that we had a over 90% win rate on the Copilot buy signals. Again, this is using the S&P 500 stock. So we tested over about a year's time and had north of a 90% hit rate on those buy signals. And again, in our own personal testing, we've also had some very good success, just our own personal team using it as well. I know I recently had a nice trade that Copilot found for me on Monster. Ticker was MST. That was another one of those that it was identified when when things were flying all over the place and market noise was crazy earlier in the month of April, and it found a great looking buy signal for Monster, so Monster Beverage, and I took that one. Ended up being, I think it was about a 15% return after a couple weeks, and so that ended up being a nice little trade in some really volatile market times. But again, pretty recently I had another one that was a trade for Microsoft that was in the past few months. And that one was, I believe, a near 100% winner on that one. So had some very good success with the Copilot indicator.
Cool. Obed says, great presentation. So not really a question, just a comment.
You're welcome. Glad you enjoyed. Thanks for
Greg wants to say, Greg wants to ask, is the buying pressure the close divided by the high?
So no, it's not the close divided by the high. So what it is, it's looking at just that difference between the two. So it's looking, if you're looking intraday, then it's going to be just current price compared to the high. But also if you're looking, once the market's closed for that day, then it's going to be looking at the close compared to the high. But it's not dividing it. It's just looking just simply just the difference between the two.
Now, one of the questions I had, and I'm fairly new to this too, just because it was created by our programmers and stuff like that. One of the columns you have rankable in that scan is buying pressure. Buying pressure, I think it relates not to the MACD strength or weakness, but the Copilot buying pressure. Is that correct?
That's correct. Yeah. So let me maybe be helpful if I go back to a chart here. So when you're looking in the exploration scanner, the buying pressure column in that scanner, it's specifically relating to this right here. So, when you run the scan, it's going to pull back, if you're say you're hypothetically running the exploration scanner for today, which I did earlier. I was looking to see which buy signals had identified. That's just going to be simply this right here. So it's going to be pulling up which stocks, say you're scanning the S&P 500, it's going to be looking up here to see which stocks across the S&P 500, if that's what you're scanning, are going to have this green up arrow. Okay, so that's going to be your starting point. You're going to see which stocks of the pool of stocks you're scanning have that green up arrow. And then additionally, in that scanner, you're going to have the buying pressure column, which is going to be representing this lower study, only this one right here. So that buying pressure, when you look at that column, you can sort that column from the best buying pressure down to the lowest. It's going to be specifically looking at this lower study right here, which again we use as a secondary trend confirmation study to help sort through those buy signals. So again, we like to first run our scan, see which stocks are on that buy signal. So we're looking at just the kind of top-down level, just which stocks simply meet the buy signal criteria first, and then we start sorting them using these lower studies, just like buying pressure in the Copilot trend.
All right. Another question that we kind of get quite a bit is like, for this, obviously, it's very much designed and geared towards options. To somebody that what would you say to somebody that's a little bit more hesitant to trade options? Maybe they want to buy the underlying, or they just they're not comfortable with the idea of options.
Yeah, absolutely. Well, certainly, my first thing I would say is whatever you're doing trading wise, make sure it's something you're comfortable with. It's never a good idea to start trading in something that either one you don't understand or that you don't feel comfortable with. So that's a great starting place right there. But if you don't want to look to trade it with options, that's just our team. That's how we personally like to follow along with these buy signals. But if you don't want to do that, remember that these buy signals, they're just for whatever equity or ETF, or heck, it could even be a crypto that you're scanning. Say you're scanning Bitcoin, but say you're just scanning and you come across this buy signal for WRB stock right here, hypothetically. Remember, it's just scanning the actual stock price. So if you don't want to trade options and you're just more comfortable with trading stocks, and if you're given that these buy signals, they have a typical average length, before either the profit target or stop loss is met, they run for on average about 7 to 10 trading days. Could be shorter, could be longer, sometimes just depending. But if you're interested in holding stocks for trading them for a short period of time, and for having a stock hold period for that, a 7 to 10 day hold, something like that on average, then there's certainly nothing stopping you from just following along with the Copilot indicator signals and just simply buying the underlying stock. Absolutely, you could do that, totally.
Do you have experience with a lot with customers using it in international markets? Australia and India in particular are pretty big for MetaStock users.
Sure, yeah. So right now, it's been primarily U.S. based, and we built it for targeting U.S. equities, but there's absolutely no reason why it could not be used by international customers or on even international equities. That's we just personally, our team, we like to trade the U.S. markets. We're based here in the U.S. on the West Coast in California. That's where our team is based. So we're looking to trade the U.S. markets generally. But just because of how it works, this is a technical analysis system. So, whether you're looking to apply it to U.S. markets or you're looking to apply it to, different Asian markets or European markets, all of the rules are going to still be the same. So it absolutely can work, whether you're trying to trade those markets or say if you're a customer based in those areas, whichever markets you're looking to trade, it can work on those markets and from those areas, certainly.
Cool. That is the extent of the questions that I have. What I was hoping to do is actually kind of go in and show a little bit like how the commentary works and just kind of talk a little bit about the Copilot method. Do you have anything else before I take over?
No, I think that's probably it. But I really appreciate you having me on, Jeff, and I was very excited to be here speaking at your conference today. I got to tune in a little bit to the previous speaker. It sounded like a great presentation there. So hope I did a good job following up on that. I hope I took the handoff pretty well and ran with that one for you guys. So again, thank you so much, and I really appreciate it. But that's all I have.
All right. Thanks, Blane.
Absolutely, Jeff. Take care. Thanks so much.
All right, no problem. Let me go ahead and kind of grab this real quick. I'm gonna turn on my thing. Share screen. Okay, show my screen. Okay, we're getting there. Cool. So a few things that, whoa, okay. A few things, I just kind of want to reiterate what's in there. You got the Copilot buying pressure. Blane did a really good job of talking about all of these things and how they're included. So just going to recap, you get the Copilot buying pressure. It's designed to measure the intraday strength. It looks at the close comparison, compares it to the range, and sees where it closed in regard to the range. You got the Copilot trend. You've got it looks at the short term and the long term trend. If you've got both green, it's a strong buy. If you've got one green and one red, you've got a buy, a strongest buy, a strong buy, a buy, and a weak buy. So there are kind of gradings of different buy signals that are available. That's automatically incorporated into this as well. And then, of course, the trade management. And I love the fact that, like, as soon as you get into a trade, it comes down to risk management. As soon as you get into that trade, you know what your first target is, your second target is, you know what your stop loss is. All of those things are going to kind of be mapped out for you. And you talked about all of this. What I wanted to kind of talk about is how the expert advisor and the commentary works. So let me kind of come in here just to kind of show you this. I've already ran the scan against the S&P 500 and a few other stocks that are kind of in a list of stocks that I normally look at. And out of the 595 stocks that I ran this at, it's actually about 604. Out of those, the rejects, there was 595 rejected. So basically, I love the ability to go in, take out the trash. As a trader, what I want to be able to do is focus on the opportunity. And so out of those, here are the ones, and I've rated them. You can see you've got the close price, the volume price, and you've got this volume pressure reading. So if I want to look at the best ones first and kind of go from there. So I've opened up Expand Energy. It had a buying pressure of 1. You can see kind of there's a 97, 97, 94. Sorted them based on that so I could look at the most pressure first. Okay, here you get your stop losses, targets. You can kind of see that before you even look up the chart. I've gone ahead and opened up just because it was on the top, Expand Energy, so I can show you kind of how this can be used for you right away. Okay, so looking at the chart, if you remember from the demonstration, you can kind of see that Copilot buying pressure right here, and that is at 97, right? You can kind of see where the Copilot trend is. But even if you don't remember how to do that, or you kind of don't remember what the indicators are, one of the things I really like about this is the expert advisor and the ability for it to actually kind of tell you what's going on the chart. So right here, we're kind of looking at this. right here, you kind of see there's a triangle here. I can kind of move this back and forth to different days, but what this indicates is this expert advisor commentary here is referencing this bar here. Okay, so we're looking at the very, very current day, and that's helpful. If I want to go see what happened during this buy signal, for example, I can click onto that. It's going to give me this exact same information it would have if we ran this scan, I guess a few days ago, 1, 2, 3, 4, 5, 6 days ago. Okay, let's look at the current day. I'm just going to kind of bump that back to the current day, but here's kind of how it kind of helps you, right? So if I kind of want a bit of a dashboard view, is going to be spelled out here for you. In terms of the trend, again, what we're looking for with the trend is the MACD and the short MACD to both be above the 0. We want them both to be green. That gives us the strongest buy. It's reminding us that it has a strongest buy on there. Long-term green, short-term green, strongest buy. Okay. Clout pilot buying pressure. We knew this was high because that's what we ranked on, but it's a 95, which is optimal. We have a current buy signal. It's a new buy signal, and it's triggered on the current bar. Here's our profit targets. You've got your first profit targets of 112.23. Your second is 114.01, and your stop loss is 98.06. Again, kind of a complete game plan in terms of what you should be doing with this. If you're interested in taking advantage of this, you could look to buy the stock. If you're looking as an option trader, you could look at options that are between 4 and 8 weeks out. Ideally, I like to purchase options that expire in about a month. Not my words. If the stock has only 3 weeks, then I look at the expiration after that. So it gives you really specific methodologies in terms of what to, if you are new to options trading, what options you should be looking at. I like to trade slightly in the money options using the Copilot buy signals. Trading slightly in the money options allows to maintain a low cost, but also manage the decaying time value of the option. I would suggest keeping the value at about $1,000 or lower. Okay. When our price hits a profit target, we want to exit part of our position and take a profit. When the stock hits the second profit target, we want to exit another part of that position and take a profit. Then it tells you what to do with the last part of the position, which is hold on to it. It tells you how to kind of manage the stop losses, that kind of stuff. So really kind of clear information in terms of why you're getting the signal, whether it's a strong buy, what the intensity of that signal for the intraday intensity is. Everything's spelled out for you. And I just love the ability for MetaStock to do this. So this is a brand new product. It's been very, very popular already, but it's built by built based on the methodologies of Chuck Hughes, who's been fantastic at trading for decades now. Okay, let me kind of go back in here. So this is the expert advisor. Again, what it's going to give you is real-time buy and sell signals, clear definitions of what you should be doing, stop losses, targets, option recommendations in terms of expiration, the price that you're paying for the options, time decay considerations. All of those are kind of folded in. So one of the things that we always do when we kind of release a brand new product, and this is brand new, it's only been available for a few days now, is we'll sit down and do some training. I want to make sure that it works well for you. With a lot of the products that we've talked about, I've actually said, hey, and there's free boot camp that's included. It's available instantly. That's because we sit down and do recordings. So we are going to be sitting down with Blane Markham. This is going to be a live session for anybody that buys a product. You'll be able to ask questions, and you'll be able to get answers. So we're going to sit down and do a 2-part session with Blane. He's going to talk. This isn't for a little bit. Blane's actually expecting a baby next week, which will be pretty fun. But we're going to sit down with him on June 6th. We're going to do a recorded session where he's going to go through Copilot, talk about how to maximize your profits from Copilot. This is included with your purchase. After he's done, I'm going to sit down for probably about 30 minutes to maybe 45 minutes, just talking about tips and tricks in MetaStock, how to run scans, how to run explorations, all that kind of stuff. So this is going to happen live June 6th. It's going to be at 4 p.m. Eastern time. If you can't make it, it'll be available within a few days after that on your downloads page. It's something, as soon as it's available, I'll let you know that it's there. Okay. As part of the, so that's just a free bonus. As part of the package, you're going to get free, or you're going to get included 4 proprietary indicators. We talked about those. You're going to get the templates that kind of set everything up and get them all situated and sorted for you. You're going to get the expert advisor, which you can attach to the chart. You're going to get explorations and scanners. You're going to get so many bonuses with this that it bled off the page a little bit. Let me fit this into the page. You'll also get that online training session to kind of help you supercharge those results. So all of those are included. Normally the Chuck Hughes Copilot is $29.97. We're going to do that online training. We're valuing that at $399. We'll give you a free copy or a free trial to MetaStock real-time. If you haven't tried MetaStock, we'll let you try it. We'll include it risk-free with your purchase. We're going to give you a money-back guarantee. We're going to give you unlimited access to our support desk. If you're brand new to MetaStock, we're going to give you access to one of our reps that'll walk you through everything, show you how to use it. And you're going to get that special training program as well. So normally the total cost on that would be $36.61. At the event, at the conference today, you're going to get a price of $19.97, brand new. You can do that. You can give us a call, 800-882-3040. You can do it online at metastock.com/conf-promo, or you can go to metastock.com/saleschat. The early feedback on this product's been really, really good. We're going to back it with our standard money-back guarantee. We're going to let you try it with our software that's been rated #1 for 31 years in a row. If it's something that looks interesting to you, give it a go. The worst thing that could happen is it doesn't work for you, in which case you'll get a full refund. Metastock.com/conf-promo, metastock.com/saleschat, or call us 800-882-3040. So there you go. We'll talk real quick about the MetaStock or the Traders Forum. If you haven't joined it yet, you should. It's a free community, a growing list of online resources to help you learn about technical analysis. Again, that's all free. You can chat with other traders about the trades they're interested in and why. You learn a lot. I've learned a lot myself. We've been running this for maybe a year or so, a little over a year. We launched it January of last year. We're kind of getting to the point where we're really kind of growing the membership on it and advertising it. And I'd invite you to join it for free, thetradersforum.com. So come over. We'll be happy to see you. We do all kinds of really cool events up there, and it's a great resource. So we are, of course, MetaStock. I'm going to let you read this slide while I ask Greg to give me a hand.
Was that applause sufficient? Or did you need more?
A literal hand.
Need another round of a hand?
Okay. No, I think I just want a number from you.
Oh, you got that. All right. Any particular number?
Yeah. Let's go with the number first, and then we'll go with the price second.
Okay.
The number can be anywhere between 1 and 4,429.
All right. According to the Google random number generator, that is 985.
Angel H with an AOL account. So Angel H in the USA with an AOL account, you just won a prize. If that's you, congratulations. You might be wondering what you want. I am too.
I know I am.
Let me go to my prize bag first. Okay. Let me go ahead and write and just paste that off. Make sure we get it. And let me go to the price. So Outsized Trading, Jeff Tompkins, he's a portfolio manager. He's going to speak for us on Wednesday. But he has a weekly live market strategy session that he does. You're going to get access to that for a year. It's only $550. And congratulations. If you're in the chat right now and you just won that prize, say something. We love it when you don't have to be present to win, but we sure love it when somebody is present and they do win. So, but congratulations, Angel, on that win. Greg, maybe you can take a minute and just make sure everybody, if you're watching us in GoToWebinar, you're already registered. If you're watching us on YouTube, there's a pinned comment up at the top of the chat, which I think I'm pointing to. At the top of the chat, it says to be eligible for prizes, click here and register. Just click in there, register. You'll fill out a quick form, and then they'll be added to this list of prize potential winners. Okay, that's all you have to do for that. all of the bonuses, Greg, thank you for the assist here.
Oh, I was just Silas is apparently ready to go and here when you're ready. So
Cool.
very glad.
All of the specials we have today are available at metastock.com/conf promo. Give us a call if you have any questions, 800-882-3040 or metastock.com/sales-chat. Our next presenter is Silas Peters. I love Silas. I love his method that he's going to talk about, the 3S code method. And we're going to go ahead and get him started. I love the way it's also integrated in MetaStock. I'm going to show you that when he's done. So Silas, are you ready to get going?
Good afternoon, sir. How are you?
I'm good. How are you?
Man, I'm hanging in there for a Monday.
Okay, fair enough. Fair enough. Well, I'm going to make you the presenter, so it's going to get better right now.
All right. Let's see. And you guys see the screen?
I will let you know. Yes.
Big old smiley face there. Can you see that?
Mm-hmm. I can do that too. I don't know how to do that though.
Man,
that's cool.
fancy. I just learned that trick.
There you go.
It's only my 9,000th webinar, but
yeah. Well, yeah. At least you're still learning, right?
That's right. Always learning, just like in the markets.
All right. Well, we can hear you well. I can see your screen. I'm going to get out of the way. So it's your turn. Go.
All right. Well, good to see you, Jeff. Appreciate the MetaStock team and for having me on. These are always good events, always a great crowd. And I think it's my understanding there's some folks in YouTube land. So hey to everybody out there. And if there are any questions, feel free to ask during the course of the presentation. Got a limited amount of time, so I want to make sure I get through the meat of the bone and teach you an actionable strategy that you can start applying immediately. And then if we have some time, hopefully we'll be able to answer all of your questions. So my name is Silas Peters from Trades Trading. Looks like for those in GoToWebinar, if you can just type a 2 or a hi or a heck yeah, whatever. If you're feeling frisky, just let me know if you can hear me and see my screen okay. A little raspy voice, but just want to make sure the sound is coming in. Good crowd in here. So let's go ahead. Okay, good deal. So let's go ahead and get started. We must cover the risk disclaimer. We know past performance is not indicative of future results or is substantial risk of loss associated with trading. Only risk capital should be used to trade, i.e. you can lose money in trade. So we know the importance of that. Only trade with risk capital that you can afford to lose. Now, what I want to ask quickly is, what does everybody trade? What is everybody's trade? I'm going to try to be somewhat interactive here over the next 30, 40 minutes. I try to trade stocks, options, futures, Forex, maybe crypto. What is everybody trading? So I like to see what kind of crowd we've got in here. So I trade stocks, options, futures, a little bit of Forex, mostly futures and options primarily. But this is something that can be used on any market, any asset class. We're trading price at the end of the day. And I call this kind of my 15-minute blueprint. I've been using this for literally almost 20 years now. Still crushes. You know, if I'm using it 20 years later, something has to be right. But the best thing about it is its simplicity. This is a mechanical, stress-free, emotion-free trading method, can be applied literally on any market or time frame. So what I'm going to share with you today is highly accurate. It works in all markets. It works in all time frames. It's 99% mechanical, and most importantly, it is simple. And look, I've used this strategy for $2,000 accounts, $20,000 accounts, $100,000 plus accounts. I've used it in every market situation, from the 08 financial crisis to roaring bull markets. I've traded through debt crises, government shutdowns, presidential elections, flash crashes, from scalping and intraday trading to swing trading for a few days and position trading for weeks and or months. And you can do this with small or large accounts if you wish. And it can take as little as 15 minutes. It's about really how active do you want to be. And so before we dive into all this, I'm going to quickly introduce myself, who I am, maybe why you should listen to me. Other than that, I'm a pretty simple guy. I'm a family man who thoroughly enjoys being a two-girl dad. I've got a strong passion for the markets, strong passion for golf, cooking, and the outdoors. Alabama football, but this is where it all started, the great city of Chicago. It's here where I cut my teeth at in the commodity markets right out of college, working at the Chicago Board of Trade. Very quickly, I found myself working the Asian, European, and early New York session trade desk, trading across the CBOT, the Merck, NIBOT, NYMEX, various Asian and London exchanges, trading for our hedge fund, banks, and commodity trade advisors. And we were handling some pretty decent size, 300, 400 lot bond orders, 400 or 500 lot big S&P orders, 100 lot gold option orders, 250 lot Japanese government bonds. Such an eye-opening experience to see how the biggest traders, market makers, and funds were trading and making decisions. And so I did this for a while, kind of soaking up everything I could, any and everything market related, acquiring multiple futures and securities licenses. I was a sponge. But then my college sweetheart and now my wife of 20 years, she talked me into coming home, settle down and start a family. So we headed back down south and immersed myself into the quieter side of finance, managing equity and fixed income portfolios in this glass building. Then went and worked for a private $2.5 billion family office where I did a hodgepodge of these items. But during this journey, I managed to stay in the markets, specifically the commodity markets, running and owning some brokerage units, and then finally started my publishing brand in 2016. And it's here where I found my real calling. It's here where I teach students across the globe different ways they can generate the skills necessary to trade, manage portfolios, and turn their trading around in the right direction. And today, I want to help you too, but let's quickly go back to the journey here. Journey wasn't always easy. Though there was a learning curve, several obstacles and hurdles on the path to where I am today. First step, obviously learning. School cannot teach real life experience in the markets. In the beginning, I made a substantial amount of money. Was I lucky? No, but ignorance and greed cost me my profits. I blew up an account, blew up others in what I like to call revenge trading. Some of you may want to admit that you've blown up an account here or there, but extremely humbling experiences. Almost gave up, almost quit, but guess what got me back in the game? Now, I was in a dark place, but I went back to the very first trading setup I learned almost 20 years ago, and I got back on track. Started banking wins again. I'd gone off the reservation, looking for the elusive Holy Grail, but my journey ultimately led me back to where I had first started. So I went back to my roots, started working my repeatable process to find consistency. Now, who here is or has been a victim of paralysis analysis? Who has been affected by this? Per Wikipedia, it's a state of overanalyzing or overthinking a situation so that a decision or action is never taken, in effect paralyzing the outcome. So I've been there, done that, got the t-shirt. Who has done all the analysis they thought they could? They've dotted their I's, crossed their T's, they've done all the research, they've got their finger on the mouse, get ready to pull the trigger, and then what happens? Some line crosses this line, Jim Cramer says buy, and you are about to sell. We've all been there, right? We've all been there, and we know that this is the theme that I'm going to try to stay with, is that trading is not easy, but it can be simple. And what I have in store for you today, I think, or I hope at least, will be self-liberated for you. And my agenda and promise to you is this, is that we're going to learn a simple and mechanical setup together that is repeatable regardless of the market or time frame. And so think about this picture here. Everyone knows that a stock or a market doesn't go straight up or straight down forever. They go up and down in waves over multiple time frames. And there's been millions, if not billions of dollars that have been made by smart traders recognizing those trends. At the same time, that same amount of money has been lost by those they think they knew what they were looking at and then got it wrong. So right now, I'm going to show you how you can get on the right side of these moves a lot quicker than most traders. And this is a quick glance of what we're going to learn. I'm going to show you how you could have found this 36% win in GE, followed by a 26% move in GE. This one in Barnes Group, 21% move to the downside, followed by a 63% move to the upside. Bank of America, 28%, 60%. Gold on a 4-hour chart. This is at $1,800 per contract, followed by a $900 per contract move. Day traders out there, 5-minute chart, 8 points, 2.5 points, 6 points, 4 points. All we're doing is trading the ebbs and flows of the natural market movement. Here for the Forex traders, Aussie yen, 150 pips, 445 pips, 160 pips, all to target one projections and then more. And, when you look at this, you say all these examples, can it be too simple? Well, we know, again, is that trading is not easy. It's not easy, but it can be simple. You see, when I got started, I was probably a lot like you, sifting through hundreds of different strategies, systems, setups, you name it. And I tried all kinds of stuff, and most of it was garbage. But the single most important part of this journey was when I learned to keep it simple. Once I got rid of the clutter, the fancy blinking gizmos and indicators, and started focusing on pure price action, following one simple pattern, that is when it all started to click. And so if you're sitting here today as a new trader, or maybe a struggling trader, or maybe even an experienced trader, I'm about to teach you my foundational go-to strategy that got me from a struggling trader to a winning trader. And I'm telling you right here, right now, that this is a simple mechanical setup that anybody can learn, and you will keep this in your trading arsenal for years to come. And in the end of today's workshop, I'm going to make you an offer you can't refuse. You can join my team with a specific set of tools and a plan that will help shortcut not only your learning curve, but also the time you need to spend looking for quality setups. So let's get right to it. The price action pattern we're going to be discussing today is, drumroll please, the 1, 2, 3 pattern. So who here is familiar or has heard of the 1, 2, 3 pattern before? Let me see in the chat. Who's familiar with the 1, 2, 3? A lot of you, seeing a lot of yeses and a couple of no's, but this is one of the most fundamental technical patterns in the textbooks. We're talking, technical analysis 101, but highly, and I mean highly, overlooked by most traders. So what I want to do is talk about the actual setup. Setup is price action based, and guess what? Price action is king. And speaking of king, did you know that McDonald's and Burger King have different ways of choosing where to open new restaurants? McDonald's does tons of research. They look at maps and population counts, traffic patterns, competitive analysis, on until they find the perfect location for a new store. Burger King approaches it differently. They wait to see where McDonald's opens up a store. They open one up across the street or down the block. They get the same result with a lot less time and effort. And so when we relate this to trading, we can let all of the large institutions and investors do all the research on which markets to buy or sell. All we have to do is look at price action, which takes into account all of their fancy process. Basically, where they're Burger King to Wall Street's McDonald's. Now, the setup is price action based. The pattern is comprised of a low, a higher high, a higher low, and a break of that higher high in the case that we're going long. Just inverse the rules for short. Anticipates a change in trend from down to up on a break below the 2 or B point. Anticipates a change in trend from down to up on a break above the 2 or B point. Now, strategy usually occurs at the end of trends and swings. Can be an indication of a change in trend. Can also be found within a trading range. And I will say or stress that it works extremely well when the pattern sets up at significant areas of support resistance, other technical patterns like head and shoulders tops, double tops, bottoms, and more. So let's take a look at the basic mechanics. So what we're going to do is start with the 1, 2, 3 bottom. Now we use and look for 1, 2, 3 bottoms when we are bullish. Okay, we're bullish, looking to go long. We're expecting that market, that stock, futures, commodity, currency, whatever, to go higher. Buy call options, whatever that is, expecting to go higher. So as the market pushes down and stops making new lows and finds that lowest low, that gives us our number one. As the market retraces higher and pulls back, we have established number two. And as the market stops coming down and printing these higher lows and pulls up, we have our number three. So 1, 2, 3 bottom traders are looking to get long on breaks or closes above the number two. And when we look at the 1, 2, 3 top, 1, 2, 3 top strategy, this means that we are bearish or looking to go short. We're expecting that market to go lower, shorting the stock, buying put options, expecting that market to go lower. The same rules apply here. Market pushes higher. When we find that high is high and push down, we have our number 1 point. As the market pushes lower and retraces back higher, we have our number 2. And as the market stops printing these lower highs and pulls back, we have our number 3. So the 1, 2, 3 top pattern, we are looking to short on breaks or closes below the number 2. And one of the great things about these setups is we don't necessarily have to worry about those first 2 legs. We don't need to be glued to our screen unless maybe you're scalping. But all we have to do to kind of cash in on these setups is spot when it's about to go past the number 2 point. It's really that simple. And so let's not waste any time because as they say, seeing is believing. Let's look at some 1, 2, 3 pattern, 1, 2, 3 top examples. Okay, so you guys and gals can read all this on the right, and I'm going to look at the chart and work myself left to right. So when we're looking to identify a number 1, we have what we're looking for is a 52-week high or a 52-week low. Now, that's not an absolute requirement. We'll talk ways later where we can dial that back to find more patterns and more setups for us. But for these example purposes, we'll talk about 52-week highs and 52-week lows. So we have a number 1 point, which is a 52-week high. Market presses lower, retraces higher, and then pulls back. That gives us our 1 and our 2 and our 3. Now, price could have gone all the way up here as long as we didn't take out the number 1, but we stopped here. So we have a 1, 2, 3. Now, you guys already know pretty much the rules of the setup, right? We know where we're looking to get short, but what about the other important ingredients of the recipe? Like, hey, where's my stop? Where's my risk? And where am I taking profits? Where am I putting my targets in? All great questions, very important. So our initial risk is going to be above the high of the number 1. Our initial target is going to be the distance between the high of the 1 measured to the low of the 2 measured down. So you'll see that it is a 1-to-1 risk to reward right out of the gate. That's okay, but we can do better. But it's very important to let the market materialize in its anticipated direction. So as we start moving lower and taking out these swing lows, we can then move our stop from where? We can move it from the high of the number 1 to the high of the number 3. So you can see we've quickly now cut our risk by maybe 60, 70%, and the market moves down and meets our target objective. Here is a daily chart of Walmart. Market is pushing higher, pushing higher. We get a new number 1 point. Why? That's a 52-week high. Market retraces lower, pulls back up. We have a 1, 2, 3. We now know what 98% of other traders are stuck and struggling and ask themselves, where am I getting in? Where's my risk? And where's my target? Well, we know that days in advance. We know that we're looking to get short on breaks or closes below the number 2. We know initial risk is going above the high of the number 1. And we know our target is the distance between the high of the 1 measured to the low of the 2 measured down, which is about $5 in this example. So we start breaking down. Very, very mechanical process. Now let's look at 1, 2, 3 bottom examples. Same setup, same strategy, but just inverse. So here is a 15-minute chart of even S&P. You say, whoa, does it make sense to look for a 52-week high or 52-week low on an intraday chart? The answer is no. So whether you're looking at a 1-minute chart, 5-minute chart, 15-minute chart, we're looking for what's called a session high or session low. So wherever you start your day, excuse me, wherever you start your day, whether it's the 9:30 New York Eastern cash open, maybe it's the 3 a.m. European session, maybe it's the last hour of the day, maybe it's lunchtime. Wherever you start your day, you're looking for new highs or new lows. So here, this is a session low, and that gives us our number one starting point. Market retraces up, pulls back down. Now let's talk about a couple of entry methods, okay? Aggressive traders can work a buy stop, a tick or two above the number two high, you get immediately triggered into the trade. Another alternative method that I like is to wait for the market to come back and retest, and or come down and hook back above the number two, okay? Sometimes the markets will bust up above the number two, leave you at the train station, hit profit target. That's okay. Plenty of other opportunities. Sometimes the market will come down, roll down, and then decide it wants to roll all the way back down and stop you out. Okay, that's part of the business, part of the trading. Sometimes we'll let the market will come up, fake people in, come back down, and then move back up for what I call a second pass or hook. And this can give you a little bit of extra confirmation for those that wish to do so. Let's look at a weekly chart of Apple. Hell of a way to catch some longer term position type moves here. Here we have a multi-week low. We have a 1, 2, 3 bottom. We also have a double bottom. Market breaks above the number 2 point on this large bullish candle. We trade sideways for a few weeks. We come back down, retest. That is our confirmation to get long Apple. How? Well, we can buy the stock. We can buy call debit spreads. We can sell bull put credit spreads, whatever our flavor or style is. And then the trade moves higher. Let's talk about failed trades. They don't all work. I know we're all big boys and girls here. Nothing is guaranteed in life or in trading. This trade I probably took in my live account. Okay, we got the market grinding higher here. I think this is a 5-minute chart of the S&P. We have a new session high right here. We have a 1, 2, 3 pattern. Aggressive traders could look to get short here on the initial break. If you waited for the second pass or hook, market comes up, it comes back down, and you're into the trade right here. Now, if you exercise any money management, as the market started breaking down here, your stops would have gone from here to above the 3. You get stopped out right here. You sat on your hands and didn't do anything. Market comes up higher, stops you out above the high of the number 1. But guess what? We actually get another setup. This high is greater than this high, so we start to count over. 1, 2, 3 setup. We have a new 1, 2, 3 setup. Market breaks down, ends up being a profitable trade. Now, this is what I call a no trigger or voided trade, neither good, bad, nor ugly. And I'm going to tell you why I love these situations, why I love this here. So we have a 1, 2, 3. We're looking to get long on breaks or closes above the number 2. Well, the market decides to roll back over, taking out the number 1 low. We start to count over. Here we are at 1, 2, 3 again, looking to get long. Market rolls over, stops or not stop you out. We start to count over. Here we get another 1, 2, 3. Finally, we're able to get long on this third attempt. Now, what is likely happening in this situation? What is likely happening in this particular situation? Anybody know? If you have price doing this, making lower lows, lower lows, lower lows, but let's say you put an oscillator such as an RSI, MACD, stochastics, which are making higher lows, what is that called? Lower lows in price, higher lows in your oscillator. Yes, bullish divergence, okay? Bullish divergence, and when we have that going on with this pattern, it can add a little bit of seasoning to the cupcake, okay? And bearish divergence, of course, is where we have price going higher, making higher lows, and our oscillator is making lower highs, okay? Now, 1, 2, 3 pattern, trade management, confirmation of entries on a break above the 2 or B point for a long, or a break below the 2 or B point for a short. Exit strategies, I would say go for the distance between the number 1 and number 2. Okay, it's uncanny if you're, and I'm saying this if you're trading a 1 lot, 1 share of stock, 1 option, 1 futures contract, whatever, because it's uncanny how more often than not we'll have a pattern that looks like this. We're looking to get long on breaks or closes other than 2. We know our target is up here, right? It's uncanny how more often than not the price will come to hit that often to a tick and then often reverse. So this is where I say, hey, you trade in multiples, or if you trade one lot, take it off here. Trade multiples. This is where I say, hey, take a third, half, 2/3 off here. Jack your stop up to break even, and then see if you can catch a runner. Okay. And then as far as trailing and management, you've got to kind of figure out what works best for you. There's come a dime a dozen, but you can trail by trend line, 2-3 bars back, moving averages. There's all types of scenarios. I like to use good old fashioned levels, support, resistance, supply, and demand levels as far as profit taking. Now, I've shown you that this setup works on any market, whether it's pips and Forex, Pepsi stock, potash, or pot stocks, pork bellies, or the Polish zloty. Also showed you works on any time frame, whether you trade it on a tick, 5-minute, 15, hourly, 4-hour, daily, weekly, or higher. And I've showed you that it works on any trading style. So let me ask you this. What is your trading style? Are you guys position traders, swing traders, tick traders, scalpers? I'm gonna take a swig of water here. So we've got swing traders, we've got day scalp, swing, weekly options. And the reason I always like to ask that is because you've got to kind of figure out what your bread and butter is. Okay, I'm not here to say, hey, this strategy or setup only works on a 5-minute chart of NASDAQ or a weekly chart of ExxonMobil. That's not the case, right? We're trading price action, and it works on any asset and on any time frame. So figure out what works best for you in your situation. These are time frames that I like. I also like the 1 and 2 minute as well. This is probably my sweet spot bread and butter, the hourly, the 4-hour, and the daily. But anything there all the way down to a 610 tick chart, a 233 tick chart, all the way to weekly, monthly, it works great. Okay, you have to figure out what time, how much time you're committing, and what works best for you. So you've seen the proof. Let's look at some more, some real trade examples. Not to say what I've recently shared were fake examples. Those were real by all means. Let's look at some of our examples we've used in some of our services. Okay, so again, you guys and gals can read all this on the right. I'm going to work myself from left to right. So here we have a number 1 point. Why? It's a 52-week high. We have a 1, we have a 2, and we have a 3. So again, we know everything we need to know in advance. We know where we're entering. We know when we enter, where our risk is going to be, and we know where our target or our limit orders are going to be. And we break down here. We quickly reach our $3 or $3,000 per contract price objective, and then we go sideways. A lot of folks ask, is this working sideways or consolidating markets? And I say yes. If you want to trade, this 1, 2, 3 pattern right here, we have a nice 1, 2, 3 pattern moves the upside. I'm personally looking for new highs or new lows. Okay, you can trade range bound 1, 2, 3s all day long. We actually get a new setup. This high is greater than this high, so we start a new count. And let me tell you why I got excited about this one, because we were now in a time of year from a seasonal perspective where crude and energy markets typically trade to the downside. So when we have that high probability seasonality, that lines up with a high probability technical pattern that I've taught you, that is what we call the perfect marriage in trading. Okay, so here we have a 1, 2, 3 top. We know the seasonality behind it. We have a trend line break. We have 1, 2, 3, 4 days to possibly get in case we miss the first one. We finally break down and reach our first profit objective, $4,000 per contract. Then what happens next? We trail the market. We trail the market until we either get stopped out or we have a potential reversal. Well, this market trades down another $20,000 per contract, another $20 a barrel. We get a potential, we almost get a reversal here. We almost get a reversal here, almost a 1, 2, 3 pattern right here. But guess what? The market says, no, I'm going to go lower. We trade down another $10 or $10,000 per barrel before we finally getting a reversal here, a 1, 2, 3 pattern, which trades up and meets our $5,000 per contract price objective. Pretty amazing. We had folks doing this with futures, options, USO, other energy stocks, and these are some examples of recent setups. Recent setups here: $5,800, $4,700 in crude oil. This is a chart of gold. This is actually GLD that tracks gold futures, GLD. Same situation here. We have a 1, 2, 3, market breaks below the number 2, reaches our $4 per contract price objective. And then we do what? We don't do anything but sit on our hands and wait for a potential reversal. Here we have a 1, 2, 3. Market trades above the number 2, reaches our $2 per contract price objective. You say, well, what about all the range-bound 1, 2, 3s? Again, if that's what you want to trade, then help yourself. I'm looking for new highs, looking for new lows, but there's a potential 1, 2, 3 here and a potential 1, 2, 3 here. Great trades. Pat yourself on the back if you took them. Now, all I'm doing is waiting for price to give me a new counting point. So here, a new 1 starts because it is lower than this low. Here we have a new number 1 right here. We actually get a potential 1, 2 right here, but price actually makes a lower low. So this is our final count. 1, 2, 3, market gaps higher 2 days in a row, comes back down, retests, hooks back up. That's our confirmation to get long. We buy gold futures, we buy GLD call spreads, sell bull puts, whatever your flavor or style may be. And here we are again, recent setups here in gold. It's a $10,600 per contract move. Let's look at Delta Airlines. I know this is becoming redundant by now. I'm just trying to hit home the fact that these are recurring all the time. 1, 2, 3 bottom here. We gap up. We come back and retest. $4 move to the upside. Here we've now flipped to the short side. 1, 2, 3. Gap down. I don't chase the gaps. I personally don't chase the gaps. We've got some students that will be aggressively buying puts to capture this. We get another chance. This high greater than this high. 1, 2, 3. We sell off. We get a small retracement. $8 move lower, and now we're just waiting for another reversal. 1, 2, 3. We trade higher. We come back, retest, and hook back up. $8 move to the upside. You can buy Delta call options, sell bull puts, whatever your flavor or style may be. Here we are with recent setups, identifying the trade higher, identifying the trade higher, identifying the trade higher, identifying the trade lower. Okay, something I can't make up, guys. Something I can't make up. All we're doing is trading the basic ebbs and flows of price action. For the Forex traders out here, 4-hour chart of the CAD Swissy, Canadian dollar versus Swiss franc. Here we have a multi-session low, double bottom, 1, 2, 3. Again, the aggressive traders are getting long on the initial push higher. The other alternative method, again, wait for the retest and it'll hook back up. You reach your 70 pip profit objective, and then you're not doing anything. You're just waiting for a potential reversal. So here a 1, 2, here's a 1, 2, here's a 1, 2, here's a 1, 2, here's a 1, 2. Finally get a 1, 2, 3 top pattern here. Trades lower, comes back up, hooks back down, and you reach your 40 pip profit objective. Okay, it's pretty amazing, right? And here it is. Here's the setup here again on a 4-hour chart. 80 pips, 70 pips, 35 pips, 70 pips, 55 pips. Any day traders in here? I saw earlier some day traders in here. 5-minute chart of NASDAQ. Again, new session low. We start a count. 1, 2, 3. We come up, we come down, we hook back up. We reach our 13-point profit objective. This actually is a new session high, so we start to count over. 1, 2, 3. Break down. Market goes sideways. We might have to pop some tums. And then we finally break down and reach our 20-point profit objective, which again happens to be a new session low. Market trades higher, pulls back, Here's our entry. If you're lucky enough to get long on the retest there, you're filled on your 30-point profit objective in about 2 bars there. Okay. And here we are again, 137 ticks, 60 ticks, 91 ticks. You can be as active or as passive as you wish, depending on your objectives and your lifestyle. So why are you here? Why are you here? You're here to learn a mechanical, done-for-you strategy for all markets and all time frames. So this is a part of where I kind of stop and pause and say, have I done my job? Have I shown you enough proof? I don't know if it gets any more mechanical, more simpler, easier. There's no really guessing when to get in, no guessing where the market is likely headed, no guessing where to get out. I would say one of the number one issues I see with traders, new and even experienced, is the discretionary aspect of it, right? People have problems with discretion, and this was designed to take a lot of the discretion out of play. If we had 100 traders looking at the same chart, 99 of us should be seeing the exact same thing. There's always going to be one person that tries to turn this into rocket surgery, okay? And we don't need to do that. But wait, there's more. You guys remember some of those case studies that we went over? Crude, gold, Delta, NASDAQ, and so on. What if the strategy was automated? What if the strategy was plotted onto your chart for you? What if the trigger entry and targets were drawn for you? And what if your platform could actually scan the markets for you and tell you when there is a pinning setup? I don't know about you, but I would say that would be pretty freaking amazing. So if you remember the examples from earlier, like in crude oil, we now have this program to plot the 1, 2, 3 for you, the 1, the 2, and the 3. And once you're triggered, you're going to get your entry line, your target 1, target 2, and your risk. Remember, target 1 is the distance between the high of the 1 measured to the low of the 2 measured down. Target 2 is simply 2 times the distance of TP1. And all you're doing is you're waiting for price, you're waiting for the formation and the pattern to form. Here we are in gold. Again, here's the gold example, breaking above the number 2 here, plotting target 1, target 2. Here we are again. We have these these green arrows. They're telling us, hey, we are moving lower. We're looking for new number one lows. We're getting new counts. And if and only if we get a setup, you're going to get your setup plotted onto your chart. Okay, there's a Delta example. There's your long, there's your short, there's your short, there's your long. The NASDAQ, again, we break it down, hit target 1, hit target 2 to the tick, which happened to be a session low. So we get a new count here. Market comes down, pulls back up, hits TP1, doesn't quite hit TP2, but close enough for government work. We come back down, make a new session low. Market gives us a new 1, 2, 3 pattern, just peaks its little head there above the number 2. We hit TP1, and as the market is trading higher, it's giving us warning signs that, hey, we may need to get ready to reverse. Well, we do hit TP2, get a new signal here, 1, 2, 3. We break down, we trade up, and then we come back down, we hit target 1, and we hit target 2. So is this trading for you? Only you and you only can answer this. If you're new to the markets and want to jumpstart your success, if you're an experienced trader and want to add another arrow to your trading quiver, if you're tired of all the noise that we talked about, the indicator overload, the paralysis analysis, if you just want to simplify what you're doing or add a new strategy to your toolbox, maybe you're already a successful trader, congratulations, but who wouldn't want another winning strategy that you can work with? Or if you need a specific step-by-step plan and want to avoid learning or doing this on your own, this training could be for you. This is something anybody could do, even part-time. So The software is now coded and designed to give you and hand you trades like this. Look how clean and beautiful this is here. 1, 2, 3 bottom with your entry, your risk, your target 1, target 2, new low, which means a new setup, 1, 2, 3, entry, risk, target 1, target 2. Even gives you a friendly little smiley face, which I just absolutely adore. Here we are on Google. Here's a 1, 2, 3 top setup, another 1, 2, 3 top setup. How do you do it? Well, when you think about it, we sell the stock, sell short stock. We can sell bear call spreads up here above. We can buy put options. We can buy put debit spreads, whatever your style is. And here we are forming a new setup over here on the right. 4-hour chart of the Canadian dollar, 233 tick chart of the E-mini S&P. You guys that really like some action, you can look at a 233 tick chart or a 610 tick chart. There's some nice action there on those time frames. Now, why do all the work when we can let technology do the work and heavy lifting for us? Here where I'm scanning across the, for 1, 2, 3 tops in the Russell 1000, only stocks that are optionable, $20 a share or greater. Hit the green scan button, and what will literally probably take me weeks to find are now done in seconds through our scanners. MetaStock providing a wonderful scanning mechanism for us to quickly find, scan across different asset classes, different time frames, different markets all at the same time, basically giving us that fish on a platter. We've also had it coded for TradeStation. We've got your indicator, your scanner component, NinjaTrader, your indicator, your scanner component, Wealth Charts, your indicator, and your scanner component. TradingView, there is no scanner, available yet. It's a 4-hour chart of Apple with your indicator component that we see here, and then also MetaTrader 4, 4-hour chart of the Euro Kiwi. You're long, you're short, and you're long. Now, we know there's no real crystal ball in the markets, but I like to view this as one that provides me with a process. Scanning the markets for possible setup, going into my platform for entry, and then I'm managing that trade through exit. It becomes a rinse and repeat process every single day. And now you can start profiting and benefiting from these predictable patterns with what we call the 3S code. So here is your offer you simply cannot refuse. You're going to get access to the 3S code indicator, 3S code scanner, 3S code optimizer, access to our weekly strategy and scan sessions, and access to our private Telegram room. Okay, you can get access to all of this today for a one-time lifetime fee of $397. Guys, this is a lifetime fee. You go to metastock.com/code. This is no subscription, no renewals, no hidden surprises. This is a lifetime access to the indicator and scanner that I've just shared with you. Now, we've opened up 25 slots because we actually like to control the onboarding experience. You're going to get access to the following platforms: MetaStock, Thinkorswim, TradeStation, NinjaTrader 8, TradingView, MT4, and Wealth Charts, okay? So if you are one of those that like to run it on multiple platforms, you have the ability to do that. We don't limit you to just one license or one computer. You want to load it on your laptop, you want to load it on your PC, your smartphone, your whatever it is you're using, you have the ability to load it on multiple computers across multiple platforms, okay? You're also going to get access to our weekly strategy and scan sessions. These are held every week. You need access to my top setups, my day and swing trading 3S code setups using options, trading minis, micros, ETFs, and much more. You can get started by going to metastock.com/code or calling 1-800-882-3040. Now, I want to make sure you understand what you're getting here with the indicator and scanner: a visual plot of the 1, 2, 3 top and bottom reversal areas with entry, exit, stop, and target levels. If you don't want red, you want hot magenta. You don't want green, you want yellow. You can scan for setups only, trigger only, or both. You can scan for tops, bottoms, or both, intraday setups, swing setups, or position setups, any or all of the above. You're also going to get access to our 3S code optimizer, where you can now take the mechanical 1, 2, 3 top and bottom strategy and create and run multiple back tests, running various inputs and settings to find the best optimization parameters that fit your trading style. Here's how I'm running the optimizer on crude oil in Thinkorswim. I'm running it here in the British pound on TradingView. Here I'm running the optimizer in the S&P there, and TradeStation give you all of your pertinent stats. Same thing here in NinjaTrader. You can add and edit different variables such as moving averages, different minimum bar and percentage requirements. There's a whole guide there on how to do that. Now, I want to make sure that you do hit the ground running. So we are also throwing in some additional bonuses. You're going to get access to our chart pattern principle trading manual and guide. This is a 90+ page PDF that will help jumpstart you by teaching you how the market works, why markets move the way they do, who the players are, and how to look at it and understand the market the proper way. Bonus setups, how we use the power of seasonality to trade the 1, 2, 3, and much more. Bonus 2, 25 top option strategy guide. This is great regardless of your knowledge of options. I include this guide because I believe options are a powerful trading instrument if you know how to use them properly. So it's important for me to include this so everybody can take advantage of options if they wish to do so and do it the right way using the 3S code. And then lastly here, access to our private Telegram channel. Every day I'm posting an idea across, say, stocks, ETFs, could be futures, commodities, currencies, using our different setups, using our different techniques. I'm basically handing you fish while you're learning to fish, but you'll be up and running here immediately. You go to metastock.com/code. These are some success stories that come in. They come in all the time. I don't ask for them, but it makes me very happy, humble, and pleased as people taking action here, using the 3S code, following, studying, and exercising the methodology. And guys, you're not going to see results unless you take action. Okay, you're not going to see results unless you take action. And these are perfect examples of people taking action. Okay, so who's ready to get started? Go to metastock.com/code. Here is your complete offer. Once again, before I turn it back over to Mr. Gibby and the team, we have limited this 25 slots because we want to take care of our students. You'll get an onboarding call. Don't worry, we're not gonna bother you, but we want to make sure you get locked and loaded. We have a team, a real live human team, not an AI robot team. We have real live human beings that can do remote sessions with you if they need to log into your computer or get you loaded. We've got guides, PDF manuals, everything you need to get going immediately, so you can start using it tonight or tomorrow. So I've got a couple minutes here, and I'm going to answer some questions, and then I'll turn it back over so Jeff can showcase. Is this applicable to Canadian stocks? Look, if you want to chart tulips and tea leaves, that's fine. All we're doing is trading price action. Okay, we're plotting price action, and that is what the 3S code is finding setups on. So the answer is yes, you can use this on Canadian stocks. We do not have it for TC2000 at this time. Any new brokerage platforms or providers that we add, you guys will be grandfathered. Anything new that we add to the indicator as well. Nope, no renewal. It's a one-time fee. You own it for life. Yes, we have training guides and resources in the members area. You also have access to our weekly strategy sessions. It's live market sessions where we do live analysis, live charting, live trading, and that is the perfect time and place to ask me questions in a live market where we break down certain setups qualify setups together. We look at swing setups, we look at day setups, we look at scalp setups, how to use this the best to your advantage. I did this by hand, did this by manually for years, George. Did it by hand for years, and now thankfully with the power of technology, we do not have to rely on that, and our scanners provide us, I mean, they're basically just spoon feeding ideas to us on a daily basis. Yeah, thank you. I appreciate everybody hopping in. If you have questions, you can email support@tradestrading.com. There's also a number here you can call, 1-800 number. And with that being said, I will turn it back over to Mr. Gibby. I want to say thank you for having me on. Thank you to MetaStock, great team, awesome charting platform, and you guys will not be disappointed. So I'll turn it back over to you. Thanks again for having me on. Have a great week. I'm headed to Orlando for a live workshop, and I'll be back next week, guys.
All right, Silas, thank you. Before you go, real quick, do you have it in wealth charts?
Yes.
Okay, there you go. I just want to make sure we got that one, because I didn't honestly know the answer there.
Yes, sir.
Very cool. Thank you very much, Silas. Appreciate it. Going to talk a little bit more about this, and let's go ahead and get it started. Thank you again. I do like how well this is kind of put together in MetaStock. I do like the fact that all the inclusions with the Telegram room and all that kind of stuff, it's really good, especially if you're getting started. You get those types of things. Linda, it can give alerts in MetaStock, at least. I know that for a fact, but you just have to turn them on, and you have to have the chart open that you want an alert on. So aside from that, you can also scan the entire market and all that kind of good stuff as well. So I don't need to really talk about what Silas, the 3S code is. Silas did a really good job of actually kind of covering that. I do like how well it looks in MetaStock. I like how your 1, 2, 3 points are all annotated. I like how your targets are all spelled out. They're on the screen. Your stop loss level is marked on there. Everything's there. It's available. It's quick. It's easy. It's not complicated, because the easier you can keep these things, the better you can implement them with discipline. So with this, you're going to get the pattern identification. It's going to be automatic. You're going to get the stop loss. You're going to get the profit targets. And as Silas said, it's completely customizable. If you want them to be more than one bar between spot 2 and 3, that's a setting you can change. If you want there to be more distance, you can go in and set it. So it's completely customizable to the way that you want it. So you do with the MetaStock version, you get the full commentary. It's going to give you the stop losses, the targets, exactly where you're at in that trade, how long it's going to last, all that kind of stuff is built in, part of the system in plain English. And then of course scanning. I think scanning is one of the things that we do best. And with MetaStock, Linda, you can use it in Canada. You can use it in India, Australia. There's 300 different markets. We get all of our data from the London Stock Exchange Group. They're the ones that bought Thomson Reuters, and a lot of brokers, institutions, banks all use it. Data right now, data coverage for about 300 different exchanges. So for $497, you're going to get the private Telegram room, the chart principles trading course, the cheat sheet, the options strategy guide, the support to help you get started. You'll get a copy of MetaStock if you need it, and you'll get those monthly monthly strategy scan sessions every month for basically indefinitely, as long as they're being run. So normally it's $497, it's $397 if you don't have a copy of MetaStock and you want to try it with MetaStock. MetaStock's been rated #1 32 years in a row. Not only are you going to get all those bonuses, we'll throw in a free trial to MetaStock. We'll throw in the data. We'll throw in some one-on-one support to help you get everything installed and running and packaged correctly. So all of it, $397. You can do that at metastock.com/code. You go to metastock.com/saleschat if you have more questions. If you want to talk to somebody about it, you can also call 800-882-3040. So there you go. Just checking over here. Every time I look over here, I'm looking to see if we have more questions. We don't. Silas, thank you very much for doing that. Very, very cool add-on. Appreciate it. Enjoy Orlando. I wish I was going down there too. I know why you're going down there. Sounds like a blast. Anyway. As we move on, I want to say thank you to one of our sponsors, CMT Association. CMT Association has been a nonprofit. I believe they've been doing stuff since the 70s, but don't quote me on that. They do basically an accreditation. You can learn about risk management, system development and design, portfolio management, applied behavior. We're going to have CMT come in and talk on Saturday. They're going to talk a little bit about how CMT designation may be helpful for you if you have assets under management, if you want to work for a bank, if you want a designation CMT at the end of your name. They can help you with all those things. As I said earlier, hugely well-respected, well-reputed organization. You can call 646-652-3300, or you could go to cmtassociation.org. I want to personally thank Tyler and all of the team over at CMT for the sponsorship that they do. Thanks, guys. All right. Of course, we're MetaStock, and Greg, the very presence of this sign means, you know what it means. It means it's prize time.
Sounds good to me.
All right, I'm going to start with the prize, and we're going to do something a little bit unconventional for this one. I hope you don't mind.
I do not.
As you know, like particularly on YouTube, but like we want to encourage people to ask questions and kind of participate and stuff like that. So what I'm going to do is I'm going to pick out a question that somebody asked during the day today. Could have been any time during the day. And we're going to pick out that question, you and me. Greg, you're going to help.
All right.
And whoever asked that question may win a prize. So what prize do you ask? I'm glad you asked. Let me look at my...
what prize I ask?
I'm glad you asked. Let me look into my prize bag.
Okay.
The next one
while you're doing that, I'll remind people that if they want to be eligible for these daily and almost hourly giveaways, they need to only go to metastock.com, select the banner at the top, and go to the Traders-Conference page and register there. If you're watching this on GoToWebinar, you do not need to do that because you have already done so.
Right on. Very good. This one is Sunny Harris. You know Sunny.
I do know Sunny.
Sunny's awesome. She one of the things she does is she sits down with a lot of traders and she does like a chat room and that kind of stuff. She's going to speak a little bit later. I can't remember exactly what day of the week, but she does her Sunny Bands indicator. But what she's going to do as part of this prize is she's going to offer you 2 full all-day sessions where she's going to trade along with you. She's going to kind of go.
That's a lot. That's a lot of time. That's great.
She values, and I think she's undervaluing it, but she values it at $700. I think that's cheap.
That's very much undervalued.
All right. So anyway, here's what I'm going to do. I'm at the very, actually I'm at the top or the bottom. I'm at the very bottom of the chat here. What I'm going to do is I'm just going to scroll up, and I'm going to ask you to tell me when to stop. And I'm going to start doing it now. Go ahead. Just tell me when to stop.
Stop now.
Paul T is the one. He said, oh yeah, Paul was asking, is this the only place in GoToMeeting where we can ask a question? And it was in the questions box. So one of the things with GoToWebinar is you can't have an open unmoderated chat, which I think is
weird.
The only thing I don't like about GoToWebinar is you can't have that. In YouTube, you can just say anything you want to, everybody can see it. And most of the time people are okay with their responses.
Yeah. Most people are nice.
Yeah. You know, it's the internet. So, in any case, Paul, thank you for that question. You did win that prize. I've got everything I need for me right here. So we'll go ahead and go with that.
All right, Jeff, I'll let you go. John Thomas appears to be here and ready to roll. I'm assuming he's the next presenter. And I'll get out of your way.
All right.
Can you hear me?
I can. John,
yay!
We're going to go here. We're going to just jump here. John Thomas is somebody I'm always really interested in hearing from. He's got a very, I like the way he looks at the market. It's very macroeconomic compared to what I do when I look at the market. And I always like kind of the opinions that he has and kind of the thoughts that he has, because I always think it's good to look at the market from different angles and take in ideas. John's full of good ideas. And I'm going to go ahead and make you the presenter, John. How's that for an intro?
God, I'm humbled. I'm not worthy.
Well, hopefully you should have just gotten a pop-up to ask you if you wanted to share your screen. We can hear you, so I'll let you know when we can.
It's asking me to open my system preferences. I'm a little bit leery on that one. Well, let's open it. See what happens. And I have to enable GoToMeeting.
Oh,
And
yeah.
I have to put my fingerprint in.
Okay.
And it wants me to quit and reopen.
Oh no. Oh
Yeah.
no.
Oh,
Wow.
later. Let's try later.
Let's see if that works. If not, I've got a book full of dad jokes that we can line on while
Yeah,
we do.
I have a book full of clean jokes I can always use if we don't get the PowerPoint up here. So screen, let's see.
Sounds like it's working.
Can you see anything yet?
Not yet, not yet. I think you need to just click on the screen that you want and we should be able to see it.
Use two screen. This is the, could be the issue. I have two screens open.
Yeah, it should be allow you to pick what screen that you want.
Okay, that's way over my pay grade. Okay, we're down to one screen now.
Okay.
And I see you.
All right. Yeah, that's me. Hi.
Hi. Now, how do we get my screen up here?
Yeah, let me do this. I'm going to pull it back, and then that way I can make sure that I'm looking at the same thing you
I
are.
have the control panel up here.
Okay. Do you see where? Do you see the option that says
Is it in
sharing?
there somewhere?
Mm-hmm. Here, let me do this, John. I'm going to pull it back. Let me make me the presenter real quick. Okay. I'll show your picture again. I'm going to send it back to you. Make presenter. Okay. It should literally say, do you want to share your screen? Uh-oh, I muted you. Oops. There we go.
Okay, got the voice back.
Uh-huh. Did it say, do you want to share your screen?
It's asking me to open system preferences again.
Oh,
Let's try deny. Yeah, I don't see any. Okay. Yeah, I'm not seeing an option here to share screen.
Okay. Do you can you see where it says sharing? It should be above the audio button we were working on earlier.
Above audio, I have attendance.
Okay. Do you have sharing somewhere in that list?
Show.
Sharing.
Yeah, I don't see sharing anywhere.
Okay. Let me try this real quick. I'm gonna make me the presenter.
Changing this.
Okay. Okay. Did it just ask you if you wanted to share your screen?
No, it's showing my picture though.
Okay. No, now it should ask you if you want to share your screen.
Yeah, I see. Let me try it hover. Nope, that's not it. That's not it. I see everyone, webcams, Zoom, and screenshot.
Okay. I think what we might want to have you do is actually join the room again. I don't think it's giving you that option just because it isn't turned on your iPad.
I'm on a MacBook Pro.
Yeah. Yeah, okay. To me, it's just it's an Apple. But yeah, I think.
Let me log in and log out.
Yeah, let's have you do that. And while you do that, Greg.
Yeah, I'm here. I've been patiently watching.
John, I'm just going to ask you to jump back in, if you don't mind.
Yeah, I have. It's showing blue for GoToMeeting and Zoom, so that should be working.
Yeah,
so
I think
try and log in and log out again.
Set the permission. We should be able to see you.
Okay.
So let's have you log right back in after you log out. All right.
Okay, he's out now. Yeah. I'm sorry, Jeff. Is there something you wanted from me while you were?
I wanted you to help me entertain everybody.
Just kind of lengthen time a little bit.
Right. Do you have any good jokes that you have?
Wow. You know what? I know that we've prepared for just such an occasion, but I can't remember what we did. So I'm ill prepared for just such an occasion. See, John. Oh no, he's not back yet. Okay. And he's done this same presentation, or no, he's done this presentation. He's presented with us many times, so I'm curious. And the interface he's describing doesn't sound like the one we have. I guess maybe it's different on a.
It's not terribly different, but Apple requires more control. Like it requires that you go in and say, allow GoToWebinar to share my thing, and that kind of stuff. Well, and so he has to set it and come back.
Which
he set it while we were talking to him.
You could mention the fact that coming up next is going to be Larry McMillan talking about what the option-oriented indicators are saying. Larry's always, he's obviously a legend in the industry. He's always well received. And then after that is Mark Sebastian. I don't think I know Mark very, if I'm honest, Jeff. And he's going to be talking about mega cap Clout, the outside power spreads. Right. And then just to remind everybody, John, okay. You want to try again, Jeff?
Yeah, let's see if we can get his monitor to come in. Let me go ahead and make him the presenter again. Okay, John, we can hear you.
You have been made presenter. This is so easy.
Oh, there you go. Now you just hit that button that says share.
Okay, do you see anything yet?
No, but give it a second. Sounds like it's working. It takes a second usually to throw through. And I can see it coming. It's coming. Maybe.
I see it. It's there.
Okay. For me, it didn't completely come in, but I'm looking at it. You can see it. YouTube can see it.
Yeah, I can see his entire screen. It is showing. Yeah, there you go, John. That's perfect.
John, you're good. You're good to go.
Okay,
yeah.
How many of these have we done by now? 25.
I haven't lost count. Okay,
yeah,
but
I'm a slow. Maybe by the time we get up to 30 webinars, I'll get all this right. Of course, GoToMeeting keeps changing every month too.
Yeah, I was just going to say that doesn't help.
It doesn't. Anyway, let me get the show on the road here. Trading the bear market. If you don't know what those wild gyrations on your screen have been lately, that is called a bear market. And while rare, they do occur, and we're certainly in the middle of one now, and maybe even the beginning. Who knows what's going to happen next? So why listen to John Thomas? Well, I have 55 years of experience in the global financial markets, 10 years as the economist correspondent in Tokyo, Japan, and later the White House, 10 years running the international equity division at Morgan Stanley, Marine Corps combat pilot in Desert Storm, 10 years running the first international dedicated hedge fund, 5 years fracking for natural gas in Texas, and now 17 years publishing the Diary of a Mad Hedge Fund Trader. I am one of a handful of founders of the modern hedge fund industry who's still breathing and working. So take out your pen and paper to take notes. What I'm about to tell you will blow you away and change your life, for I'm in the early retirement business, your early retirement. Learn what to buy, when to buy it, and why. There is a method to my madness. The market currently is looking through a trade war solution, assuming that no matter how bad the trade wars that have been announced so far, eventually they will get solved. Or at least that's what the market thought for the last 2 weeks when it was rallying off a extreme low. Bonds are stabilizing after seeing the worst trading week in 25 years on a promise that the president will not fire Jay Powell. Markets have entered a wide trading range with much volatility, lots of opportunities to make money here. Economic data remains consistently weak, capping any upside in stocks, and we certainly saw that today. Recession call is still on, with China in no hurry to negotiate. It's safe to say that when the U.S. doesn't know the name of the person they're negotiating with, they're not negotiating with anybody except themselves, or maybe the stock market. That's who they're negotiating with. U.S. dollar hits a 3-year low on a sell America trade. Oil bounces off 4-year lows. but is another big recession indicator right now. Gold remains golden at all-time highs. We've had a 6% pull off. Get ready to get back into gold again. So the economy absolutely is awful. The beige book says we're in stagflation. Jay Powell hints there won't be any interest rate cuts this year because inflation is too high. Consumer confidence is posting 20 and 30-year lows. IMF cuts the US GDP forecast, leading economic indicators plunge. Europe lowers interest rates, and they've lowered rates now 7 or 8 times against no cuts for ourselves. Unemployment fears hit a 5-year high. Inflation expectations are at 44-year highs. Yes, it all looks like a horror movie. So how would you like to earn 350% in a month? How about 394%? If that doesn't work, how about 412%, 421%, 811%? These are all the returns that Mad Hedge followers have gotten from our trade alerts, and I'll tell you how to do that in a second. So the election, as we all know, had consequences. It brought us an earlier but higher stock market top. That's behind us now. It brought us a recession. That's happening now. It brought us a much lower level in a market crash than we could have thought. That's in progress now. It's still a coin toss whether we go to new lows or not. There are more sectors that are losers in the economy now than winners. Inflation is rising, stagflation, national debt is rocketing. We're going to have less regulation at some point, at least it's been promised, that will affect financials, full self-driving cars, and crypto. Environmental protection is doing a disappearing act, and we soon will have extreme labor shortages at minimum wage levels, hitting agriculture, restaurants, and construction. Oh, and they have this new thing called import tariffs. Yeah, I bet you've heard about that. I've been through quite a few trade wars myself. For most people, this is a new experience. So why follow Mad Hedge Fund Trader? Well, we've averaged 50.61% for the last 17 years versus 22.92% for the S&P 500. This is us in the blue. That's the SPYs in the orange. And notice that even when markets go down sharply, like we've seen this year, we go up sharply. We make money in all market conditions. And if you don't believe me, just listen to one of my clients, Wilson. Let's see if I can get his.
Hi, my name's Wilson, and I've been with the Mad Hedge Fund Trader and John Thomas since 2019. I caught the phenomenal returns in 2019 and 2020, somewhere in the order of the 80-90% returns on both of those years. I caught all of those trades, NVIDIA, the TLT, the Teslas, and so many more. And then in 2021, I started trading in some additional accounts, and I have caught almost all of those trades as well, and have been getting almost the entire returns that John has received, and it's been just fantastic.
All right, Wilson, and just to recap here, these are the actual trades that Wilson was able to accomplish. He actually sent me his account statements to prove it. 482% on NVIDIA, 811 on NVIDIA again, Berkshire Hathaway 421, JP Morgan 412, Palo Alto Networks 394, Vertex Pharmaceutical 350, Silver 113, and JP Morgan again 87. Of course, the stocks didn't move anywhere near this much. We did get these returns by using very sophisticated option strategies which minimize your risk and maximize your returns. and it has been working great for us for 17 years now. Personally, it's been working for me ever since the options markets opened 50 years ago. So this is my secret weapon, the Mad Hedge Profit Predictor. That's my market timing index. Today it's showing a reading of 57, meaning we're getting somewhat overbought. When we get all the way up to 80, that's a panic sell level. When we get down into below 20, that's a buy level. And of course, we spend all year going back and forth like this. This is great for market timing. It took a team of 1,000 a team of mathematicians 1,000 hours to come up with the algorithm that powers this. So why do you need an algorithm? Well, why use a toolbox missing its most important tool? Algorithms have become so dominant in the market, you should never trade without one. It does the work of a seasoned 100-man research department in seconds. It runs real time and optimizes returns with the addition of every new data point far faster than any human can. Imagine a trading strategy, it upgrades itself 1,000 times a day. Don't go to a gunfight with a knife. If you're trading against algos alone, you will lose. Algorithms provide you with a defined systematic trading discipline that will enhance your trading profits. This is 3 years of market timing signals. And you can we get a lot of buy indicators at market bottoms, sells at market tops, buy, sell, and that's how you make 50% a year return on average. I'm not the only one using algorithms. Some 80 to 90% of all current trading is algorithm driven. I was walking on the Miami waterfront a few years ago, found this super yacht. Look what it's called, algorithm. Obviously, it's working for more people than just me. This is the trailing 1 year of signals, buy and sell signals, and you can see this was the August meltdown where we had a very sudden collapse in the market. Huge buy signal right here. Another one right before the election. And then we got another one here on April 2nd. And since then, we've melted up about 15% in the index. Also giving you sell signals here, 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 and here. This year has really been about sell signals. So why cover all asset classes? Sounds like a lot of work to me, which it is. Information about one asset class sheds light on all the others. For example, knowing what the bond market's going to do and therefore interest rates is incredibly useful advantage when picking stocks. Some asset classes will be doing great while others are dead in the water. It will point you to where to trade the winners and avoid the losers. Give yourself every advantage. Knowing what's happening all the time, everywhere, is the way to do it. So, how to trade a bear market? I've been through quite a few of these. I should count them someday. I think I've been through at least 12. And it is an art form in its own. We're going to tell you how to do it. So, for a start, there are inverse S&P 500 ETFs, which do the exact opposite what the S&P 500 is doing. It's great to hedge existing portfolios, or you can just do directional trading on your own. And you can see when the market peaked right here on February 18th, this index was just trading just above 18. We made it all the way up to 28. That's over a 40% gain in just 2 months. And of course, once we got the 90-day postponement on the tariffs, it collapsed back down again. So huge volatility, huge moves, and we're getting close to buy territory right back down here again. There's also, if you're not happy with a 2x ETF, about a 3x short ETF. And that's exactly what this one does, the SPXU. And this one moved from just over 18 to 38, and that is more than a double on literally only a 20% move in the index. So again, huge moves over a short period of time, fantastic trading vehicle, fantastic hedging vehicle. You can also buy put options on specific stocks, and here I use the example of Apple. If you could buy the $200 puts today at 17, which expire in December of this year, and it collects $100 for each dollar Apple falls below 183, which is your break-even cost on a 17 cost. So again, another hedging vehicle, very simple, kind of expensive. There are better ways to hedge, but I just thought I'd start at the beginning first. You can also sell short call options. These are also known as buy rights, and people have been doing buy rights and doing extremely well really since December. If you use every rally to sell a front month call option short against your long Apple position, you're doing quite well this year, and you're probably even up on your Apple position, even though Apple has dropped $60. And all you had to do was write calls here, let them expire, write them again here, write them again here, write them again here, and oh, how about writing them right here? In this example, if you sold short a $200 call option, expires in December, you make $22, and you collect $2,200 for each option you own, as long as it stays below $200, the strike price. There are also a lot of dedicated ETFs that take advantage of specific market indexes. For example, you can buy volatility, and there are many ETFs that do this. In this particular one, let's go back to the February 18th peak in the market. You can see the volatility index for the VIX went from 17 to 60. That's quite a move, a fourfold move. And if you were long volatility in any form, they also have 2x and 3x ETFs on this. You made quite a bunch of money. It also turns out that initial public offers, stocks that recently went public, dropped twice as fast as the main market in bear markets. And you can see here you could have shorted the IPO ETF here at 48, and it went all the way down to 31. So again, big dip there, great way to play short up here. Also, another opportunity you can take advantage of, momentum dies in bear markets. Well, why don't you short momentum? Well, if you had shorted momentum on February 18th, this ETF went from 230 to 170. That's an enormous drop, about 25%. And if you'd covered at the bottom, you would have done quite well. And by the way, we're very close to another place to sell short the MTM once again. There's another one. You can short beta. The beta in a stock also collapses in bear markets because a lot of stocks collapse and then stop moving. They just sit around the bottom forever. And in this particular case, you could have sold short the Invesco S&P 500 high beta ETF, could have sold it up here at 96. It went all the way down to 60. So again, other great short plays outperform any falling market. Here's another one. You can buy specific hedge funds which play long and short the market. And this particular one, the HDGE, had a fantastic return, went from $15 up to 20 before selling off. That's a 35% return, and is another great way to hedge existing stock portfolios. And when all else fails, you can go cash. But there's cash and then there's cash. And the best way to keep your cash is in 90-day US Treasury bills. By the way, Warren Buffett owns over 300 billion of those, so he likes them. You know, for a start, the 90-day T-bill is government guaranteed, has endless liquidity, they trade like water. It has 100% collateral value so for margin. So if you're trading short term, you can keep all your money in 90-day T-bills and then buy new positions in other stocks on margin against them. Margin interest rates these days are around 5.5%. So it's not costing you very much to take on a new position. You lock in a guaranteed income. You know exactly how much you're going to get. at a certain point in time. You can sell it anytime you want to earn full interest. By the way, the interest isn't taxable until you sell it. So if you buy 90-day T-bills, or if you buy 1-year T-bills, for example, they expire next year, the tax isn't due until next year or the year after when it's payable. These will survive any bear market. It's basically bomb-proof, but they don't make it easy how to buy them because brokers don't make money selling 90-day T-bills. They make money selling stocks. So you may have to call them and ask them how to actually get a hold of these things. So stocks, we have been on a roller coaster, to say the least. We've had the worst start to a year in market history, and that's going back to when the Dow average was started in the 1800s. But we are at all-time valuation highs at a price-earning multiple of 22. Morgan Stanley is marking down its forecast from S&P 500 earnings from 270 share down to 257. Volatility index spiked up to 54, then collapsed. All capital gains of the last 13 months were wiped out when we were at the market lows. Chaos reigned supreme with gigantic 1,000-point moves almost every day. Hedge funds are still dumping technology stocks, using rallies like this one to go short. And tech stocks are still expensive relative to the main market, but nowhere near as expensive as they were just 3 months ago. So that is why technology is leading the downturn on every down day. The tech stocks always fall the most, and today was another good example of that. All long-term technical indicators have rolled over, showing that the bear is here to stay for the foreseeable future, could continue through the summer, even into next year, if the economy really goes down the tubes. So all in all, 2025 is looking like a down year for stocks. We'll have some kind of a negative return. If we're lucky, we'll rally all the way back up to -1 or 2% instead of the -22% that we are at, or the -30%, which is possible by this summer. So this is the SDS here, and we already covered all these, so I'll skip through those. So this is our new range, down 5.4% from the high in February to down 20% from the February high, or 5,000 to 5,500. There's a lot of hedge funds that are zeroing in on that range, and you can see why. This is the high here at 580, the low which we got in the beginning of April, down here, 480. That is a very generous range to trade into. Best case, we keep trading in this range until the recession fears pass. Then we take off and go to new all-time highs next year. Worst case, we keep trading in a range, and then, oops, trade war didn't really quite work out, and we break down to new lows, at least down to 4,000. There are a lot of technical indicators targeting 4,000 on the downside now for the SPYs. So what to own? On bear markets, if you're a long-term investor, you want to use the opportunity to buy Cadillacs at Volkswagen prices. And JP Morgan is certainly one of those. They are the quality play in banks, and they do have the advantage, and they will be a big beneficiary of deregulation if and when that happens. Citigroup, same category. Berkshire Hathaway, well, we had a slight change over the weekend. Warren Buffett retired. That took us all the way down to the bottom end of this range today. Berkshire Hathaway now has to reprove its leadership once again with a new CEO. Hopefully that will be successful, and Berkshire will continue to be the great play that it has been for 60 years, really. And we've had this as a core holding since we started Mad Hedge Fund Trader 17 years ago. So another buy on the dip. Goldman Sachs, another bank, benefiting hugely from the tremendous volume in the market right now. and we're targeting $700 a share in 2026 for Goldman Sachs. Morgan Stanley, another broker with a very hefty presence in asset management, which I helped set up myself about 40 years ago. We're targeting 180 for next year for Morgan Stanley. And BlackRock, another money manager, we're looking for 1,200 after they've had a big sell-off this year. Interactive Brokers, another big options trader, benefiting hugely from the volatility and the volume. I'm looking for $300 a share next year in Interactive Brokers. Second half of the barbell are technology plays. And of course, there's the index, NASDAQ, and it has almost recovered to where it was a couple of months ago. Again, looking for a trading range down here with an eventual upside breakout. Tesla, I think, also stays in a trading range for a while, possibly for all of this year. Eventually, I do see an upside breakout hitting next year, 2026 target of $460, and there's me with the new Cybertruck down there. And Microsoft already had a monster move last week on earnings surprise and continuation of AI investment. So that is a pretty amazing move right there. We're looking for $500 a share next year. And by the way, these are some of the planes that I fly at air shows. I'm a part-time pilot and a vintage aircraft pilot, and all these planes are older than I am. This is a B-17, Boeing B-17 bomber. MetaStock, again, looking for it to recover by next year, $700 a share by 2026, and that's me with a B-24 Liberator. Amazon, subject to antitrust proceedings, also caught in the trade war, bouncing around its summer lows of last year. We think it does recover at some point, and we're looking for $300 a share there. That's a B-26 Marauder down in Florida. And NVIDIA, probably the largest stock held by most individual investors, also the most overowned. We've been shorting it like crazy, selling here, 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 and here. We sold it again this morning, but we expect a recovery next year up to $180 a share once a recession ends. And Alphabet, again, available at bargain prices, looking for a recovery next year to 250. When this recession ends, you can expect the leadership to be in two sectors, big technology stocks and banks. Those are our two favorite sectors. Until then, there's a lot of other things you can do in the markets, and that's an early P-51 Mustang fighter, fabulous plane to fly. Palo Alto Networks, of course, hacking never goes out of style, and we're looking for 250 a share by next year, Palo Alto Networks. And this is a B-25 Mitchell bomber. This is the one that did the original raid on Tokyo. Okay, bond market. Yes, you can make money in bonds. Actually, not a bad year to own bonds because they're paying interest, about 4.3% at the moment for the 10-year. But bonds have had to put up with very heavy selling by foreign central banks. And that's because the U.S. Treasury discussed hitting foreign investors with withholding taxes on their U.S. Treasury bond holdings. That caused a panic, which took bonds down 10% in 1 week. And so far, that never got out of the discussion level. So we have had some recovery, but not much. Bonds had their worst sell-off in 25 years, and no one's rushing back in. Continued collapse of the U.S. dollar is scaring away foreign bond investors. Even if bonds are unchanged this year, foreign investors are losing 20% just on the currency. Bond credit quality is crashing. So I would avoid all interest rate plays for the time being. Here's the TLT. I say that monster crash back here, struggling to get up, but not really happening yet. So I'm going to stand aside on bonds for the time being. Here's interest rates. Those seem to be headed towards 3.5% by next year, but the Fed may not cut interest rates until next year because of rising inflation fears. So don't expect much of a move to happen until then. Foreign currencies, the dollar is trash. Dollar's had some of the sharpest down moves in history since the beginning of this year. As the flight from America trade accelerates and foreign investors pull their money out, not only in stocks and bonds, but in real estate and everything else. Rising interest rates haven't helped. Usually rising interest rates are great for a currency. It's not happening. That means the weakness in the dollar is structural. It's not temporary. 15 years of long dollar positions held by foreigners are now unwinding. Trump economy is forcing investors to flee all U.S. assets, including stocks and currencies. Massive cash flight is running away from the U.S. and going predominantly into Europe and Japan by all the foreign currency ETFs. There's a lot of them out there. Australian dollar, after that one meltdown week, we've since had a nice 10% rally. I expect it to go higher. And the Japanese yen up about 20%. Fantastic play. Euro has been one of the strongest also. Huge moves here. And the British pound also. Who thought the British pound would ever be back in favor anywhere? But it certainly has been since the beginning of this year. And of course, emerging market currencies also doing very well, as a lot of foreign trade moves out of China into other emerging countries. Energy and commodities have just completely crashed. One of the biggest down moves in history, down $13 in a week or 18%, 72 down to 59. It's traded even lower since then. Even high dividend paying stocks collapsed. ExxonMobil was down 18%. It is the sharpest fall in Texas tea since the 1991 Gulf War. Recession fears are running rampant. No one wants to pay for a storage until a recovery, which may be years off. Oil is very expensive to store because of the contango. You have to pay for the storage and you have to borrow the money to pay for it. Global recession is looming large. Avoid all energy plays like the plague. And here is my long-term forecast. This is the oil going out of style chart. And you can see we've had one of the biggest double tops of all time. This one back in 2002, this one again in 2022. And eventually, I think oil goes down to $10 a barrel, but it may take 20 or 30 years to get there. So definitely a losing commodity while all the others are rising. Cameco is one area in the commodity space which we really like. They are makers of fuel for nuclear power reactors, known as yellow cake. Great double bottom setting up down here. I'd be looking to buy anywhere down here, and you could easily get a large move in that, maybe up to $100 a share. Precious metals has been taking a break, but boy, it has been the place to be in 2025. At the highs, it was up 40% so far this year, made it up to $3,500 an ounce, and JP Morgan is targeting $4,000 an ounce this quarter. Gold topped its inflation-adjusted all-time high from 1980 at $3,424 an ounce. Interest rates seem to no longer be a factor. It's just flight to safety. It used to be that high interest rates were bad for gold. That's just not happening this year. And we're starting to see the first $100 up moves in history in gold. We've already had a couple of them this year. So natural profit taking is taking gold back to 5%. I'd be getting in right around here. Start scaling in. The central bank buying that's been supporting gold for the last 10 years never really went away. So keep all gold plays and miners on dips. So here is the gold chart. This is the GLD ETF that trades in US markets. And my 3-year target is $5,000 an ounce, or up 66% from here. Also looking at Barrick Gold, world's largest gold miner, we're looking for a 60% gain this year from here. So yeah, lots of upside for Barrick Gold. Same with silver. You know, silver is going to play a catch-up game with gold because there's a real shortage of risk-off asset protection plays around the world right now. So the harsh truth is you really need my help. The majority of individual traders lose money. They lack the correct training and discipline to succeed. Most broker research suffers from grievous conflicts of interest. Wall Street is all about moving money from the uneducated to the educated. The easy solution to that problem is to get educated. Fidelity did a 20-year study and learned that their top performing investors were dead people. Why do dead people do so well? Because they never sell. You need a real pro to guide you through the market maze. The market is not monolithic and 95% of it can be completely ignored. There are a few great sectors and a lot of awful ones. You can earn a 10 times return on the great ones, but get wiped out by the losers. Let a 55-year veteran steer you to safe waters. Let me sit next to you and guide your hand on every winning trade. 89.74% is our trailing 1-year return, and we're at an all-time high right now. Richard made millions religiously following my trade alerts. He now spends his retirement restoring vintage aircraft and flying them over the California coast. Greg turned $100,000 into $3 million solely on my trade alerts. He bought a new home in Orange County, California, with Tesla solar panels, a Tesla Powerwalls, and a Tesla Model 3. Still has enough money to send 3 kids to college. And let's hear from my friend Bob, who turned $500,000 into $27 million.
Hi, this is Bob. I live near Denver, Colorado, and I'm hiking on top of the Continental Divide. 9 months ago, I joined John's Global Dispatch Service and was so impressed with the profits I made that 2 weeks ago, while hiking in the Dolomites, I joined his concierge service. And in 2 weeks, it is 100% paid for it. And I couldn't be happier. Life is good. John really helps. The other day, I had a text message exchange with him regarding some concerns I had with TLT. Put spreads, he encouraged me to stay in. I did, and today they went out at 95% of maximum potential profits. And that's the way it works for me. I hope you all do well trading yourselves. Thank you.
Thank you, Bob. So what do we do about all this? Well, stocks, you want to sell rallies. Bonds, you want to buy dips, but only the biggest dips. Commodities, buy dips. Energy, sell rallies. Currencies, buy dips. And precious metals, buy dips. If you're not up 89.74% in the past 12 months, as I was, you're reading the wrong newsletter or following the wrong trade mentoring service. 50.61% average annualized return. You get those kind of returns, you get to do things that other people can't do, like take the owner's suite on the Queen Mary from New York to England. And once you get to England, you can take the Orient Express to Venice. Here's the very long view. The 2000s to the 2010s were the hard decades for making money. The 2020s and the 2030s will be the easy ones as a global demographic wave brings on a new golden age. 85 million millennials will become big spenders over the next 15 years, while 80 million baby boomers, a drag on the economy, will fade from the scene. That would create an economic boom that will last another decade, and that started in 2023. Up 20 times in 18 years. Are you ready for a replay? That is what happened the last time we had an identical demographic tailwind like this one. Up 20 times from the 2009 low takes us to 120,000 the Dow by 2030. And if you think I'm smoking California's most popular product, think again. We're already 3/4 of the way there. We only need one more triple to get to that 120,000 target. So, except this time it's different. We have an AI tech turbocharger, which is hyper accelerating on all fronts simultaneously. AI-based products and services are just starting to roll out. The development of functional quantum computers means that computational ability will be about to increase 1 trillion-fold at no cost. So who will show you how to play the next 90,000 Dow points? Sit with me, John Thomas, the Mad Hedge Fund Trader, and my Global Trading Dispatch. Follow my research and market-beating trade alerts, and you can rake the profits in. Let a Marine combat pilot steer you to big profits. We trade single stocks, options, and ETFs for global equities, bonds, foreign exchange, energy, commodities, precious metals, and real estate. This is a typical month for us. We bought the S&P 500, made a 16% profit. We had 10 out of 11 trades make money that month. Bought the TLT, bought the Russell, bought Amazon, bought Apple, bought Biogen, but then stopped out very quickly. We have a very aggressive risk control process where we stop out of losers very quickly. Easy to do when you know 90% of the time your next trade is going to be a winner. It's just a matter of time before barbell stocks break out with all new all-time highs. Watch this space melt up going into 2026. Get ready to start reeling in those whoppers with Global Trading Dispatch as your guide. This is how it works. Our algorithm identified an upside breakout coming for NVIDIA last year. So what did we do? We sent out a trade alert, which looks like this. This is buy NVIDIA at 480 or best, and these are pre-split prices. And to get a $10,000 weighting, you needed to buy 21 shares. What happened? Well, NVIDIA went up 45% in 22 trading days. Did we sit around and relax? No, we didn't. We sent a trade alert that says take profits. Sell NVIDIA at 695 or best. And on this trade, we made $4,515 in just a few weeks. So this is a history of our 10 baggers, stocks that went up 10 times after we recommended them. There was Zoom, it went up 10 times. Lam Research, 10.6 times. Square went up 25 times. Moderna went up 40 times. NVIDIA up 70 times. And of course, the big daddy of them all, Tesla, went up 178 times from our $2.35 split adjusted price. I gained financial independence for life, and so can you. Discover how to make thousands of dollars a year in extra income. Go from complete beginner to seasoned pro in weeks. Learn how to quit your day job and trade for a living full time. Trade from anywhere, anytime. Supplement your retirement income with the satisfaction of booking winning trades by the hundreds. With my Mad Hedge Global Trading Dispatch, you get instant trade alerts sent out at market sweet spots, live bi-weekly strategy webinars like this one, invitations to strategy luncheons around the world, more educational videos and webinars than you consume in a lifetime, and access to a 17-year database. This is the one-stop shop. It's for individuals who understand what's happening with their retirement funds. It's for people who want to learn how to trade for a living full-time, get the financial education of a lifetime. It's for small institutions and financial advisors who can't afford in-house research departments. Get in before the next melt-up begins. This is what you get in your inbox every morning, 5 days a week. A research report on the most interesting parts of the market. You also get Mad Hedge Hot Tips, the 5 most important things that happened today and what to do about them. This is what I'm not going to charge you for this service. I'm not going to charge $100,000. That's what I charge my big hedge fund clients. They're happy to pay because I make them millions of dollars. And I'm not going to charge $12,000. That's what I charge my concierge customers for this service, who can get my personal cell phone number. and I'm not going to charge $3,500. That's what the full price is on the website for our service. This is the real deal. Creating this product cost me millions of dollars. With the best customer service in the industry, running it costs millions more. 6 months for just $997. That is a 71.5% discount to the website price. We only take 25 new subscribers at a time, so it's first come, first serve. I can't wait to make you a top drawer trader. And Jeff, go ahead and put the link to our sales page in the chat box so people can take advantage of this offer today. Let me make the money for you to pay for your own subscription. You make the trades. Discover how an experienced hedge fund manager finds and exploits the best sweet spots in any market. Just click on the chat box on the right. Okay, buy now and you'll instantly receive a trade alert with an extremely high probability of success that you can execute immediately and make some of the most serious money in your life. 90% of these trade alerts make money immediately. So sign up today. You'll also get my video training course, Options Trading for Beginners, a 12-chapter course about everything you ever wanted to know about options, written for the basic beginner. So we just have a couple of minutes left. Who is John Thomas? Grew up in LA, the oldest of 7 children. Wasn't much to do in California in the old days. So I became a paper boy and found the stock pages, bought IBM at 20 and sold it at 30, and slowly found a far better way to make money than delivering newspapers. By the time I was 16, I earned enough money to fly to Europe. By the time I was 17, I'd visited 50 countries and spoke 4 languages. At UCLA, I majored in math and DNA research, which landed me a job at the nuclear test site in Nevada. As the war wound down, I became a foreign correspondent for The Economist magazine, and after 10 years of government service, all I ended up with was a bunch of medals. As a foreign correspondent, I covered China during the Cultural Revolution, was the first American reporter to visit North Korea since the Korean War, and covered the rest of the continent all the way to India. I figured out very quickly you didn't have to be that smart to make money in the stock market. So I got into the industry, joining Morgan Stanley. And yes, the years have been cruel. That's me back in 1983 with my original ID card. Served as a tank commander in Desert Storm, also flew as a pilot, and that was a great experience. Rapidly became the top performing hedge fund manager of the 1990s, eventually bringing in a 1,000% return in a decade. Then the money really started to pour in. It's an understatement to say that when your income goes from the thousands to the tens of millions, it really has a big impact on your lifestyle. I now spend my days pursuing my first love, finding winning trade alerts, but I now do it from my 3 houses in San Francisco, Lake Tahoe, and Zermatt, Switzerland, and I've quit turning millionaires into billionaires. There's far more satisfaction in leveling the playing field for the average guy and teaching them how to trade, and that includes you. If I can take a $50,000 account and turn it into $500,000, that is more job satisfaction than I can get anywhere. In the free time I have left, I fly vintage aircraft, as you probably realize by now. And as a Marine Corps veteran, I volunteer for grief counseling for widows and orphans. When you make millions of dollars for your clients, you get a lot of pretty interesting invitations. $5,000 cases of wine, lunches on super yachts, and free tickets to the Olympics. So it's in that spirit that I traveled to the famed World War II fighter station at Biggin Hill in England to meet Mad Hedge Concierge member Peter Monk. Peter was a poorly paid pilot for Ryanair when he first signed on for my global trading dispatch. After doubling his money in the first year, Peter upgraded to my concierge service. Then the money really started to come in. Peter plowed his Mad Hedge trading profits into restoring a 1940 Battle of Britain veteran, a Supermarine Spitfire Mark IX, in his backyard, begging, borrowing, and trading for parts all over the world. He eventually built his fleet up to 16 flying aircraft, which today are worth over $65 million. When Peter invited me to fly one, I jumped at the chance. It was a mild and blustery day when we took off and headed for the English Channel. Even though the plane was 82 years old, we managed a brisk 250 miles per hour over the countryside. The Spitfire could outmaneuver any plane that the German Air Force threw up against it. This particular plane is credited with shooting down 2 Messerschmitts, and it's easy to see how. We found a clear piece of sky over the white cliffs of Dover between 2 big fluffy cumulus clouds and commenced a full-on aerobatic flight test. Pilots always want to see what I can do with these old planes, and this time was no different. I executed multiple loops, barrel rolls, chandelles, lazy eights, Immelman turns, and wingovers, careful never to exceed 1G limitation or the wings might fall off. Spitfires can dive like crazy. We dropped from 8,000 to 2,000 feet in seconds. Then it was back to Biggin Hill for a perfect 3-point landing and a pint of beer. I look forward, let me make millions of dollars for you, as I have done for thousands of other followers over the last 17 years. I look forward to working with all of you. And let me just check the store to see if any orders have come in. We have an order from Sheldon in Thomasville, Georgia. We have Rob from Toronto, Ontario. Thank you very much, Rob. Okay, let's move forward here. 6 months for just $997, and click on the link in your chat box to take advantage of our offer. We have an order from Karsten in Vail, Arizona. We have an order from Robert in Glenbrook, New South Wales. Thank you very much, Robert. Promise to work hard for your money. Have an order here from Russell in London, England. Okay, so that is pretty much it for today. Jeff, can you hear me?
I can, yeah.
Sorry for all the technical foul ups. We'll figure this out someday.
I told Kelly the other day that once I figure everything out and stop making mistakes, I'll be ready to retire. So,
I was just going to say, perfect signal to retire.
Exactly. No worries. Did a great job. Thanks a bunch. We've got the links in the chat for YouTube, and we've got them in GoToWebinar. Thanks for joining us, John. I appreciate that.
Okay, I love it, and we'll catch you next time.
All right. Very cool. Let me go ahead and do this. And we'll go ahead and do this as well. Make me the presenter for just a second. And as we kind of move over to the next presenter, I want to say thank you to Stocks and Commodities Magazine. Oh, wow. Boy, do I have a big picture of me right now. Let me see if I can get that. You can find out more about Stocks and Commodities Magazine at traders.com, www.traders.com. Big thank you for them and all the support they've been all of this time. I want to remind you that all of the MetaStock offers, including the extended trial, you can pick up at metastock.com/comp promo. If you have any questions for us, go to metastock.com/sales-chat or give us a call, 800-882-3040. We're going to move right on to the next presenter, Larry McMillan. Larry McMillan almost needs no introduction, but he wrote what's considered by many to be the guide to trading options. The title is Options as a Strategic Investment. Larry McMillan is very numbers driven. He's going to spend a few minutes talking about what he sees in the options markets, and I'm going to be taking notes. I've got a notepad right here. So let's go ahead and get you going. Larry, how you doing?
Good. So do you, well, I have to share my screen here somehow, right?
Yeah, it should have just popped up and said, do you
want?
Oh,
okay, there we go. Gotcha.
Yeah. It makes it easy because I just say, hey, make this guy the presenter, and it takes it from there. I can see the presentation. I can hear you.
Okay.
I'm gonna get out of the way. It's your turn.
All right, thanks, Jeff. Good afternoon, everyone. We're going to take an hour or so to talk about this very interesting market. Some ways it's almost historically interesting, and we'll talk about a couple of those things. Before we just get started, a little background. I started this company as a derivatives research firm. We were publishing research, newsletters, selling data, that sort of thing. And then after some pretty good calls in the financial crisis, we moved into money management, both as a CTA on the future side and as an RIA on the stock side. And then we also have an educational arm. We do webinars like this, and we also have a mentoring department. I'll come back to this later, but I just want to point out that the PDFs will be emailed to you. That once you've signed up for this, they'll be coming, I guess, or a link to the PDFs will be emailed to you. All right, so let's get started. This is one of those few times, it doesn't happen too often, where to me the chart of the S&P is sort of leaning the opposite way of most of the other indicators. And in the long run, usually the chart of the S&P wins out. So that's why it's our first and foremost indicator. I'll expand on that as we go along. We're going to look at the equity only put call ratios. We're going to look at market breadth. And then we're going to take a look at VIX and the volatility derivatives and some other things involving realized and historic volatility versus implied volatility. I have a couple of corollaries that are very important in the market. First is oversold does not mean buy. So, this market got oversold really at the end of March and went down a lot before it was really a buy. So an oversold market can continue to decline. And in a similar way, overbought does not mean sell. So we're already seeing some overbought conditions, especially in breadth. But the market has continued to go higher. These overbought conditions started to appear really a week or so ago. So again, we wait for confirmed signals. So we don't really pick the exact top or bottom with an attitude like this, but I'll feel much more confident that we actually have a confirmed signal rather than just taking a wild guess on an oversold or overbought condition. So here's the 2-year chart of the S&P. I guess the real bottom was over here at the October 22 lows, but it's more or less along this same trend line. You can see we came down and almost touched that trend line. Last year we had a 10% in 23 actually we had a 10% correction. Last year a 9% correction very quickly there at the beginning of August. But now this has been more severe. We actually went down 21% in a very short period of time. 37 trading days. I don't define bull or bear markets by the percentage of declines or advances, but we did go down more than 20%. So a lot of people were saying it's a bear market. When we did start to go down, we had this downtrend in place. If we connected the highs of March with the highs of February, we had a downtrend line like that. We've broken through there. So what I've done, instead of like showing that on the chart, I just put this question mark here and a downtrend line. So wherever this current rally runs out of steam and it starts to go back down again, that will still be a lower high. So a chart that has lower highs and lower lows, this one has severely lower lows like that, that's a bearish chart. And to me, the only way to really break that would actually be to go to new all-time highs. But in my opinion, if you broke above 5,800, which is this blue line right here, then this chart would at least return to a neutral state and perhaps a positive state. So as long as we're below 5,800, though, to me, this chart is still negative. You can see we're starting to run into the 200-day moving average right here, which is already sloping downwards. And you can see it retarded a rally there. And so it might be doing the same thing more or less now. It's really up there a little bit higher at 5750. If we take a look at a 1-year chart and see a couple of other things. First of all, there's several like spikes down and right back up that gave us support levels. There's one at 5,300. There's one here at 5,100. and then all the way down at the lows, which really they happen so fast that the whole area between about 48.50 and 49.50 for those 3 days was pretty scary while that was happening, but though that is a support area as well. There's a couple of gaps on the chart. Those are the circled there, and typically the bottom end of a gap can provide support. So you're talking there like 50. I think that's like 55.80, and then here 5,300. So there's a bunch of support levels on there, and obviously if we broke below 4,800, that would be extremely negative. But the market should be able to catch some support down in there, even if a bearish scenario is unfolding over time. You know, the last bear market we had was just 3 years ago in 2022, and it wasn't nearly as wildly volatile as this one. An ongoing bear market is typically not quite so crash-like, but it just trends down lower. This one was pretty crash-like, so it might actually, you know, just be a correction in the market that had to get it out of the way, and we can move to higher highs. So, you know, that's just something that's coming down the road. But for right now, this S&P chart is still negative unless we close above 5,800. Those other things there are just kind of written what I was saying in case you're looking at this later and don't remember what I said. The commentary is written there. Now, another thing we do with the S&P chart is we draw what I call modified Bollinger Bands. When John Bollinger invented Bollinger Bands, he had to come up with a definition of realized volatility. And so he used for that the standard deviation of daily closing prices. Well, that's not what the math people use. So Black-Scholes, which you know, is the Black-Scholes model, is what we use for a lot of our things. That has to correspond to implied volatility. The realized volatility in the Black-Scholes model is the standard deviation of daily percentage price change. So it's a little bit different, but that's what we use. And so when we plot this, and when the S&P moves outside of the plus or minus 4 standard deviation band, and then moves back inside, that sets up a potential for what we call a McMillan volatility band buy signal or sell signal. And so that's what we've just now had. So this is a chart going back a year or so. This is the plus 4 standard deviation band right here. Just inside is the plus 3 standard deviation band. So you can see last summer we moved outside of the 4, inside of the 3. That was the sell signal. And once we get the sell signal, we look for it to trace all the way down to the opposite low band, which it did. Came outside and inside, gave a buy signal. That buy signal actually was in place for a long, long time because we never went outside the plus 4 standard deviation band again. But we still haven't since that time. But in any case, you know, positions we put on there, we roll our positions when they get in the money. So those positions were rolled several times, and eventually we were out. So there was a buy signal early here in March, which at the time, you know, we came outside. Again, we were outside of 4 standard deviations and then moved back inside. That gave us that buy signal here, but that was canceled out when we went back below the minus 4 standard deviation. And now it's been fooling around here. And finally, we moved solidly back inside the 3 standard deviation band and got a buy signal here. So now we're on a confirmed buy signal from this indicator. Its target is, as I said, the upper band. You can see the upper band is way up here. It's 60.50, but it's also falling. The realized volatility has just now started to contract a little bit. So as realized volatility contracts, these bands will move towards the center. So that's going to pull that band down. If the market goes down, it's going to pull it down even faster. But even if if we're riding and the market moves up, this band is falling. You know, we could hit it sometime in here. I'm not really sure. So for right now, though, this buy signal is in effect. In our newsletters, we have positions based on that. So this basically just says the same thing. With that buy signal occurred just last week on May 1st. So we actually this same methodology of drawing the Bollinger Bands and modified Bollinger Bands, and then looking at moving outside of 4 standard deviations and back inside, that can be applied to any chart. So we do actually have a subscription service for that, where we look at all stocks, all futures, all ETFs, and make recommendations based on those. The recommendations are listed on our website for the subscribers, and so you don't have to just go through a million charts. It shows you which ones are giving new buy signals or new sell signals. All right, let's move on to the second indicator, which is put call ratios. This is a really important indicator, a contrary indicator. I've found it to be extremely useful in option trading over the years. Options as a contrary indicator were invented, really the put call ratios were invented as an indicator by Marty Zweig back in the 1950s, when he used to get the option volume out of the ads that ran in Barron's on Sundays, ads placed by the various put and call brokers. In any case, for in the modern sense, we use the equity only put call ratio as the put call ratio to predict the broad stock market. And I'll show why in a minute. But the theory is this: if there's too much put buying, and this is what Marty discovered, all those years ago, if there's too much put buying, eventually the market will go higher because everybody's bearish, so the market goes up. And in a similar way, if everybody's bullish, the market goes down. So quantifying what too much is really the important thing to be doing here. So let's just say, as an example, at the end of the day, we sum up the volume of all the puts traded on a particular stock. Let's say IBM. Separately, you sum up the volume of all the calls, divide the two. That's the standard put call ratio. And you can see that since puts are in the numerator of the fraction, if put buying is increasing, the ratio will go higher. If you increase the numerator of a fraction, the fraction grows in value. But when are we likely to have put buying? That's when the stock is going down. So the ratio and the stock price tend to move in opposite directions to each other. The same thing can be seen with calls. If the numerator of a fraction increases, the fraction loses value, so the ratio will go down if there's heavy call buying. But when are you likely to have heavy call buying? Well, that's when the stock is going up. So again, they move opposite to each other. We keep a moving average 21 days just in case there's something to Fibonacci. And we post over 1,600 put call ratio charts on our website every day in an area called the strategy zone, which is a pretty cheap area to, a part of our website, to a pretty cheap subscription to be able to look at these put call charts. We also include with that the computer analysis of where new put and call based buy and sell signals are taking place. So how do we get a buy and sell signal? Well, let's take a look at this theoretical example here. Now, all of our put call charts show the stock price as well as the put call ratio, because I don't think you can look at the two separately and discern anything. So in this particular case, the stock is falling. As the stock is falling, remember that puts are being bought, so that means the ratio is increasing. Eventually, you get to the point, though, where there's a local maximum in the put call ratio, and that's a buy signal for the stock. So now the stock starts to increase, move over to the left side, the stock is still increasing. And while the stock is increasing, people are buying calls. That's forcing the ratio lower and lower until eventually you get to a local minimum on the put call ratio, and that's a sell signal for the stock. So that's the theory. Sometimes it gets distorted if there's arbitrage or a few other things going on, mostly arbitrage. And, not every option trade obviously is a speculative trade. It's the speculators that push it to extreme highs or lows where we get these local minimum, local maximum. So this is not a current chart, but this on top is the S&P 500 chart, and on the bottom is the equity only put call ratio. That's all stock options that trade every day, hundreds of thousands of them, millions of them. And you can see the inverse symmetry that exists there most of the time, which is why we use the equity only put call ratio to predict this broad market. So here's where we are today. We've just had a relatively new local maximum on the chart right here, and that is a buy signal. So we have a buy signal from the standard put call ratio. The buys and sells are marked on here. You can see that this buy signal is coming at a slightly higher level than this one did or that one did. The level itself is not so important. It's the fact that we're getting a local maximum, and then the market is the ratio is trending the other way, and the stock market should be going opposite to this. Remember, they're contrary indicator. You can see there was a well-timed sell signal down here in February as well. That was the local minimum. Really, the only one on this chart that wasn't a pretty good signal is that one right there, marked in blue. So all the red letters are successfully closed out signals. The green one is open right now, and the blue one was a losing trade. Now, that was the original just using option volume, but as computers came along, we could get a little more sophisticated. So we could calculate what's called the dollar weighted put call ratio, or just the weighted put call ratio. And the way we do it is at the end of every day, we take the option price and we multiply it by the option volume that traded that day to give us the dollar volume. Now, you could do that on a tick by tick basis every trade. Really, it was not. We tried that. It was not giving us any better signals, and it was a very expensive data set to do that. So we just went back to using it this way. So we do that. We make that calculation, let's say, for every option on IBM. And then at the end of the day, we sum up the dollar volumes of all the puts, separately sum up the dollar volume of all the calls, divide the two, and now we have a dollar weighted put call ratio. So now we're measuring the dollars being spent on bearish option opinion versus the dollars being spent on bullish opinion. And so here's the current chart of that. You can see that the buys and sells are pretty much in the same place, not quite exactly. This one, for example, we had it what looked like a potential of a buy signal right in here. Oops, sorry, right here. But we have a computer analysis program that looks at these. It can do sort of like a chess playing tree. It knows what numbers are coming off from 21 days ago. It knows what numbers are coming on, because day to day the put call ratios tend to be relatively the same. And that one was touchy. So at that point in time, we were telling our customers that we wanted to see both ratios give buy signals together. And that didn't really happen until till a couple of weeks ago. So this one eventually gave a buy signal here when the ratio rolled over and headed lower, and it was confirmed by these computer analysis programs, as well as by the naked eye, obviously. So again, both of these ratios are now on buy signals, and they'll remain on buy signals until they eventually come down here and roll back over to a local minimum. So don't know where that'll happen. We'll get all the way back down to here again. I would probably suspect not, but who knows? I can't predict where these ratios are going to go. I can only interpret them as they occur. So just to summarize these ratios, we had the good sell signals in February, and now we've got buy signals. And these buy signals are coming from a pretty high point on the chart, which is usually indicative that it's coming from a very oversold point in the stock market, and therefore it should be a pretty strong signal. Here's a little history on it. So this is going back 10 years on the standard ratio, the first chart. Inside the red square there is what I showed you before. That was the 1 year ratio. And the yellow line is actually the ratio that we're discussing that I showed you before. So you see the yellow line is a little bit formed a local maximum. It's a little bit above these other two that were there. So, but you look back, you can see that there's been much higher levels of pessimism, I'm going to say. So, even the bear market in 2022 that we had that gave us these put-call ratios in this area right in here. The pandemic gave us a much higher one back in here. And so, yes, there's been some, pessimism in this market, but there's really nothing special. I mean, it's nothing to the extremes where we saw in those two markets. And it's sort of ironic to note that in 2020, after we had the heavy pessimism of the pandemic, that ratio fell all the way down here, which then was a long period, over a year, of extreme optimism. So the optimism that we just saw earlier this year was, is marked there on the right-hand side of the chart. And, that's optimism, but it's not nearly as extreme as it was there before. So I guess my point is that if we take a little bit longer look at this, this buy signal is important, but it's not at levels where the market turned around and went higher for years afterwards. So, it could be, but right now it doesn't compare to those other two. What about the weighted ratio? This weighted ratio chart goes all the way back to 1998. You can see that it hardly ever falls below 50, meaning $50 are being spent on puts for every $100 being spent on calls. That's the optimism level. So we did get down to there, and the red square again indicates the 1-year chart that I showed you earlier. So we're much higher now than we were, last year. But it was again higher at the end of the bear market, higher at the financial crisis, pandemic. It was higher, but it wasn't really as crazy high as you might expect in the pandemic. And then I don't know what was going on back there at the beginning of the chart back in 2000, 2001. That was actually a bear market was taking place pretty much all through that. But, I just have that there for completeness. So again, both these ratios are bullish. They're coming off pretty high levels of a 1-year chart, but maybe not such high levels when we look back farther. So what do we buy when we actually have these signals? We typically buy SPY options a couple of points in the money. Now, I like to buy an option when I'm predicting what the underlying is going to do. I like to buy an option with a relatively high delta, let's say a call option with a relatively high delta, if I expect the stock to go up, because I don't want to be gambling on some deeply out of the money option. I want to buy in a money option. And obviously, the higher the call's delta, the more it behaves like the underlying. So typically, we'll buy a SPY option, as I said, 1 or 2 points in the money with a delta maybe 70 or so. If we're going out a longer term, more like a put call ratio, maybe a 3 to 6 month time horizon instead of, say, 3 to 6 weeks, we might buy an at the money just to minimize the initial expense. But even an at the money call still has a delta slightly larger than a half. Now, on TV, everything they do in options seems to be a spread. And by a spread, I mean, let's say you're bullish on this stock, so you buy a call at this strike. And let's say the stock is sitting right here at this strike. But in addition, this bull spread is you sell a call at a higher strike. That should only be done cautiously or judiciously, I should say, because basically what happens is you cut off your profit potential. So cutting off your profit potential is really a rough thing to do yourself, unless you have certain criteria that are based on it. And one of those criteria, the most important one, is if the options are expensive, then a bull spread does make sense, or a bear spread if you're buying puts. But even so, the reason that typically proponents of the spread give is they say, well, you're risking less. You're not risking less. You're risking 100%. Your broker is going to ask you to pay for the bull spread in full or pay for the call in full, and therefore you're risking everything you paid, and that's 100%. So yes, dollars you're risking a little bit different, but you can always adjust dollars instead of buying, let's say, 5 calls, or say instead of buying 5 bull spreads, you buy 4 calls or something like that. But the call purchase, of course, gives you this benefit: unlimited profits to the upside in case something really big starts to happen. So the spread does harm harm your upside potential. So what can you do to minimize the negative aspects of the spread? Because when options are expensive, as they are now, spreading does make some sense. So there's two things you can do. One is to widen the difference in the two strikes. And that is for right now. So if we're buying SPY calls, I'm spreading them at 20 to 30 points wide. You know, not 5 or 10, but 20 to 30. And if you're buying puts, even wider, 40 to 50 points wide, because this put out of the money puts are more expensive in terms of implied volatility than out of the money calls. So that's the first thing you can do, is widen your strikes out. So if the thing moves up, at least you got some widening potential. It can widen out to the difference in your strikes as a maximum. Secondly, is to roll if the short strike is hit. So what do I mean by that? Well, let's say, you know, SPY is trading around 560. So let's say you want to put on a position today. So you're going to buy the at the money call, the 560 call, and then you're going to sell a call because these calls are expensive. You're going to sell one with a 25 points strike, 25 points width in the strikes of the spread. So that's fine. Let's say you're fortunate enough to see SPY rally up to 585. So now you've hit the top of the spread. So remember, the spread profit graph looked like this, and now you're up here. So yeah, there's a little profit potential left, but basically not much. You're up here at 585, and you really don't have a lot of potential left in that spread. So you're pretty much maxed out. So what you can do is sell that spread, take the profit on that first spread, and set up a new spread, again with the strikes 25 points wide, if that's still the conditions that exist at that time. And so now you've taken a profit on your first spread, and now you've widened out the upside a little bit more, up to at least 610, and do it again if you hit 610. So right now, options are pretty expensive. So if you were going to put that spread on right now, the June 560 call is trading at 18, and the June 585 call is trading at 5. So the difference is 13 points. So you're paying a 13 debit, and the most you can make is the difference in the strikes, 25. So you're paying 13 for a max of 25. That's really not that great. I mean, you normally could do better. Obviously, if you didn't cut your profit potential off by selling that other call, you could do a lot better, but that's marginal. You know, as I said, we are doing that because of the high level of VIX at the current time, but it's still not as good as this. Here's a put spread. So if you're going to do the same thing in the put spreads, remember I said you buy the at the money put and you sell 140 or 50 points lower. So this would be the typical put spread if you had a bearish attitude right now. But here now you're paying 14 for the June 560 put. You're getting 4 for the 510 put. So you're paying a 10, 14 minus 4, you're paying a 10 debit. But now your 10 could net you 50. If the market went down, it widened out, the whole spread widened out to its maximum point. So that's a lot better. I mean, 5 for 1 instead of less than 2 for 1. But this all has to do with levels of interest rates, call pricing versus put pricing, et cetera, et cetera. In any case, to complete this example, if it traded down to 510, you'd sell that spread and set up a new one with both sides 50 points lower. So in our newsletters, we do this kind of thing all the time, and if you're a subscriber, you would see how it works. But I think it works pretty well, and it gets you to taking some profits along the way. So if a big reversal happens, you only give back the price of the last roll. You don't give back everything you had along the way. Let's take a look at some individual put call ratio charts. These are ones we just recommended. Now, when I'm looking at the individual charts, I don't look at the little wiggles in the middle. So in this particular chart right here, there's a local maximum, there's a local minimum, local max. I'm not trading this. I'm only looking for the extremes. So at the time when this one occurred, it was an extreme. You can see now we've gone to an even higher extreme. But and these down here, this was an extreme for lows. So we've now just had a local maximum on the put-call ratio for Carnival Cruise, Carnival Corp. And I wanted to see it break out over this little trend line here at 19, and it did. So we just bought calls on Carnival here. You can see the last buy signal that we had on at an extreme back here on the left side of the chart was a pretty good buy signal, and you know, Markham went up nicely after that. So we'll see how this one works out. Another one, Caesars. This one has not culminated yet. In other words, we've got the local maximum, but we don't. We also have some resistance here on this stock. So I want to see it break out here. It hasn't done that yet. But that, you know, that could be coming soon. I'm not really 100% sure, you know, but right now we're setting ourselves to buy season if it breaks out over 29. That's a 29 level right there. And then third one, we just bought this one too at Raymond James. Same sort of thing, gave the local maximum and then broke out over some resistance. And so that gave us this buy signal right here. And so we're long now. You can see the last time we had a buy signal up at extreme level, that was a pretty good move in the stock. Another one, this one we've had for a couple of weeks now, Johnson Controls. You can see though that it broke through a downtrend line and now it's off to the races, at least for now. Digital Realty, this one was about a week old, but it just broke through the level that we had set to buy that. So that was a call buy there in digital realty. And then the last one, GE Healthcare Services, this broke out and kind of pulled around a little bit, pulled back to the trend line, but again moved higher. So this is a new buy signal here. If the ratio moves to a new high, and in fact, in any of these, we hold the position as long as the put-call ratio signal is still in place. So if this ratio were to move to a new high, that would cancel out that buy signal and we'd exit the position. We don't go to a stock chart usually. It's certainly not right away. Maybe later if the stock is in a big trend, we'll use a trailing stop or something like that. Now we can do this with futures too. So on this chart, the bottom, the put-call ratio here is the actual 10-year note futures options that trade on the Chicago Mercantile Exchange. So that's how we're calculating the put-call ratio. And this one is a kind of an older signal. We had a sell signal in mid-March, which for Treasury notes. Now 10-year bonds, actually 10-year notes. So you could trade the options, futures options on the Chicago Merc if you wanted, but in this case there's an ETF that simulates the 10-year note, IEF. There's others, but IEF has options, and so we bought puts on IEF. Sometimes though you can't. So this is not a real current signal, but we had a sell signal in coffee. Coffee does not have an ETF that trades. So if you wanted to trade this signal, you would actually have to trade the futures options in coffee that trade on the ICE, the Continental Exchange. Okay, well, let's move on to the third category, which is market breadth. So there's two things you can do with market breadth. You can just calculate it, it's advances minus declines. You can keep it cumulative total, or you can calculate an oscillator. So we do both, but the oscillator is pretty important to us. And when we're doing this, we keep two data sets. One is New York Stock Exchange. That's the most popular way to look at advances and declines. But there's a bunch of things on the New York Stock Exchange that are not stocks. And so we looked for a stocks only data set. And while this New York Stock Exchange does produce what they call operating companies only data, we found we had a much better data set. That's all stocks that have listed options. There's over 6,000 of them now. So it's a big, healthy, robust data set. And, it includes really everything, big caps, small caps, NASDAQ, New York, everything. So that's a pretty good data set. And we keep our oscillator based on that. So at the bottom, this chart goes back 7 years, or almost 7 years. And on the bottom is the oversold condition. So you can see that in the beginning, mostly we were in a bull market all through this period. So we didn't get oversold too much. We did here this one time right before Christmas of 2018. Sorry, that's back here. And then this was the pandemic. Then we hit the bear market. And the bear market, when that came along, now we're getting oversold conditions a lot. But then the bear market ended, we went back to getting them sporadically, but we did come down 2 weeks ago and get a very, very oversold condition in line with these past really extreme oversold. Now, remember I said earlier that oversold does not mean buy. So we don't buy that because I don't know how much lower it could go. We really essentially wait for it to stop being oversold before we buy. So in this particular case, it stopped being oversold right here on the right-hand side on April 23rd. So this gave us a buy signal from our breadth oscillators on April 23rd. And now you can see we moved all the way up here into overbought territory. But again, overbought does not mean sell. So it's healthy actually for a market that's breaking out or say just forming a bottom or that sort of thing. It's healthy for it to get overbought. So here we have an overbought condition. If we fall back and we're no longer overbought, then that would be a sell signal. But right now, these breadth oscillators, both the New York Stock Exchange one and the one based on stocks only, they're both on buy signals right now. And these are pretty short-term indicators, so they can reverse quickly or even whipsaw. This one didn't whipsaw, it kept on going, so it's been a good signal. And we're just paying attention right now. It's overbought, and when it eventually gives a sell signal, we'll exit these positions and probably take on bearish ones. So there's another thing you can do with breadth. We do this with volume. Breadth, volume and breadth means volume on advancing issues minus volume on declining issues. We keep a running total of that every day. It turns out that this cumulative volume breadth has a really good track record for if it moves to a new all-time high, then pretty soon right after that, the S&P will do the same. So it has not done that yet. But if this rally were to continue for another week or so, we might have a chance that this cumulative volume breadth would make a new all-time high because there's been a lot of volume on the upside issues in the last couple of weeks, in which case that would be a very bullish sign for the market. But that has not happened yet. It's also useful as a negative divergence right before bear markets start. We did not get that in February. And that's not to say we're not in a bear market. Not every bear market has that divergence. The one in 2022 did have that divergence. So the fact that we didn't have the divergence is just a fact. It's not necessarily saying that we're still in a bull market or something like that. We also look at new highs versus new lows. This is an indicator that has, it trades in an intermediate sort of process. You can see the various ones here. And the most recent one we had was a sell signal on March 31st. We use the New York Stock Exchange data. So that's this data right here. We had new lows were more than 100 for 2 days in a row. That gave us a sell signal. Eventually we went down here. On these 2 days, there were more new highs than new lows. Both had dwindled down to almost nothing. But the second one of those in a row stops it out. So that stopped out the signal. But that was about 250 points on the S&P right there. So this is something we follow. Right now, this indicator has no signal going. We're waiting for there to be at least 100 advances for 2 days in a row or 100 100 new highs for 2 days in a row or 100 new lows for 2 days in a row. Right now, we're just sort of bumping along at relatively low levels for both new highs and new lows. Really, and that makes sense. We're a long ways from new highs on the market, and we're really a long ways from those lows of a month ago. So we'll spend the rest of the time talking about VIX and the volatility indicators. These are normally quite important. They're really important in a market like this. So there's two things about VIX that are, important. One is the trend of VIX. VIX should be trending opposite to the way the stock market trends. And two is spike peaks in VIX or buy signals. Usually people panic and they force VIX up to a spike and it falls right back down and the market recovers. So this is the current 1 year chart. The thing that of course stands right out is this big spike peak we had last August, and then the one we just had here in the beginning of April. So that gave us a buy signal on April 7th right there. That buy signal was pretty well timed, April 7th. And this buy signal back here was in early August. I can't remember exactly which day, I think like the 6th or something. But you can see the others came at lower levels. Now we have a system that's based on this spike peaks. It's a very well-defined system. We explain it in our newsletters. And so we had all of those buy signals there. Every one of those Bs was a buy signal. The blue ones didn't work out, but the red ones did. And we obviously have the one green one going right now, which is way ahead. What we do, as with any of our other positions, we roll the options up when the calls get deeply in the money. So if we do reverse from here, that would still be a buy signal. But remember I said the other thing that we look for on the VIX chart is the trend of VIX. And so the way we define a trend in VIX is if VIX, let's say in this case, is greater than its 200-day moving average, and the 20-day moving average of VIX is also greater than the 200-day moving average. That defines an uptrend. So that took place here, right there in February. VIX was already above the 200-day. This is the 200-day right here. VIX is already above the 200-day, and that was the day the 20-day crossed above. And so that set off a sell signal. So that was in well-timed sell signal in late February. It's still in effect because both of those conditions still exist. Even though VIX has come down a lot, it's still not all the way back down to its 200-day moving average. So this is a classic example of why, we had put spreads on, we rolled them down as the market fell, and now the market's rallied back, and the last put spread we bought is basically worthless. But we took a lot of profits out along the way, so I'm not too worried about that. Technically, both of these signals are still in place at this time. They have different stops. And by the way, the spike peak buy signals only last for 22 trading days. So 22 trading days ends this Thursday based on that that April 7th buy signal. So this buy signal is just about to expire. And again, it's a system, a trading system we have. So the 22 days is based on back testing the system and looking for optimal exit points and that sort of thing. So we might still retain a position, but technically the actual system signal will be expiring this coming Thursday. So this all just says the same stuff I was just saying. But, since both of these signals are kind of opposite to each other, they both have different exit points and entry points. So they can exist, they can coexist. It's not optimal, but it does happen and, can work out. In this case, both of those have been profitable signals. So you can't trade VIX though. So you have to trade. In those cases, we're looking at the broader market. But if you want to trade volatility, you have to trade VIX futures or VIX options. So that's fine. VIX futures were listed in like 2004, and VIX futures options or VIX options were listed in 2006. Now, VIX options are options on the futures, even though it doesn't say that. It says they settle to the price of VIX. Well, they do, yes, but as they trade along, they trade off based off the futures. So one of the things we look at, very importantly, is the term structure of the futures. In other words, how do the prices line up? So here's, let's say, currently your May futures, and then your June futures, and your October futures, etc. And so in a normal market, the prices slope upwards like this out to a point in time, say 3 years out or whatever, where the average implied volatility is. So these are implied volatilities, but in a bull market, that's always the case. The longer term futures are more expensive than the near term futures, and that's just the way things are. And by the way, they all, in those cases, they trade at a premium to VIX as well. But occasionally this happens and they invert. And so the near term futures become the most expensive ones and the prices slope on down. And again, this one is about the same as the other chart, but the others are, of course, higher. And so this has only happened meaningfully about 3 times. The first was the financial crisis in 2008. The second was the pandemic in 2020, and the third was right now, the last month. So it happens, briefly in other crash type things, like last August when the market had that sharp spike downwards and VIX spiked up towards 70 and back down again. We had a slight inversion in the term structure. This is what we call an inversion in the term structure. And by the way, when this is happening, these are all trading at a discount to VIX. VIX itself is usually up here somewhere. So where do we stand right now? So I took these prices at noon today. VIX was trading just about 23, and you can see that these all slope slightly downwards except for the last one, and they're all slightly negative. So we take the price of the May futures here, 22.68, subtract off the price of VIX, you get minus 31 cents. So they're trading at a discount. So it's slightly sloping downwards and they're on a discount. So that's mildly negative. 2 weeks ago it was hugely negative. There was a lot of really crazy stuff going on. But right now it's just modestly negative. And in fact, I'll just look at where we closed today, see if there's any difference. Yeah, it's pretty much the same. Looks pretty much the same on the close. Now, you may not, if you could go to the CBOE's website, actually CBOE Futures website, which is the CFE, and look at the prices delayed, or you can just look at the CBOE volatility index prices. The CBOE publishes 6 volatility indices that have a 1-day index, which is mostly useful if you're trading the 0-day expiration options. Then there's a 9-day index, which is very sensitive to economic news items coming up or what have you. Then VIX is a 30-day, then a 3-month, a 6-month, and a 1-year. Now these, if we look at them, you can see, forget that one is sort of on its own, but you can see these are sloping upwards. So that's more bullish, except for this last one. But that's more bullish. And in particular, VIX itself is trading below the 3-month VIX. That's pretty bullish too. It was inverted, and that we had a short-term oversold buy signal for the market for a week. That expired, I believe, last Friday. So, but we do have trading systems based on these as well. So overall, I would still say this what we call the construct is still not bullish. We need to see both of those sets of data sloping upwards and then have trading at a premium to VIX. We're definitely watching the front 2 months. So right now, May was trading at 22.68. June was a little lower. So I classified it as kind of a nervous market. Typically, June would be like a point higher than May, and that would be a bullish market. So you will see. But this inversion has persisted for a while. And, so the volatility aspect of the market, the volatility traders, let's say, are not ready to sign off on the fact that it's a bull market yet. There's a trade that we use when we get that big inversion, and simply stated, when there is a large discount in the VIX futures, and this last month they got, I think the April futures were trading at like an 8-point discount to VIX. I mean, they might have been, let's say, 32 and VIX was 40. So when that happens, you can buy 3 slightly in the money VIX calls and buy 1 slightly in the money SPY call. And that's sort of like owning a straddle on the market, because if one of those goes up, VIX, let's say, goes up, SPY will go down, or vice versa. And then you roll it if things get in the money. So we had a nice profit on that in April. In the financial crisis of 2008 and in the pandemic, we like made a lot of money with that strategy, but most of the time it's not in play. There's another thing that I've noticed. We had like recently 3 90% days. 90% day means there's either 9 times as many advances as declines or 9 times as many declines as advances. I don't care which way it is. That's a 90% day. When we start to get a lot of these, that's indicative of the fact that market's volatile and a little bit crazy, and crazy is not good. So this is a chart of where things went in other severe crash market kind of things, financial crisis, pandemic, the 2022 bear market, the thing there in 2012, that was a kind of severe sell-off we had and kind of a surprise thing. In any case, right now we've been sitting here doing nothing with this indicator. It's been 0 or 1 or 2 for a long time, but just now we've had 3. So I put a dot here. So is this thing heading this way? Is it heading higher? I mean, it's something we're going to keep an eye on. If we get to 4, then I'm saying that there's definitely signs to be cautious. But if it went to 3 and then back down to 2 or 1, then it was just nothing. So we'll keep an eye on it, but it's just that kind of an indicator. So where does this all stand? Well, if we look at what's bullish, we know that VIX spike peak buy signal is still in place, so that's bullish. I showed you early on, we had a McMillan volatility band buy signal. The Breadth oscillators are on buy signals, and the equity-only put-call ratios are on buy signals. So those 4 things are all solidly bullish. New highs versus new lows, that's no signal in that at all right now, so that's neutral. The construct is the thing we just looked at, so that's still, as I said, a little bit worrisome, but it's improving. So I put it here with a left arrow indicating that it's moving that way, moving towards the bullish side. But the trend of VIX is still bearish, even though it gave that signal quite some time ago. And most importantly, and this is what I sort of started with tonight, the chart of the S&P is still bearish, in my opinion, unless we're above 5,800. So we're maintaining a slightly out of the money, low delta core bearish position. We traded all these other signals around it. We trade all of these signals in the daily volume alerts newsletter, which comes out every day by its name. We trade most of them in the option strategy newsletter, which comes out once a week. So some of them are more timely. We just can't really trade them, midweek. And we will roll our options when they get 8 or more points in the money in SPY, sometimes 10. But we obviously like to take those partial profits. So I mentioned that we have this special. So for right now, we're offering our top 3 newsletters, a month of each, for $99. That's typically over a $700 value. And to subscribe to that offer, you just go to this website, optionstrategist.com/MetaStock. We will be emailing you the PDF of this, and I believe also a link to the recording of this. And our 3 newsletters are these: the daily volume alerts, which I write personally, the daily strategist, which comes out twice a day, which encompasses really pretty much everything that's going on, and then the option strategist, which is our monthly newsletter, which is its 34th year of publication. We have track records of these up on the website. Obviously, past performance, no guarantee of future results, but we've had a pretty good success rate with these trading systems I've talked about specifically. And just one other thing, we just wrote an article in the most recent option strategist newsletter, because what's happened is, as the market has lurched upwards like this, realized volatility is still staying high. It's realized volatility right now, we call the 20-day historic volatility of the S&P 500 is about 50% right now. that's calculated, again, the standard deviation of daily percentage price changes, as we talked about before. VIX was running around 24. So the difference here is minus 26. We'll go VIX minus the HV20 is minus 26. So that's right here, minus 26. And you can see on that chart, we haven't been at minus 26 too many times since 2008. In fact, the article takes it all the way back to 1997. What's been the outcome of these is that eventually those are all good buy points when the market reverses. So we're not trying to jump in and buy minus 26. We wait for it to get back to, let's say, minus 10, and then buy. So, for example, this is the most recent one right after the pandemic. The maximum differential in the pandemic, I'll just go back it up here. You can see in the pandemic, it got all the way down to minus 50 something down here. But it didn't give the buy signal until a couple of weeks later. But the buy signal came in right there when the differential got back to 10, and you can see that was obviously a very good buy signal for the market. The one prior to that was the one that took place right after the December massacre in 2018. The max differential, again, the differential increases when the market rallies because VIX is dropping. But if the market's rallying in a kind of crazy fashion, the historical volatility stays high. That one gave a buy signal pretty quickly after that maximum differential was reached. And again, the first part of 2019, well, really, I think all of 2019 was a pretty good bull market, but certainly that right after that was a buy signal as well. So we're waiting on this. Hasn't happened yet. Just a couple other things. We have a YouTube channel. I invite you to visit that. I do a recorded market commentary once a week. And then we have a couple of other newsletters too, which are not included in the offer of 3 of our top newsletters for $99 a month each. And you don't have to take them all at once. That would be overwhelming. So you can take them consecutively and space them out, see which one you like, if any. That's our contact information. If you're interested in our money management, this bottom URL here is one to go to. Our minimum account size for a money management is $100,000. So, Jeff, I don't know, we have questions. I'm going to shoot it back to you. I think we're just 1 minute before.
Yeah, no, we're fine. William wants to know if you feel like it's too late to buy VIX as a hedge.
I'm sorry, what?
William would like to know, he has a question, Is it too late to buy VIX hedges?
Too late to buy VIX hedges? That's a good question. I would say, they're expensive now. VIX, in fact, VIX has been a relatively poor hedge for most of the time until like last month. So I would say at this point in time, you get more value out of buying an S&P put spread, or that one chart I showed you were getting a lot of bang for your buck because that out of the money put is so expensive that you're selling against the top. So if you were to buy, I would say right now buying S&P or SPY bear spreads as a hedge is probably better than buying VIX calls. VIX calls are just really expensive right now, and I don't know if you're going to get another spike like that. I think if the market turns into a bear market, I don't think it's a crashing bear market. I think it's a trending bear market.
Gotcha. Okay, very cool. That was the only question we had.
Okay.
I want to say thank you.
All right. Thanks for having, as always.
Okay. Yeah, of course. Always a pleasure to have you, Larry. Always love having you here. So thanks for coming in.
Okay. You're welcome. See you.
All right. Bye. Okay, let's go ahead and kind of get things moved a little bit here. Go ahead and make me the presenter. Okay, and we'll go ahead and show my screen. And we're going to have just a second more. So I want to kind of, as we get into the final speaker, I want to kind of, let's go ahead and talk about the presenters, or the or the sponsors. I'm gonna go ahead and turn on my camera as well. So you should be able to see my screen. You should be able to see me. I do want to say thank you to all of our sponsors. We're going to spend a second doing that right now. I want to say thank you to Stocks and Commodities Magazine. Stocks and Commodities Magazine has been a great sponsor of the event that we do. They've supported all of them since we started it, but it's a great magazine. They've been publishing articles since 1982. If you have a subscription, you get all of their articles. They have over 17,000 articles in archive. www.traders.com. Thanks for the support. Want to kind of mention our community, great growing community of people that are talking about the markets and sharing ideas, tons of analysis. If you want to learn it about technical analysis, you can go there, can chat with other traders. www.thetradersforum.com. Michael says Stocks and Commodities is a great reference. It is. It's a really, really good magazine. The CMT Association as well, since we're talking about all the sponsors. I do have their sites somewhere. I thought we'd actually kind of, here it is. Let's go here. CMT Association has been a sponsor of the events that we do. Very well respected, well reputed organization. You can find out more about them at cmtassociation.org. You can also give them a call at 646-652-3300. So I want to say thank you to all of the sponsors that we've had. Thank you for the help that you do. Thanks for being great partners as well. Greg, it is time for a MetaStock giveaway. Are you ready?
I am.
It's prize time. So I just pulled a list. It's fresh. I got. If you've registered, if you're watching us on YouTube right now and you haven't registered yet, you'll want to go ahead and register, because every time we break between speakers, we usually give away a prize, unless I forget or we're running really, really behind. But we'll definitely want you to kind of come up here and register so you can qualify for a prize. And we're going to give away one right now. Let me just look into our prize bag. I'm going to call it a bag. It's actually just a list. And the last one, okay. So Rahul, Aurora came in a little bit earlier from TradeWinds. Actually, no, it was Blade Markham came in from TradeWinds. And one of the services that they offer is a weekly stocks and options alert service. It's Chuck Hughes' flagship newsletter. Each week on Sunday, you're going to get a newsletter. The value of that newsletter is $588. And Greg, we're going to have you pick a random number. Let me go ahead and come in here. And I need a number anywhere between 1 and 4,737.
4737. Okay, according to Google random number generator, that would be 3332. 3,332.
You know, I know that the reason that you like to use a Google number generator is because people have a hard time kind of picking random numbers.
Yes.
So do computers, it turns out.
Oh, I did not know that. All I know is that if that had been 3,333, I would not have believed
that it was random.
Yeah. But since it's 3332, I believe.
So the winner of that prize is from Australia, Ross M, with a MTSWA email address. If that's you, you know it's you.
Congratulations.
Yeah. You can go ahead and make a note of that. Any of the specials for MetaStock, MetaStock's been rated the #1 software in its price category 32 years in a row. We've talked about a number of products that we offer. You can get all of them at metastock.com/conf-promo. You can call us if you have questions, 800-882-3040 or metastock.com/SalesChat. Again, if you're in YouTube, click on the highlighted link at the top. I can't remember I guess it is a highlighted link, right, Greg?
It's called a pinned
comment. Yeah, I can remember pinned. The pinned comment at the top will take you to the registration page. We're going to move on to our last speaker of the day, our final speaker of the day, Mark Sebastian from Option Pit. Mark has spoke for us a number of times. I've got a picture of him right here. Isn't he handsome? Yeah, he used to be a member of the CBOE. I've gotten a little bit of information. He's going to be talking about the mega cap Clout, but he's a founder and CEO of Option Pit, a Chicago-based option trading education firm, a former member of the Chicago Board of Options Exchange and the American Stock Exchange. He is also the founder and the CIO of the Carmen Line Volatility Arbitrage Fund. Great speaker. We're gonna go ahead and have him get started. Mark, how you doing?
I'm doing great. How are you?
Good. It's good to see you here. I'm gonna go ahead and
I'm
make
getting some funk from being able to share my screen. Oh, there we go. Now I'm able to.
Yeah, I have to send it to you, and I can see your screen.
Oh, you can? Which screen am I sharing?
I can see the CBO live vol screen. Is that the one you
Okay,
mean?
that's the one. Yeah, that'll
Okay.
work. Let's see if I can get the camera started. I don't know
Yeah.
why the camera doesn't want to start. That's a little strange. Oh well.
I
People
can
don't
send
need to see my ugly mug anyway.
Oh no, I disagree. It's better than mine. But
here we
it's
go.
not required at all. William says
it's-
Mark is your only option. Currently,
Yes, everyone
he's a
loves
fan.
that. Yes, your only option. All right, Jeff, thanks for having me. I'm really happy to be here.
Good to have you.
Obviously, we're not getting the webcam going for some reason. Let's see if this works. No, that's weird. I don't know.
You could try the trick of unplugging the webcam and plugging it back in. Sometimes that's the trick that works. If you have an external.
I mean, it's so like a full-on like camera setup here.
Oh, okay.
So I think that's where we're hitting issues. All right, it's no big deal, right? People don't really care to look at me; they want to hear what I have to say.
I wanted to look at you, but it's no big deal. We'll go ahead and
All
let
right.
you
Well,
get
thank
going.
you. All right. Good afternoon, everybody. Good to be here. Thanks again to MetaStock for hosting. Great stuff they do. You know, one of these days, Jeff, you and I are gonna put something spectacular out there. And actually, I may finally have something for you. We'll talk next time. We'll talk soon. So today, what I want to do, we're in the midst of earnings season, and a lot of people, you know, as an option trader, people get real interested in options around earnings, and the reason is twofold. One, they're a great way to kind of make a play on a stock having great earnings, or maybe a stock having bad earnings, and two, people really like the leverage involved, and then they also it's a good way to make a bet without having to put so much money out there like you have to with a stock. And with us being in the midst of earnings season, I'm going to explain to you over the course of, and I'm not going to use too much of our time, over the course of the next half hour, because it's the end of the day. You people don't want to be here till 8:30 at night. Over the next half hour, I'm going to show you the 3 indicators I use on trading earnings. And what I'm going to tell you is, one, I almost never actually trade earnings themselves. That doesn't mean I don't pay attention to earnings. That doesn't mean I don't use earnings to create a trade. But I almost never trade earnings themselves. Why? Because earnings are a coin flip. And what do I mean by that? Take a look at Palantir. They reported phenomenal earnings. They raised guidance. It's down 10%. 9%, excuse me, down $11. Doesn't make sense with the narrative, right? All right. And we're going to be talking about, okay, why do I not want to be involved in this? All right. And that's because it's a coin flip. As an option trader, as a professional option trader, I don't like to take chances. I like to have the odds on my side. Trading in front of earnings and trading after earnings, and especially after earnings, can really allow me to get an edge. I'm going to show you the 3 things I look for after earnings that you can add to your trading today. All right, so the very first thing I do, so I want to kind of talk about some earnings that have already passed. So the very first thing I do as we're heading into earnings season is I start examining how much movement is the market expecting out of these earnings. There's a couple of ways to do it, but a simple way is to go to a name like Palantir, look at its weekly options, and figure out kind of what the market was pricing in there. Palantir for Friday, they were pricing about $18 of movement. Now there's still a few days after earnings, but the bulk of it is coming out of kind of the earnings expectations. All right, now, once I've got an idea of how earnings were expected to move, right? So I'm tracking this. I want to know, historically, was this cheap or expensive? And we can go back and look at the history of earnings expectations as option traders. And historically, you know, the market was pricing at about 13%, and historically they're pricing about 12.8. As it stands, it's moving about 9. So it's moving kind of within expectations. The expectations weren't abnormally high. This is a perfectly normal earnings. So that's important. Step number 1, you want to figure out that whether this is a normal earnings, meaning the move expectation of about 13% is in line with historically, which was about 13%. And it's not moving $100, $200 instead of those $18. It's moving 11. It's kind of what we expect. Step 1. Step 2, and this is important, what are option prices doing post earnings? So now I'm going to show you Google. This red line represents how expensive options are. Here's where when Google reported, notice way above any option price outside of this recent little blow up than at any point. Now, after that comes out, I want to see option prices tank. So notice in one day we went from 43 down to 31. And then after that, we want to see the prices continue to fall. I want to see prices continue to fall. They will fall and fall and fall until they hit a level that is kind of oversold. Typically post earnings, traders come in, they sell options, sell options, sell options, and eventually these options get oversold. It takes typically about a week to 10 days. Calendar days, let me be clear. It's a pattern we see over and over again. Here was the last earnings in Feb. Look, drops, continues to drop, continues to drop. About 10 days later, hits a bottom, and you're never, this was a great time to buy options. This is a pattern that develops after a normal earnings every single time among major companies. All right, now, how do I know when option prices are oversold? I'm going to tell you. All right, I know we told you there'd be no math on this test, but there is, just a little bit. And I will write this formula for you. You can go into MetaStock and find a number called average true range. average true range. And what that tells you is how much is the stock actually moving. You can also pull up something called historical volatility. It's another way of looking at it, but I like looking at average true range. And on Monday, the average true range for Google was $4.61. Now I'm going to write this down for you, so follow along, but it's really easy. All right. I divide 4.63 by the stock price. All right, and then I divide by, oh, excuse me, I multiply times 16. So Google is moving, and this is a percent. Google is moving at a 45% option, at a 45 option price, and they're charging me a 27 option price. Let me write this down for you guys. I love, my favorite thing to do is paint. And it's really easy. It's ATR, which stands for average true range. Write that down. Average true range divided by the stock price. Times 16. Technically, it's 15.87, but 16 is close enough. And that is our movement price. All right, so take a picture, do what you need to do. And for those asking, I use a 10-day. All right, so option prices have collapsed. We had a normal earnings out of Google, and it's moving more than the options cost. All right, I'm ready to make a trade. But which direction is Google going to be moving? This is where the rubber meets the road. All right, I just told you all the steps you need to determine whether you want to buy options after earnings, but you need to know the direction. How do you figure out direction? The answer is money flow. I want to see large block bullish trades, meaning trades betting on Google going up from institutional buyers. Why? Institutional buyers are smarter. Institutional buyers have 100 people working for them to decide what to do on a trade. And institutional buyers are, they tend to dictate things. So what are we seeing on a day like today? This is a trade I ignore. This is hard to explain, but they bought, put, sold, call, but it's actually a bull trade. And I can explain this. I would, that is its own class. We have a buyer of, and here, I'll take a picture of this so it's easier to see. All right. And let me resize that so it's easier for you guys to see. That's it. Everyone can read that, right? So this trade is called a combo. We're going to ignore that one. And the way I can tell what the trade is and what are connected is because I'm looking at the time they traded. Look, these times are the same. These times are the same, same, same. And then you have just a kind of a naked spread, a naked call buy. So this trade is bullish, sneaky bullish. And this trade is, oh, you know what? It was kind of a fun little risk reversal trade. So you've got a bullish trade done between these two and another bull trade here, and then an outright call buy. So on Monday, traders were positioning themselves bullish. And now I know kind of what I want to do. All right, so we know, all right, Google made a normal earnings move. We've seen the volatility crater. We've seen movement exceed the cost of options. And we've seen how that paper, you know, those large block orders from professional customers are all leaning for Google to go up. Now we follow this order flow for a couple of days. We've been following it. They were bullish on Friday, bullish today. They're bullish tomorrow. Then I know it's time for me to go long, especially if the volatility, the option prices hit that low level that they're hitting. So that is how I structure an earnings play and how I do it. Now, do you guys have any questions about kind of this walkthrough process? Right? All right, remember, 1, normal post-earnings move. 2, low option prices. All right. And then 3, high movement. All right, now I have been doing this post-earnings trading for some time. This is something that with training, you will never want to actually trade through an earnings again. You will just be looking for the opportunity to post earnings buy options because this is so much more reliable. We have the statistics in our favor. This is how you are supposed to trade as a professional or budding professional option trader. All right. And if you are interested in joining me, I run a daily trading service called Delta Strike. You can join me for a week for $19. And I would love to have you there. So if you thought what I had to say today was intriguing, feel free to join me. And I would love to have you. You meet with me daily. We go through that order flow that I did. We break down post-earnings plays along with other big plays. Again, I would love to have you join me in Delta Strike. All right. Is the 10-day ATR based on calendar or trading days? ATR uses trading days. All right. And I would love to have you guys join me. Any other questions for me? Told you I was going to make this painless. I was going to teach you a lesson and then let you go spend time with your family.
It was very, very straightforward. I don't see any questions on the chat either.
Awesome.
Or on the YouTube chat anyway.
Yeah. Why is Mark such a big fan of Olive Garden? Oh, that's not funny, Mr. Adams.
It's the unlimited breadsticks, of course.
Oh, yeah. But the breads, listen, there's nothing special about Olive Garden breadsticks. I could, if I went into my kitchen, pulled out a piece of, a $1.59 loaf of sandwich bread, put a piece of bread in the toaster and buttered it and gave it to you, you would look at me and say, Mark, this is delicious. All bread is good. That's the thing people don't realize. Bread is always good.
Yeah, especially when it's unlimited though.
Yeah, exactly.
All right.
All right, Jeff, thank you so much for having me. I really appreciate the time. And
yeah, of course. Thanks
I look forward to watching all the other speakers tomorrow.
All right. Good to have you. Thank you very much.
Thank you.
All right. Let's go ahead and wrap this up. Thank you, Mark. I'm going to go ahead and make this take over the presentation right here. Make myself the presenter. Show my screen. Want to very quickly say thank you to all of our sponsors. Thank you, CMT Association, Stocks and Commodities Magazine, the Traders Forum. You can join the Traders Forum for free. You could do it right now. www.thetradersforum.com. Of course, we are MetaStock. You can all the offers. We talked about Copilot, a brand new add-on that came out today. Velocity that's coming out pretty soon. We talked about 3S Code. Talked about a lot of really good, very popular add-ons. Talked about MetaStock, the fact that it's been rated #1 for 31 years in a row. You can get questions answered if you call us at 800-882-3040. You go to metastock.com/conf-promo, metastock.com/sales-chat. I was looking at our lineup for tomorrow. We're going to start with Rahul Mohindar, and we've got a great lineup all day long. So we've got another full day of people talking about the markets, technical analysis, all that kind of stuff. So I hope to see you there. Thanks for being here today. It's good to see you. We'll see you again tomorrow. Thanks, everybody.